On the markets, tech, crypto, and her outlook for 2026. Kathy Wood is here, ARK Invest CEO and CIO. 2025 was quite a year, both up and down and back again to some degree. When you look at some of the big holdings that you have, whether it be Tesla, maybe we get into crypto and everything else, where do you think things are headed? And to the extent that there were things that you were
Good morning,
frankly,
everyone.
In 25,
this is BESTSPY live trading.
What was the lesson?
Today is
Sure.
January
great to see you.
16th,
Happy New Year,
2026.
Andrew,
What we will do on this live
Becky,
stream is best
and
analyze the
Joe.
intraday stock market using cyclical
yes,
analysis, time
last year,
confirmation, and more to find the real direction,
in the
trend direction.
rankings, I think we had
925 on the board.
3 of the top 5, or 4 of the top 5 were ARK funds, top performing. Of course, we had 2 big corrections. We had the trade turmoil in April. That was an amazing buying opportunity. And what we do typically is concentrate towards our highest conviction names when we have an opportunity like that. We did that. Same with the government shutdown. That
Stock
was
futures rise as Wall Street tries to end the week on a strong
severe.
note.
What did we learn? Well, one of the things that we've learned over the last few years is we can see inflation coming down clearly, but in the reported numbers, it is stuck. And I think a lot of people are wondering, wait a minute, this market is near record high valuations. How can this be? This is a setup for a correction. And we're looking at other periods in history. If you look into the 90s up to 97, I think it was, and in the 2000s, the early 2000s, we had very strong markets as the multiple moved down. So what does last year teach us? We must assume that valuations are going to compress, and we do. We do that in our bottom-up analysis for every company. But we're pretty excited about the inflation outlook thanks to oil prices, housing prices big time. You see the home builders, KB Home, cutting its prices by 7%. And others following, and productivity gains, unit labor costs coming down dramatically. I think on a year-over-year basis, they're up 1.2%, but the last quarter reported they were actually negative. So there are a lot of deflationary pressures, and the last one I'll cite is technology. Our focus is exclusively on technologically enabled innovation. And in each of the 5 major platforms, robotics, energy storage, artificial intelligence, especially blockchain technology and multi-omic sequencing, healthcare, I saw the CEO of Bio, very good. Those are all very deflationary in their impact. So pretty excited. We think these prices are going to be on the low side of inflation.
Quick legal disclaimer. Please consult your personal financial advisor before you make any decisions regarding your personal financial situation. I am a financial advisor, and I do not recommend that you buy or sell any securities or investments.
About autonomy. There's a lot of excitement about
educational purposes
the
only.
Optimus robot. What is your sense of where things stand at Tesla right now?
Yes, the EV sales environment has been challenged, but the market is shifting its focus to the robotaxi opportunity. So we're moving from 15% gross margins in autos, the hardware, to more of a SaaS model where robotaxis, recurring revenue model, is those margins are more in the 70s and 80s. And I think as analysts understand that that's where Tesla's going, and they start building in the model for robotaxis, they see a tremendous opportunity. So it's been interesting to me to see upgrades, even by some auto analysts, now that they're beginning to understand that this is not an auto company. Maybe they're working with their tech analysts and understanding the stock a bit better.
So when you think, though, about autonomous robotaxis, and you think about robots.
Beautiful morning, everyone.
What does that look like? And is there an argument? Look, some of the critics would say, cars aren't working the way they're supposed to be working right now in terms of what's happening with the EV market, and some of these other ambitious efforts are going to take a long time to get to. Good morning,
Varun. Good morning, Good morning, Alfonso. Good morning, Edison. Good morning, Shakima.
Well, we're keeping an eye on how quickly Tesla's footprint is expanding here. And it's expanding a lot faster, I think, than many people expected. And it's interesting to watch Waymo as well.
Harry.
We draw in Texas. We draw the footprint, and they're competing with each other. Competition is a good thing. So I think this is actually going to happen faster than most analysts think. In terms of the proliferation of robotaxis, especially if we get more federal legislation instead of just state by state. On the Optimus robot side, there's a lot of excitement in robotics. That in the private markets has been a huge space this past year. We look at an Optimus robot. Our chief futurist,
we're now in the purple boxing yesterday.
Working with Sam and Daniel, have concluded that an Optimus robot is going to be 200,000 times more difficult to get working correctly relative to a robotaxi. So you'll have waves of Optimus improving with time, but full human is going to be quite difficult. Nonetheless, the robots that we're seeing, pick and pack and lifting things, they're starting to make waves.
Should we talk about Bitcoin? Well, we can talk about SpaceX. I mean, that's going to probably go public this year. What do you think it's going to go public at?
Well, this next round is about $800 billion, so a near doubling. And we wouldn't be surprised to see it become the first $1 trillion company. And especially now that there's a new opportunity, data centers in space, to avoid all of the not in my backyard obstacles that Tesla and others are facing. So we're starting to do the modeling work on that.
Yeah. I'm removing all small traders talking big crazy with their small accounts about, oh, look at this overnight. Look, now I'm going to speculate and do the other. I don't give a fuck. They're getting deleted. So.
Welcome back. Time now for the word on Wall Street. Top investors watching your money. Joining me now is MJP Wealth Advisors President Brian Vendig. Also with us is Harris Financial Group Managing Partner Jamie Cox. Gentlemen, great to see you both. Thank you so much for being here. Brian, I want to kick things off with you with the market that has a firmer tone once again this morning. And once again, we're looking at the leadership within tech and financials.
The
Dow Industrials right now up just 10 points. But look at the NASDAQ. It's up 133 right now, 0.5%. After all three major indices ended higher yesterday, once again, driven by chip companies and the banks. Chip stocks rallying after Taiwan Semiconductor smashed forecasts with an increase in fourth quarter profits of 35%, signaling renewed confidence in AI-driven demand. The U.S. and Taiwan also announcing a new trade deal. Taiwanese chip makers will be investing at least $250 billion into the United States to expand production in America, including potential new facilities. In exchange, the U.S. is lowering its reciprocal tariffs on Taiwan to 15%, while incentivizing more chip manufacturing on American soil. Brian, your thoughts on this, the trade deal, as well as this strong demand for AI continuing?
Yes, good morning, Maria. I think this year in 2026, we're still going to see a renewed outlook for AI innovation over time. Obviously, since the end of October, definitely a little bit of a pause, but Taiwan Semiconductor's earnings this week was a great signal that demand is still there throughout the supply chain. And this trade deal helps to, I think, assure that the supply chain is secure from a global perspective with more renewed investment in the United States and obviously trying to create an equitable trade deal to preserve these assets. Now, moving forward, I think you look at the breadth of earnings for the year. Expectations are 15% growth year
Why
over
would
year
I
for the
be
full
fucking
year
bear bias
2026.
right here? Why would I be bull bias just because the market
strong.
went up? You know what I'm saying? I saw a message earlier in the morning saying, oh, market went up. Now I'm going to go reversal at market open. Like, what the fuck? You know what I'm saying? Like, that's some fucking speculative shit. That's some pure speculative shit just off fucking candles and just off what happened. Like, that's not called setup. I hope you guys know that. Mentally, that's called literally fucking candle trading FOMO. So
from names like Goldman Sachs and Morgan Stanley yesterday regarding M&A and advisory revenues increasing. And I think it's still a good story, big picture for financials with a steepening yield curve,
fine line between deductions and just
market
hoping,
potentially heating up. So
fine
looking
line.
at a balanced
Where is
view
the
on
line,
equities,
right? That's
Maria,
the question.
between
What is
tech
hoping and what is
and
deducting
cyclical
and
sectors
waiting?
like
So
financials, industrials, healthcare.
that's the fucking
I think
question.
makes a lot of sense
The question is,
this
there's
year.
a fine line.
Yeah, and of course, we're right in the middle of earnings season now. I mean, Jamie, Wall Street's major banks delivering nearly $600 billion in revenue last year. Trading revenue led the charge with a record $134 billion haul. Executives said the setup remains ideal for more gains ahead because deal making and lending also drove results, and that's expected to stay strong in 26. Banks are flagging geopolitical risks, elevated asset prices. Goldman Sachs is exploring opportunities in the prediction market. CEO David Solomon met with leaders of major platforms, signaling growing institutional interest there. And I've got this item this morning over at Piper Sandler this morning. Jake Ubino, who's a friend of this program, regular guest, he highlighted that households will very likely spend at least 70% of their nearly, get this, $200 billion 2026 tax windfall of higher returns and lower withholding, with consumption risks skewed to the upside. So we're going to probably see this spending surge hit, Jake says, after the tax refunds roll in, concentrated in February and March. That has to be a positive with all that tax refund money in people's pockets, Jamie.
Well, it's not just that. I mean, you have the president who has all three economic levers on go. You have monetary policy, being very accommodative. You have fiscal policy, which is in place, and you've got credit coming from the Treasury Department, and also in other forms.
It's the point of this market is to literally be reasonably, logically right, not to be like, oh, look at me, I'm right, so I'm gonna feed my ego, and I'm right, so I always have to be right, and oh, I'm the guru Furuji. That's the fucking trap. I'm telling you straight up. So that's the mental fucking problem, and that's the ego trap. It's not like that at all. It's actually just there's so many fucking people participating in a market, and there's only a handful of people. There's only 25% of that population that is really, really not really they have a confidence in themselves to just literally just be patient to see what it is. But it has to do with the confidence in themselves, right? No confidence in themselves, they have confidence in candles and anything else but themselves. But themselves literally just
where it's being, really slanted toward consumerism. I mean, we're going to see an economy that is actually going to boom this year. It's already started. You saw like GDP reports in December. You're right, Maria. There is going to be an enormous amount of spending. We see it here with our clients. I mean, people are doing projects, buying vehicles, basically doing things that they had been reluctant to do over the past couple of years because they were afraid of what was going to be with inflation. What were they were having to spend so much money on basics. They were afraid to spend money on other things that they wanted. And that's really changed in a big way over the last couple of months. People feel a lot more confident about their financial circumstances. Housing values are good. Their stock market portfolios are good. The wealth effect has come back in a big way to the average American. And they're using that power to actually go out and enjoy it. Travel is really doing well, Royal Caribbean, others. You're really seeing it, and the tax refunds are just an extra piece of it. It's not really the base of the spending surge that you're going to see. So I think just looking at it from a market's perspective, how about those small caps? I mean, they have beaten the S&P 500 10 sessions in a row. That's the kind of things that you see in the marketplace when consumers are really strong. And I think that people may have it wrong on giving the dollar the last death knell. I think people are going to really be regretting, thinking that the dollar is on its way out. I think the growth matters for the price of the dollar. And I think the dollar will probably have its resurgence in the next little bit.
Yeah, I mean, you have to ask yourself, what is the alternative to the dollar, right? I mean, the alternatives are not very attractive, by the way. But I love this idea that, the Big Beautiful Bill is really underlining all of this. The Big Beautiful Bill and its impact is going to have a big impact on the economy. We're talking about 5% growth expectations right now. And like you say, the cherry on top of this cake is this tax refund. I love the idea that we're going to look at nearly $200 billion in 26 tax windfalls in February or March when people start getting these checks, and they're going to spend, according to Piper Sandler and Jake Ubina, they're going to spend 70% of it. in February and March. That's going to be extra money. Story stocks, guys. Paramount escalating its push to acquire Warner Brothers. We've got this hostile bid underway. A Paramount meeting with French President Emmanuel Macron and UK officials on this. This is a $108 billion hostile bid facing scrutiny as Paramount battles Netflix for the studio giant. A Delaware judge refusing to fast-track Paramount's lawsuit against Warner Brothers, keeping that deal timeline in check ahead of a shareholder vote. Brian, your thoughts on this? Look, Warner Brothers has made no secret of the fact that it wants to merge with Netflix, not Paramount. But Paramount's deal, price and what it's willing to pay looks better.
The video really showing 190 today.
No, Maria, you're right. On the face of it, it looks better. But I think the concern that the board at Warner Brothers Discovery has is the fact that some of that increase in price was backed by debt and the concern of liquidity to be able to fund that deal. Now, earlier this week, it's been reported that Netflix might be increasing their offer and actually making it more of an all-cash deal, because Netflix came in originally with a 85% cash, 15% stock deal. Right. It's possible that they're going to raise their cash offer, and this is just going to continue. And also keep in mind, Maria, last point here is that the termination fees, if this doesn't go through, are in the billions of dollars for both sides. So I think this is going to still face a lot of scrutiny from our friends in Washington, but we'll see how this all plays out.
Yeah, it's a great point.
I don't know how this bounces doing so much in contracts right here.
So
now
we'll see what Netflix comes back with. Brian, great to see you. Jamie, great to see you both. Thank you, gentlemen.
Oh my God.
Jamie Cox.
What the
fuck?
Right back. IWM wildin' right here. Yo, this shit moving in fucking 1 minute. Like crazy. Damn.
So as we wrap up the week, a lot to keep an eye on here. To help me break down what's been going on in the markets this week and today, let's bring in Kevin Green, senior markets contributor here on the network. KG, your thoughts here on the markets? We're kind of consolidating, relatively flat for the week in the S&P 500, NASDAQ, and Dow. Russell outperforming, though. What's your takeaway here so far this week?
Yeah, I think we are. Obviously, we are now seeing a well-defined range over the last 4 trading sessions here, Tom, especially if you're looking at the S&P 500. That 7,000 level has been a key area of resistance, or getting close to it has been a key area of resistance, but this rotation trade continues to be in effect. Yesterday, we did see technology stocks really outperform, but we are still also seeing this broadening out type of trade taking place as well. Utilities obviously doing a pretty decent job this week, consumer staples as well as industrial. So I think the market's really still looking for value, looking for stocks that are consolidating and trying to break out. And then outside of the semiconductor names, especially the memory names, it just seems like we're seeing maybe some weight on the Mag 7, which is kind of also providing us a little bit of a cap when it comes to the gains for the S&P 500. When you're looking at the Russell, I think that just shows you a little bit more risk on sentiment in certain pockets of the market. A lot of thematic names still advancing to the upside, and we have maybe a little bit of mixed earnings when it comes to some of the super regionals this morning as well. Let's see how that actually impacts the Russell, but overall consolidation for now. We do also have an options expiration today as well. This is going to be the monthly expiration for January. This also is a leap expiration, so volume should be high, liquidity should also be high, so we should actually have a pretty decent session today.
Kev, when you look at this, we've seen yields kind of consolidate recently. We've seen the Russell go into all-time highs. They're very sensitive to interest rates at this point, but we've seen some consolidation. When I look at the Russell outperforming to the upside, 40% of these companies aren't even profitable at this point. It almost seems to me that there's a little bit of reach and grab for maybe risk on assets at this point, because of the fact that, hey, this isn't maybe on fundamentals. Is it more based on maybe the tax cuts coming down, the regulation and the deregulation that's supposed to take place here in 2026? Is that the reason what we're seeing, maybe a broadening out of this rally in strength?
As they're trying on SPY and QQQ.
I mean, if you kind of look back at the Russell and you look back, let's say even 10 years or 15 years, it's just starting to break out right now. And so it's also a catch-up trade that I think is taking place. And we've kind of talked about this rotation to value or stocks that have been kind of consolidating or basing for a fairly long time, now starting to catch a little bit of a bid. I think that's really where that Russell trade is outperforming here. Yes, yields have stabilized. I'm not sure if it matters where the yield is currently. It just matters that we have stabilization.
When direction is south from 930
DCF models in that fashion here, and I think that's also a little bit of a tailwind. Financials and getting some optimism because of rate cuts, maybe a reacceleration when it comes to fiscal spending. Easier monetary policy should also then drive their profitability. That's also kind of providing a little bit of a tailwind for the Russell. And then we have this tech trade. Tech stocks within the Russell 2000 actually do pretty well in an environment where we are cutting rates, and we might be starting an early cycle at the end of the late cycle, starting an early cycle. But I would also just not disregard the fact that the Russell has been kind of basing out here for the last 4 years or so.
This is a morning cycle.
That could give it a lot more room to the upside over the next couple of months here if this type of environment really does stick, especially the interest rate cutting environment.
Yeah, one of the bright spots for markets last year, KG, were memory stocks, hard disk drive stocks. You got your SanDisks, you got your Microns, Seagate, Western Digital. Those continue to outperform so far in 2026. Now, these things are getting frothy, KG. Now, it's a cyclical type of sector. We've seen that movement over the last 10 years or so, where it's based on pricing, it's based on demand. But this seems like a steamroller. You can't get in front of the rallies that we've seen. Seagate upgraded today out of Susquehanna. They raised their price target on Western Digital. It seems like every day I'm coming in, there's more price target hikes. There's more optimism in this space. I mean, what's your takeaway? Are we getting a little frothy here in the memory chip stocks?
We might be. I mean, the demand is actually still relatively high, and there has been some news reports over the last 2 weeks, Tom, that they have the ability to raise prices. And if they're going to be raising prices, margins are going to improve, and then that also kind of changes the model up a little bit. And I think the price action's kind of reflecting that. And then these analyst expectations and price adjustments here, I think it's just kind of catching up to price. Some of them may not be really truly off of the fundamentals. And I think this is just the reflection that when the market finds a theme, it will concentrate inflows, cash flows into those themes as much as it possibly can until we do see some form of a blow off top. Right now, that just does not seem like that's the case. We also had an executive from Micron actually purchase around $7.8 million worth of Micron stock. That was reported yesterday within an SEC filing. I think that's also providing a little bit of a tailwind. So they have potentially the pricing power. Right now, they are not seeing a lack of demand, and that's what's really driving these stocks higher. And once again, it's a catch-up trade. 2 years ago, memory stocks were not a part of that AI rally. Now they're kind of leading the way as stocks like an NVIDIA or even an AMD kind of consolidate here before trying to break out even higher.
Yeah, we'll continue to watch that. You mentioned the pricing on those because of the demand, the sellouts through 2026
for
Micron and others. They're taking market share away from Samsung, SK Hynix in that. But this is definitely one you don't maybe want to get in front of until it exhausts itself, because valuation's starting to get a little bit stretched on those on a historical basis. But hey, maybe they're going to grow in to what we've seen as far as demand and their sales numbers and growth rates. KG, let's flip it over to some earnings. JB Hunt, if you looked at the Dow Jones Transports hitting record highs this week, that's typically a good barometer for the overall equity market. JB Hunt pulling back about 4% today after a pretty good earnings event, but maybe the bar a little bit high on this one, maybe some profit taking.
Yeah, I would say it was a little bit of a mixed earnings announcement. And then also, if you're looking at the price action here, this 210 level has been an area of resistance for the stock pretty much since 2022. So that was also something that may have ran up a little bit too far, too fast. But they are seeing some improvement when it comes to expense management. The company did slightly miss when it came to the revenue. That was actually reported at $3.1 billion. She was looking for around $3.13 billion. The adjusted earnings per share did beat at $1.90. Street was looking for $1.81 here. But what we are are still seeing as a little bit of slowing or deceleration or contraction when it comes to revenue, comes to volume, not only when it comes to intermodal, but also if you're looking at last mile. They continue to talk about the weakness there. They're not having the ability to raise prices, which is obviously impacting their margins. But on the other side of that, they are cutting expenses fairly aggressively here. So I think it was just priced at a pretty high rate given the environment that we are in right now. They have some internal adjustments and issues that they are working on that's probably not reflective of the broader economy. And we are seeing a pullback right now. And from a technical standpoint, where could it actually pull back to? I mean, it would not be outside of the realm of possibility, Tom, that we do see the stock coming back to, let's say, like 170-ish area, consolidate, and then try to break out a little bit higher. So it's had a really decent run, especially since the last earnings announcement. High bar going into this one, though.
Yeah, they said freight feeling fragile at this point moving forward, but we've gotten some good data recently. You look at some of the GDP numbers and expectations and optimism moving forward in that space. FedEx just came out with a note that said they're going to spin off their freight business also on that front. You know, you look at geopolitical news, Taiwan stating that they're going to invest about $250 billion in the infrastructure build out here in the U.S. In lieu of maybe only 15% tariffs here moving forward. But this is pretty big news that came out late yesterday, KG.
It is, but Tom, you know, the reaction, we're not so excited when it comes to trade deals because this is what it's being framed at as a trade deal where Taiwan will be investing $250 billion in the U.S. semiconductor production capacity or fab business here in the United States. And this is also going to be backstopped by a $250 billion line of credit or basically a backstop from the Taiwanese government
IWM is squeezing me.
These deals. Now, this is going to obviously help companies like Taiwan Semiconductor, which does have an operation in Arizona, and it does appear that they're going to expand that fabrication facility. This also could flow into other companies that do have domestic production here in the United States. It's not confirmed yet, but maybe that could be a potential for Intel, which is obviously still trying to garner the attention and the asset dollars in order to ramp up its fabrication units here. So this is a tailwind. This is also going to be the result of reducing tariffs down from 20% to 15% on Taiwan. And we are also going to see a situation where there will not be any tariffs on pharmaceutical goods as well as their ingredients, and then also including aircraft components as well as natural resources, which, you know, keep your eye on the natural resources
nice and steady on
there's a lot of news that's going to be gearing up over the next 2 weeks here for many countries when it comes to critical minerals and things of that nature. So this is a tailwind for the U.S. economy. Let's see if these dollars are going to be spent. And Howard Lutnick kind of stated that if these companies are not going to build here in the United States, they could see tariffs up to 100% in some capacity. So this is, once again, a deal that was completed. Not that strong of a market reaction once it was announced, though.
Yeah, build here or pay up, I think is the mantra there. And this comes, you know, on the back of the geopolitical risk, you know, the threat from China also. So this is reaffirming those ties that we have with Taiwan at this point. KG, let's take a look at the S&P 500, which is only about 0.5% off of its all-time highs here. What kind of levels are you looking at here for today to wrap up the week?
Yeah, to the upside, looking at that 7,000 level. To the downside, 6,900. So it's a wide range, 100 points. That's just what the flows are showing this morning. Once again, options expiration, leap expiration, volume increasing. Look for some volatility here for today, Tom, and hopefully it provides some opportunities for these intraday traders that like to scalp both on the upside and downside.
Yep, we'll continue to watch those levels. It seems like the optimism remains. Earnings season ramps up next week also. All right, great stuff. Thanks to Kevin Green, Senior Markets Correspondent here, helping us break down what to look for today.
Time is 9:50. Market is going so slow. IWM is hovering at the roof. Nvidia is hovering at the roof. So slow. Now it's been 25 minutes since the market opened, going lower. Tiny bit. And candle traders ought to go, guys. Listen to me. You guys need to go, right? You guys are going to stay on for 2-3 days and then leave anyway, right? We don't really want your candle trading comments here anyway. Just leave. It's okay. We love you all. We'll see you next time when you want to join again later anyway. But yeah, until then it'll be fine. But at the end of the day, it is what it is, right? We have 70 to 60 to 80 people, 100 people out of the 150 that is here every day, right? Those are the people that are the permanent members. And they know what the fuck they're talking about and doing. We don't really want temporary fucking candle traders here fucking saying some shit and then gone fucking forever anyway. No offense. So, candle traders ought to be gone. Nothing has ever changed. Nothing will change. Same thing yesterday, same thing today, and same thing will be next week too. So, candle traders ought to leave. Candle traders ought to leave. This is not the right place. This is the place for smart money deductors and wannabe setups. 9:55 is going lower. Let's see if 9:57, 10 a.m. goes through in 20 seconds here. 4 p.m. gap. We're already there on QQQ. Look at this shit. We're already there on QQQ. IWM is the only thing not going out. Weird as fuck. I thought IWM would have dropped and the market would have dropped with it, but clearly IWM is still fucking squeezing. And today is the 8th day. So if there's a 265 retest, I'm leaving, but I don't know. This shit's so stupid. IWM is actually so stupid because IWM looked bearish as fuck, and then the market didn't go, and then now the market's going, and IWM's not going. So it's just makes no fucking sense, to be honest, sometimes, but it is what it is. 9:55, 9:57, 10 a.m. This is the 3/3 bear cycle. Candles are humongous. We are right above the gap from yesterday. Thing could bounce right here, right above the gap. Why? Because the gap is used as a price level target right now. It could reach, sure, but I mean, if it bounces, then cycle's happening. Right above the gap. The only thing that matters here is cycle and time confirmation analysis. In the 3/3, trying to reach the 4 p.m. gap on SPY. Looks like we reached it on SPX. Almost.
Welcome back. The prediction market is red hot. Former House Financial Services Committee Chairman Patrick McHenry is taking on a new role as senior advisor to the Coalition for Prediction Markets. It's dedicated to providing access and transparency to prediction markets while ensuring regulators keep up with these changing policies. Goldman Sachs is among the financial institutions reportedly considering its own entry into the prediction markets, could be through an acquisition. Remember, Intercontinental Exchange, which owns the New York Stock Exchange, took a stake in Polymarket last October. deals are happening here. Joining me now is Senior Advisor to the Coalition for Prediction Markets, Patrick McHenry.
Patrick, good to have you. Bullish, 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 bullish. This is bullish. This is bullish. This is bullish, and my left ass cheek is bullish, and my left butt cheek is bullish, and the squirrel outside is bullish because he's eating a fucking goddamn bullish, 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 bullish. Suck my dick. Fucking lying ass motherfuckers. It's called setup, bro. Fucking wake up, dumbass. Scam ass bitch. Here you go. 10 a.m. God damn. Fucking retarded. Alright. Get fucking set up on fucking bullshit. Stupid as fuck. Every fucking day, dude. Them motherfuckers do the same fucking dumbass shit. Scam each other and fucking say, bullish, 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 this is bullish, this is bullish, and this is bullish, and bullish, bullish, bullish fucking liquidity. Get the fuck out of here, you fucking idiot. Liquidity. Liquidity since when? Every fucking day. Every fucking day. Since here. Since here. Since here. All they can do is this. All they can do is this. All they can do is fucking this. That's fucking 2 out of fucking 10 days. That's 4 out of 10 days, bro. Fuck. Oh my god. Just in the fact that statistically speaking, every day closes bullish, so every day we must be bullish, and we're at the top, so every day we must be bullish. Ha 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 ha. That's what they fucking want. Fucking buffoon. Done. Oh my god. Yesterday pre-market hella bullish and they deleted it today and they popped it up and then fucking deleted it too. So this is bullish, this is bullish, this is bullish, this is bullish. Oh yeah, this is bullish. Oh yeah, this is bullish. Oh yeah, no, this is bullish. Oh yeah, bullish, bullish. Oh yeah, bears are coming, but this is bullish. Oh yeah, bears are coming, but this is bullish. Like how the fuck? Fucking retarded as shit. Shut the fuck up, fucking scam ass bitch. Your fucking candle traders the fuck out of here. Time is 10. Man. IWM. Fucking bull trapped. Well, like, what the shit? I really want to get released for, like, I don't know. I might leave LOD retest on IWM. I'm stuck on IWM now. NVIDIA pulling back trying. Right? This is bull trapping. Okay, we'll see what happens on the video today. This is bearish. Time is 10. Holy shit. Now it's turning bloody. Now it's turning real fucking bloody. Alright, let's see. That's what they want, bro. To be fucking scamming and bullshitting on fucking retail candles and being like, oh, this is bullish, or this is bearish, and then fucking just fucking lie, scam it all. Fucking stupid as shit. Holy crap. What does SPX show on the weekly? Well, the weekly shows that since the 13th on Monday was right here, Saturday market update video, we went down, went up, and then went crazy down. So we bull trapped the fuck out of all the bullish, bullish, bullish. This week is bullish, 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 bullish type of people. And then they went bullish. And then they trapped the fuck out of them that exact fucking day too in the island, even though we were bullish. So less people went into 1/3, 2/3, more people went into 3/3, and they were like bullish, 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 and they got fucked over. Today, green candle, they were bullish, 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 and they got fucked over too. So this entire week has been, right, bullishly showing, but fucking over all candle trader, fucking dumbass, fucking perma bull, retarded, Furuji people online, right? They don't give a fuck because they probably paper trade, but the people that follow them, man, was it rough for them? Probably this week. Fucking rough as shit. Rough. IWM is fucking rough right now. Rough. Imagine just being perma fucking bull with no fucking type of thinking on setup and cycle and time and no matter what, and just being bullish, bullish, bullish because we're at the top. That's some sad shit. That means you're being led by the market, and that means you are just feeding into the frenzy, right? That the market wants us to feed us into. But that's what they do. And that's what people fucking look up to. And that's what people are like, oh, this guy knows exactly what he's talking about because he makes shit up after it happens. Oh, he says the candle's green when it's green and it goes green. Oh, now candle's red, now it's red. Oh my God, so smart! So smart! Oh! It's just feeding bullshit. It's just a fucking culture over there, bro.
It's become so hot. Nuts. You're seeing incredible interest in prediction markets. What's your take on what is livening these markets up so much?
Well, first of all, I think this is an example of economic boom and innovation that President Trump has brought to the American economy. We now have technology that can find a wide market. Frankly, prediction markets have been around for a century.
I want to add to NVIDIA next week, but I'm scared as fuck, so I'm waiting. NVIDIA rolls down somewhere here, I will be when it's up here.
And frankly,
IWM, I took a loss. This is bullshit. Because I joined here and down here, it didn't even go in fucking profit. It was just the same fucking shit.
That has enabled this to flourish. And people like it. Small businesses like being able to hedge their risks as well.
IWM just fucking short squeezing every fucking day.
Revolution that President Trump has brought to this economy.
Yeah, I mean, we were talking recently with the leadership of Kalshi, one of the key players in the prediction markets, and I asked her how it's different than gambling and really where the growth comes from next. Watch this.
Operate like a financial exchange. So basically, you can think of Kalshi as a matching engine. We're matching buyers and sellers, buying contracts of what's going to happen in the future. So we operate completely different from a sports book or a casino. We are not making money when people lose. We're not trading against anyone. You know, the house always wins. Kalshi is not a house. So we really operate very, very differently. We are like a financial exchange, sort of like the New York Stock Exchange, for example.
That was Luana Lopez. She's the co-president of Kalshi.
Your reaction? Come back in 10 minutes, Vlad, when you go take your morning meds, bro.
This prediction market's got it right in predicting President Trump's victory when polling said otherwise.
Fuck you talking about on an online platform saying, did he take his meds?
The tool and a transparent tool for them to make predictions about what's going to happen in the future using their expertise. I love it for the political stuff. I'm a political junkie, and so I think it's fascinating for that. But also, if you're going to hedge against a potential government shutdown,
what are people smoking?
I don't know. That is government facing, hedge their personal and small business risk. You have people that can use their expertise now through technology. And I think the larger point here is that we have the opportunity to have these safe, fair, regulated, two-sided markets here in the United States rather than offshore. And with an internet connection, you can engage in technology and betting markets offshore. Let's actually have prediction markets that are safe and regulated here onshore, and give consumer protection and innovation an opportunity to flourish.
Yeah, it's a great point. And do you think that the regulatory framework is in place now for this? What do you need to see in terms of those guardrails for this industry?
Well, we already have a ban on insider trading. That is an industry standard. We're regulated by the CFTC. That's one of the best regulators in the world. This tells me, and the courts are saying the same, that we do have a proper regulatory regime now, and we're always looking for better ways to protect the consumer and open to new ideas there.
Well, you landed in a great place, certainly in business after having spent so much time in Congress. So what do you think about your old stomping ground? President Trump is getting some pushback from economists and some GOP lawmakers over the Justice Department's criminal investigation into Federal Reserve Chairman Jay Powell. Powell facing intense pressure from the president to lower rates as the president is set to announce his replacement in the coming weeks. The central bank also weighing cutting rates for a fourth consecutive time when they meet at the end of the month.
Can't believe we've
your reaction to this investigation against Powell?
It don't even look like we moved that much, but we kind of
did. Does not serve the president's interest. The president has been successful. Got every member of his cabinet through the United States Senate when there was opposition, loud opposition to some members, and Republican lawmakers supported the president's nominees to the cabinet. We need the same thing to happen for the president's nominee to the Federal Reserve. We need to get interest rate policy right. We need to get regulatory policy through the Fed right. The only way that can happen is with President Trump getting his nominee through the Senate. This news does not serve the interest it gives of that, and it gives the president's opponents a cudgel to use against his nominee to the Federal Reserve. So I in that way, am very concerned about what this will do to the president's nominee to the Federal Reserve, to chair the Federal Reserve, and to slow that down, which is not what we want, and I think it's not what is proper here.
So you worry that this investigation will get the Democrats so upset that they will stop the president's agenda, stop the president from getting any more nominees at a time that he needs the nominee passed for the chairman of the Fed?
Well, you also have some Republicans in the Senate have been looking for an opportunity to break with the president, and I don't want to give them, nor do I think it's in the Republican Party's interest to allow a break like that. I don't think that's the right thing. I think we have a unified Republican Party right now. I'm quite proud of the way the House and the Senate have worked with the president to pass policy and get the nominees through, and we don't need to have any break like that, especially going into the midterms.
All right, all great points. Patrick, good to see you this morning. Thanks very much. We'll be watching your work on prediction markets. Patrick McHenry.
When the midterms.
Small caps are the story, though, this year, right? Think about this. Last year, small caps, I've got two charts here, the Russell 2000 versus the S&P 500 and the NASDAQ composite, right? Think about this. Last year, in August, we had a double bottom. They bounced off really nicely, and it looked like, okay, this is the move. I asked every guest, and nobody was really feeling it, right? Monster move, but then it gave a lot of it back, but held. Then you can see here in November, took off again, pulled back, held against key moving averages, and this right here, wow, this right here is a major, major breakout here. It looks absolutely phenomenal, not just against the S&P 500, but also against the NASDAQ. Look at this one. This is a monster, monster move. It's absolutely on fire. Now, maybe it's due, right? I mean, want a scientific reason why it may be happening? We have 5 years in a row of underperformance of the Russell against the S&P 500. That's only happened once before. It's never been 6 years, so maybe you can argue that, but there are other things at play here, right? Now, I tell you what, though, here's the interesting thing about yesterday's session. It was very compelling. You would think, okay, it felt lackluster. It was not lackluster. You have more advances than decliners on the NASDAQ, on the S&P 500, 400, and 600. So you say, well, golly, how come it felt the way it did? Well, rotation, right? Yesterday wasn't an indictment against the S&P 500. It was just sort of a retreat from those high-flying mega-cap names. And let's face it, all the eyeballs on the Mag 7, but this is where your real damage is happening. Software is getting absolutely annihilated. Now, last year, coming into last year, there was talk that AI would eat their lunch, right? AI is going to eat their lunch. They got hammered. Then they made a huge rebound. Folks, they're breaking down big time again. And I got to be honest, I'm not so sure most of them will survive this latest round of doubt. But much of Wall Street is looking for lackluster returns from the Mag 7. Back on that topic, and well, hardly any PE expansion for the entire market. The AI trade we know has broadened out as we speak. And I got to tell you something. This is going to be wrong, right? Now, there are a lot of stocks, by the way, making monster moves associated with AI. You don't know who they are. They're smaller names. I bring them up on the show as often as I can. I also don't think it's too early to write off the Mag 7 completely. In fact, on that note, the most powerful stocks in the market, we're talking in the history of the stock market, including NVIDIA, from time to time, they still need to be saved. And guess what? Just like the heroes of the Justice League, someone comes through.
Good Friday morning. Welcome to Squawk on the Street. I'm David Faber with Jim Cramer. We are live from Post 9 at the New York Stock Exchange. Carl has the morning off. Happy Friday, everybody. Let's give you a look at futures, of course, as we get started with the final trading session of the week. As you can see, set up for, well, I guess we'll call that a slightly higher open. You ready? You good? You all right?
No, I'm
shorting the video even more now.
All right, I'm sorry. I got to talk to you.
187.5.
I'm
adding
into
into
roadmap though this morning because he doesn't seem to want to talk. It begins with the state of stocks as the Dow and the S&P get closer to new milestones. Plus, J.P. Morgan CEO Jamie Dimon says, all right, you know, he wants to stay in the job at least 5 more years. We'll talk about that. They say he was joking. And the U.S. and Taiwan reaching a trade agreement that will allow for the building of chips and chip fabs here on American soil. The deal has a total value over, obviously, a lot of time of $250 billion. Speaking of chip manufacturing, Micron CEO, he's going to join us in a first on CNBC. Talk about that company's plans for upstate New York, where it is building some big fabs as well. Let's start with the markets. Chip sector on track to extend its rally. The S&P 500 continues that march toward the 7,000 mark. What are your thoughts on this fine morning, very cold morning here in New York?
Once again, what's happened is, and we talked to Sanjay Mehrotra, people misjudged. They misjudged the amount of business. But I think it's important to talk about, and I will ask Sanjay. Last year at this time,
for 9.1K now, 187.5.
They projected wrong. They projected too much. They had a lot of inventory. Obviously, since then, amazing things have happened. But this shortage is the making of the market. Sanjay, I was very bullish a year ago. I came out on this show and said some things about high bandwidth memory that were aggressive. And Sanjay called me and told me that I was too bullish. And I look back, he was too bearish, but he had the shortfall because he had too much inventory. I want people to understand why this happened, okay? This is not a shortfall that was manufactured in order to be able to raise prices. It wasn't manufactured at all. There was no way you could see this. And I think that's why.
It was just, what, a result of the enormous demand coming from everything we talk about?
Look, here I'm looking at. This is from 2024. We expect industry DRAM bit demand growth to be in the high teens. No, it's in the 20s. I mean, he said the bit supply growing roughly in line with bit demand. That was wrong.
Again, volume growing on the video.
NAND bit demand growth in calendar 2024 and 25 now low double digits. Completely wrong.
Right.
And I'm not saying that means that Sanjay was not good. He was the best. He was the best, and he got it wrong. I think that's the point.
All right. Well, we're going to have a chance to talk to him, but what's the larger point you're making here?
That we have an insane demand, whether it be power, and we're going to get to PJM, which is the utility index that's under fire, the utility group's under fire, whether it be DRAM. We just don't have enough. And people have to understand that this shortage is impacting everything, making it so that everything's more expensive. And the powers make it, the PJMs make it so everything's more expensive. This has caught everyone by unaware, including the principal company that we all needed to do it with Taiwan Semi. And all I'm saying, David, is that this is one where people couldn't have foreseen it. Sanjay had the best vision of everyone, and he couldn't foresee it. That's how
it's voracious. Not as though a year ago, Jim, we were not sitting here and talking about the enormous demand for NVIDIA chips, for all the compute you could possibly get your hands on, for data centers and power. We've been talking about that for well more than a year now.
Lower here.
Who you said
Q heading lower.
Saw it coming. Jensen Huang. Jensen Huang is here, and everyone else stayed. Jensen knew.
QQQ is bearish here with NVIDIA. SPY is following.
They should have listened to him. They didn't.
Well, who's the they that didn't?
Everyone.
That's not true. There are plenty of people who benefited enormously, both from
Western Digital,
the move. By the way, a lot of these,
Seagate.
Right, it's sort of those stocks have been the real beneficiaries. Nvidia, nobody's going to complain about a 41% gain over the last year.
Jensen, people thought at GTC, the conference we laid out things, that he was way too bullish.
There's right here on the video, big time.
Dreaming with the Vera Rubin, dreaming with the Richard with the Feynman. That's the next.
Yeah, the next generation.
And he saw it, but he would tell you, my job. I see things out 20 years, and then I work backward. Now, don't forget, Jensen. He's going to tell you that with the work that David Ricks and he's doing at Lilly, we're 100. Being 100.
Yeah, that caught your attention at the J.P. Morgan Healthcare Conference, where they talked about the ability to extend life and then potentially
well, they talked about the
extend life for a very long time. Yes.
Well, forever was discussed. I think that was a little more science fiction. Remember Asimov? It's kind of an Asimov thing.
Isaac Asimov.
I want to point out that Jensen did, and others didn't. He understood the demand.
Wow.
He went to Taiwan Semi, and they believed in him.
So what does all that have to do with the price of the S&P, my friend?
No, I'm just talking about the crisis that we have in this country.
Bearish control, 3/3. QQQ is 1/3, 2/3 bearish on the video and
deviation,
QQQ here.
6.7%. We don't have it on the grid. We can't do it. There's a gating factor. This is the Michael Semblus theory, the chief strategist.
We will not have enough power. By the way, I mean, you talk to them. I try and talk to as many.
Look at these motherfucking people. Bullish, 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 bullish. This week's bullish, this week's bullish, last week's bullish, my asshole's bullish, 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 bullish. People get used up for fucking setup, man. Fucking gone. Thumbs up. Goodbye. Bye-bye.
I think that in the industry,
see you fucking next year.
It's not even a secret. It's
Bye-bye.
kind of known. I mean, they're going to build a lot, but not as much as everybody says because
if you don't think this shit is set up, I don't know what you fuck. I don't know what the fuck is set up. You don't think this shit is set up, I don't know what the fuck is set up. Right? It's happening live in front of our eyes right now.
Unless you continue to gain efficiency,
live happening in front of our eyes right
what might be thought, and therefore you may ultimately not need as much in the out years. Let's call it 5 years from now. Or is it just?
Candle traders.
No matter how efficient the chips become, you're just going to have more and more of them because you need more compute. You're going to be doing even more things. By then, we may be at AGI. Who knows?
Right, and remember, it's behind the meter. They won't do that. They won't let them because that's a way to be able to get power.
Why? Set up traders versus candle traders every day. Every single day.
President Trump's trying to stop the hogging of power.
Bullish or bearish, it doesn't even matter.
PJM is a cooperative.
Just set up traders versus candle traders.
I don't know if you look at New Jersey,
bullish, 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 bullish.
It includes Virginia, where of course we have so many.
Bullish, 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 get used,
figure out ways for these companies, the hyperscalers, to basically
like a fucking
fund their own power plants. You see it there. Build their own power plants.
Bullish, 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 bullish. This is bullish. This is bullish. That's bullish. That's bullish. That's bullish. That's bullish. If that's true, what the fuck is not?
The 2026 long-term load forecast is lower than the 2025 long-term forecast. Lower.
Meaning they won't have as much power.
Yeah, well, the forecast.
They're not expecting as much to use.
Well,
that's wrong.
Well, you are a genius.
1020 is bounce trying here until the low of 1020 breaks. All puts and all zero DTE. There's our danger.
You made your points.
And I shaved this point. I cut myself. So hot under the collars. I don't know if the blood came up.
No, you're fine. No blood there.
Yeah. So let's talk about the overall market.
Yeah, can we do that?
The overall market is being led by companies we've never heard of. Russell. When you go down, what you see are, you're seeing flying helicopters and drones, and you're seeing tertiary companies that make power plants.
Go to your fucking Ferrucci like I give a fuck, man. Go fucking live in your fake ass world with your fucking Ferrucci like I give a fuck, please.
And I want to talk to you about something that's the most important story.
I love it.
That everyone's ignoring.
Tell me, what?
What happens if Elon Musk stops OpenAI?
Well, you know that I was the one, I think, not just last week.
Fell on the video here,
on this lawsuit actually going to trial.
Well, it was meant to be a soft pitch. It meant to be that I gave you a Dodgers versus everybody else thing.
Unbelievable. What are the Dodgers doing? $60 million a year.
I don't know. I thought there was
baseball
like a cap.
Ever going to stop
Defer. I want to defer. I'm deferring your answer.
What is their luxury tax going to be about? All right, but the point you're making is that this lawsuit from XAI against OpenAI, really from Musk against OpenAI, which we've talked about, alleging
pretty sure there's some sort of purple box here.
A little bit later than we'd reported last week because the judge
posted down here with that lawsuit.
And it is interesting that what OpenAI is saying, right? I'm trying to find it. They're saying you're going to hear a lot of things and you shouldn't believe them.
Oh.
There it is.
What is that?
Outlandish claims.
A lot of things you shouldn't believe.
But your point is the correct one, which is what would happen to OpenAI were and if Musk was to prevail.
How dangerous is it to be a
perma bear
or a perma bull in this
know what the
market,
remedy would ultimately
How
be.
fucking dangerous is it?
Let's say $1 trillion private
Fucking
offering.
crazy.
Would you be anxious to get stock in something that might be destroyed by Elon Musk?
Yeah, that's a concern. It's a risk.
Now, Elon Musk is
By the way, there are any number of
plays with. It's play though. It's
there
played
are
out.
any number of other risks when it comes to OpenAI. There's also a lot of opportunity. Those who own OpenAI shares right now, private company, would say.
Well, I just wanted to put it out there because I'm going.
Imagine
for the
being a fucking perma bull still in 2026, and imagine being a perma bear still in 2026. Because that's the only jack shit they knew how to bullshit for the last 40 years of their lives. That's so fucking sad. Because they have never figured out what actually works in life. It's crazy.
We're trying to grow this
country. Make
country.
shit up online for the last 4 years because they can. Because the environment's now they can bullshit people online.
Versus
or
Musk versus OpenAI, you know, they
what
did
a
in a
nasty
letter
ass fucking life
that
to
they
live.
sent to employees.
What a
OpenAI
nasty
said
ass
they
life to
believe
live.
the
To
case is
scam
worth no
people
more
on
than
bullshit.
$38 million that
Fucking
Elon
live
done.
in
Were that
basically
to be the
bullshit
case, it obviously
online
would not
is
be of
this
great
life.
importance. As you might imagine,
What a sad
Elon
motherfucker.
and his lawyers believe otherwise.
Yeah,
like I give a fuck.
As we get closer,
at least live in fucking reality. At least teach some real shit.
I know that I truncated what we should have been talking about, but I don't believe that because I think
Sad
that the PJM story, I think that the power story, I
Sad
think that the Micron story are
Sad
really important, more important than where the
Sad
averages are right now.
culture.
Unless you want to decide, you know what,
I
Boeing
keep
is the
saying
best.
culture, but it's the culture. Sad
Never
fucking
me about-
culture.
That's a long time ago.
I remember it like it was yesterday.
Never forgets. Never forgives.
Ever will I ever.
I never
Never ever will I ever, right? In my fucking life, I know who I fucking am as a man or a woman. The fuck are you talking about, bro? I am fucking. Oh my god. Never ever. Nasty fucking work.
Welcome back to Squawk on the Street. Rick Santella here live at CME HQ with some of the last breaking news of the week. These are December reads on industrial production and capacity utilization. Industrial production expected to be up, well, 0.1%. Comes in much stronger, up 0.4%.
Where does the
last
word
month gets
guru and
upgraded
furu come from?
0.2 to also up 0.4.
Exactly.
So back-to-back 0.4. Those are the best levels since June when we were up 0.5%. Now let's look at utilization rate, shall we? Expecting
Tesla
a number
bears are
around 76,
crazy here.
and that's kind of where it's been
Nvidia bears are
congesting.
fucking
But this one comes in a
crazy
little
here.
out of
1/3,
that range.
2/3, 3/3 now.
76.3 in last month
They cooked
also
all the
improved
1/3,
from
2/3, 3/3 bulls from yesterday.
76.1. 76.3.
1/3,
That would be the
2/3,
best level
3/3.
going back to, well, pretty much equaling, and July was just a smidge higher. Remember, on utilization rates, they take it out a couple of decimal points. A couple of big things going on very quickly. Here we are hovering right around 419 in the 10-year. Last Friday, it closed at 417. Yesterday, it closed at 417. It's very, very, very tight on all the closing yields, whether you're looking at 2s or 10s. And
Nvidia
if you look
has
at the
bulls
spreads and
trapped.
corporates,
Tesla
they are some of
has
the tightest
bulls trapped.
since 2007.
Right.
Jim, David, back to you.
This is more bearish than not. SPY is bouncing at the floor. This is a crazy rejection. This may be a purple box moment happening here. We will draw a purple box here. That's a crazy candle though. Up or down, let's not lie. That's a crazy candle though, up or down. You know who the fuck you are, bro. People be fucking talking online. know who the fuck you are.
Right to Ron Barron. He is the chairman and CEO of Barron Capital, which has $45 billion in assets under management. Ron is joining us ahead of the 32nd annual Barron Investment Conference. And Ron, it is great to see you this morning.
Great to see you too.
So 32 years, we've been doing this for a long time, not 32 years on Squawk Box talking to you on the morning of your annual investment, but a long time.
Amazing.
And we're going to jump into the investment, but I want to ask you, because there are a lot of people who look at a couple of days of declines in the markets. You're not one of them, but there are a lot of people who will look at that and say, uh-oh, is there a bubble here? And I know that is not one of your core investment
looking like
things.
the worst for bears, I'm not going to lie.
You never look at bubbles or headlines or any of the rest. But what do you do at a time like this when there are so many people asking about questions about valuations and the potential for bubbles?
Not very much, but when you're talking about the 45, can I just go back for a moment?
Good Tesla,
when you
right?
spoke about
Breaking out about
$45 billion
437, coming back to 437, and people are like, why is Tesla doing this shit? I don't understand Tesla. Tesla is a bearish, is a bullish. I don't know Tesla. I don't know Tesla. I literally said in the market update video, they made bounces this year for a little bit, but the higher time frame is bearish on Tesla. Higher time frame is bearish on Tesla. Longer term bearish on Tesla. The market update video on Monday, right? The Monday was right here.
Now I'm not in debt anymore.
Sunday, sorry,
so what
Sunday
do we
was
do?
right here.
Not very much.
We may see
Just
some sort of bounce,
trying
but
to
I'm bearish
understand
on
where there's
Tesla. Higher
opportunities
time
and
frame,
there are
higher time
opportunities
frame,
to try
higher
to take
time frame.
advantage of
They're
them.
using setup.
And over the past, it's really interesting. Last month, the whole market has been really focused on technology and AI. And if it wasn't technology or AI, stocks haven't done very well. In fact, if you take the top stocks out of the market, they represent 38% of the market. And
187.26 incoming on Nvidia. Go gap fill.
When you take that out, those big stocks out, the return for everything else is negative. And the month of November, October, we were down in our smaller and mid-sized companies a third, something like that. And if you look at the returns, the funds that we have invest in technology and fast-growing businesses,
still bearish
they've done very well this year.
IWM is not going. IWM is rejecting.
The funds that invest in companies that are smaller and mid-sized, they've done poorly. They've
SPX is
relatively
dumping.
flat year.
QQQ is going lower here together.
That's what's happened.
But I was thinking of you earlier this week when the Dow crossed 48,000 for the first time, because you are somebody who has basically said, never bought a bond. You're not going to make money if your money's either in a bank sitting there trying to earn investment or in a bond, that it won't keep pace with inflation. So you have always said that the market is the place to be. And when you think of big numbers, you've always said, yeah, that's going to happen. Those big increases will come with stocks.
Yeah, so I think about the stock market and the economy basically doubling every 10 or 12 years. And that's what's happened for my entire lifetime. Everything doubles every 10 or 12 years. So what has to happen is the value of your money falls 4 or 5% a year. That's inflation. Falls 4 or 5% a year, and the economic growth has been about 2% a year. So it's about 7% a year growth, and that means everything doubles in 10 years. The value of your money falls in half every 15 years. So you got to make twice what you're making today in 15 years to stay even. And so stock market, so Bitcoin's been amazing, obviously. And gold, I have a few gold coins that I've been buying. Mostly I bought in 2006 because I was outside of New York at that time, and when 9/11 happened. And so I tell my wife, I want to buy some gold coins in case something really bad happens. We can escape. We can buy a car. We can buy a boat. I want to buy. And so she ignores me. And then I go to Saks on 57th Street. I start buying these coins. And then one day in the summer of 2006, 2007, it was $400 an ounce. She sees me walking in. She said, what is that? I said, gold coins. She said, it doesn't look like gold. Let me see it. And so I show it to her, and she says, what are you doing with this? It's heavy. What are you doing with this? I said, this will get us out of New York if there's a nuclear attack or something. And she says, are you crazy?
You know what's crazy is they burnt 190 calls into this week, and they revived it on Thursday.
Don't you dare bring another one into my house. It was $400 an ounce.
While burning all puts expired.
Now it's 4,100.
Wow.
Bravo.
Try going to get out of the country. Try say, look, here's my ETF, my gold ETF.
My contract when I came back on IWM, that shit got melted half.
Actual gold coins.
Well, one of my friend's daughters had a very high position in government, and she still does now. And this is what she calls the GTFOOH money.
think I can do the calculations on what that stands for.
Right. She's our police commissioner.
Out of here, right? Yeah. Get out of here, basically, is what it means.
Yep.
Ron, let's talk a little bit about Tesla, because you have been an investor with Barron Funds since 2014. So more than a decade that you've been standing by Elon Musk. It's been a very good bet for your firm.
Right now.
You've made how many $1 billion on Elon Musk since then?
Made about $8 billion in Tesla from $400 million when we started. And in SpaceX, we made about $4 billion. Since we started that in 2017. So about 12 or 13 billion we made so far. I think we're going to make 5 times that next 10 years.
You came out strongly in favor of his new pay package that could pay him $1 billion over time if they meet certain metrics. It was not a surprise to me because you've talked to us on the show for a long time
points away.
About
Gap fill on SPX.
How you feel about him and how he is the key man and how none of these companies would be anywhere near where they are without him. Your conviction, why you believe in that, and then your concentration in his stocks at this point. I was shocked. In your personal portfolio, I think 65% of your personal investments are tied to Elon Musk through either SpaceX or Tesla or XAI.
It's about 40%. Personally, it's about 40% in Tesla and about 25% in SpaceX. And the balance 35% in our mutual funds. And in SpaceX, I think we're going to make 10 times over the next 10 years. Tesla, I think we're going to make 5 times.
$8 away.
And my mutual funds, I think we're going to make 3 times. So it's obviously riskier if you put a large percentage of your money in one entity. For our mutual funds, it's about 22% invested in SpaceX and Tesla, 11% apiece. And then XAI, that's an investment that's smaller right now, but we've only invested $350 million in XAI. It's now worth $700 million. That was 2 or 3 years ago. And the next pricing is going to be probably double where it is now. It means about $1.5 trillion, so it's going to be in our top 10 in the next time they price.
I was thinking back to several years ago when you actually sold some Tesla. You did it at the time only because the stock had increased so much in value to the point where it made you a little uncomfortable with how big of a position it was in the funds. It wasn't a commentary on you losing faith in Elon Musk or in the stock, but at the time you said, look, I can't as a fund manager have that big of a position in it. What has changed? Because I think you have a much bigger position today.
From 4 p.m.
Well, I didn't feel uncomfortable.
10 a.m. This entire bullish MACD being used right now.
And I was being criticized for having such a large investment in one company.
Pre-market and everything.
And we had bought stock at $10 or $15 a share, 12.
Everything being used.
It was trading at 220. And we sold for our clients about 25% of their investment. I wanted to make sure that they knew that the reason they held the stock was because I thought it was still interesting, as opposed to their head died.
Why is the market dumping?
And so I didn't want them to think I died, and that's the only reason we still owned it. So we sold a quarter of the stock, and then the stock hadn't done anything for 3 or 4 years. And then when President Trump was elected,
candle traders are all up there from yesterday. Candle traders are all here in the morning. This is deduction. This is setup traders.
So we sold 30%
candle traders are fucking done so every fucking day type of thing, every fucking day type of thing.
And what I committed to the board of our mutual funds is that I was the last purchaser.
Am I joking today? Nah.
I haven't really invested in stocks since 1992 in public companies. And I told the board, if you let me invest in this when I tried to get everyone else to invest,
trading.
Nobody else
candle
wanted to
trading
at Barron Capital.
versus setup trading.
If you let
Nothing
me
more
invest
every fucking day.
A certain amount of money,
fuck out of here.
Then what I will do is I will promise that I won't sell any of my stock. And I told you I wouldn't invest, but let me break my promise and let me invest. And then I will be the last person out of the stock. So I will not sell a single share of my company, of my shares, until my clients have sold 100% of their shares. And I don't expect to sell in my lifetime Tesla or SpaceX, either one.
Wow. That is a huge commitment and a huge amount of faith that you have in Elon Musk and his companies.
1040.
Companies are really unusual. You know, when you think about what he's doing, you talk about the pay package, and you know, this is not like Rockefeller or like Carnegie like Mellon or like Morgan, when Ford, the great industrialists who built this nation, this guy is like Da Vinci, and an artist, and. Let's
see.
Those leaders on the thing. Susie, by the way, stand up, Susie. She is doing such a good job. She's the first female chief of staff, and she might be the best chief of staff too, but she's doing a great job. Thank you, Susie. So Susie got him on, and I just went one after another. I called Germany. No, we will not do that. I said, no, we're going to put a 25% tariff, which is, by the way, about 7 times more than they would have to pay by raising their drug, like 7 times. This wasn't like a little bit more, 7 times more. And I may do that for Greenland, too. I may put a tariff on countries if they don't go along with Greenland, because we need Greenland for national security. So I may do that. I'll give you a little, I'll take you out of that. In fact, that'll end up being the story. But actually, this is a much bigger story because we're reducing healthcare by numbers that you haven't seen. So I spoke to the top 10 countries. They all said no, and within about 2 minutes, they all agreed. And we were off to the races. And now we have favored nations. It's called most favored nations. So if France is paying, let's say, $20 or $30 instead of $10, we are going to pay that 20 or 30.
Off
we
$9.50.
The lowest price, whatever the lowest price is.
$9.50.
So if France is paying $100, but Germany is paying $20, we pay what Germany pays. So we go from a horrible situation on drugs, prescription drugs, to the lowest price anywhere in the world. Is that a correct statement, Oz? Because they're going to blame you. If you want to correct me, you can.
Gap
but
is
you
filled
won't
on
be here for long
SPX.
if you do. They'll
You're
say,
correct, Mr.
Oz
President.
has left employment. No, but is that a correct statement?
That's absolutely correct statement. And that's what we want to codify in the great healthcare plan.
He's about to fill.
That's why
what
it's
we're
so
codifying.
important.
That's
Because
right.
if the president's not here, there's a flight risk with these companies not obliging us anymore, because I think it's the strength of your personality, but also they know they will follow through with the threats if we don't act. So we believe other countries will change their opinions, and so will drug companies. So we've got to get it into legislation.
Well, if you have the wrong president, the countries have tremendous influence over us. You know, they look. Why did we go to an income tax system instead of a tariff system? We had the wealthiest nation. If you go back to the 1800s, 1887, we had money, so much money we didn't know what to do with it. But the countries at that time, they have a tremendous influence over this country. For whatever reason, I don't know. But they do. So if you have the wrong president, they'll change the system in 2 minutes. And the drug companies are very powerful too. You have to deal with them. In this case, it was both. I mean, you had a problem with the drug companies, but you had a tougher problem in theory, other than the fact that I understood how to deal with them. And
There's
the tariff king has done a great job, and I hope we win the Supreme Court case, because if we don't, shame for our country.
Speak out of your ass.
We have a great, safe,
Time is
beautiful country
10:41.
now. We're doing better than we've ever done. We hit 42 stock market highs during the 11-month period that I've been
with the
here.
program,
There's
man.
never been
Where are
anything
you?
like it. Stock market's hitting a
Wake
new
up.
high again today. So
Wake
it's,
the fuck
it's
up.
been incredible. So just to end it on this, because it's such a big subject and it can't be explained by reading. As good as my speechwriter is, he's fantastic, but he can't write it in one sentence.
Weekly
what we're
candle
talking
is
about.
closing.
So we're going to get most favored nations. We will be taking prescription drugs down to levels never even contemplated.
Must be
and
fucking
that's all
sucky.
great for
Must be fucking
healthcare,
a dumbass.
because when you're
Sucks.
paying a tiny fraction of what you had anticipated
This is
paying prior
bullish,
to
this is
today,
bullish, and
prior
that's
to this month,
bullish,
this all took
this
place
is
over the last month and a
bullish,
half.
This is
And the sad
bullish,
part is that
bullish,
when we first announced it, and we did it in a little bit less, more general form, when we first announced it, the Times did a story on page 22 or something, way back in the little story in the back of the newspaper. This is the biggest revolution in the history of medicine in this country, because it's price. You're going to buy the drugs for a small fraction of what you were paying for them last month. And I tell the story of my first term.
Time is 10:45.
I was the one, after 28 years, that got drug prices down. It was either 1/4 or 1/8 of 1%.
No, there's a fucking issue when the market, the setup is bearish, and the motherfuckers out here every fucking day, all day, every day, waiting for a bounce to go up.
In 28 years,
a little bit or not,
drug prices have gone down.
100 contracts, supposedly. That's the most brain dead shit ever.
In fact, I had a chart. It was the worst chart.
You want to cry about it, or you want to talk about it? I'm here. That's the most brain dead fucking retail shit I've ever fucking heard in my life. So.
You had to get a little, like a carpenter just to see.
Imagine being that fucking one-sided.
It's not the greatest line, but I was proud of it because it did. It went down either 1/4 of a point or 1/8 of a point, tiny. And now think of what we're doing. We're bringing medicine down by many times. By many times. Nobody's ever...
Imagine being so fucking one-sided.
You could say 1,000%, 2,000, or you could say 90% or 80%. The Democrats want you to say 90 or 80, but there are two ways of calculating it. You understand that, Dan? And we'll take either way. It doesn't matter. But we'll be paying a tiny fraction. So that's going to go into our plan. And what Oz said is very important. It's very important that whoever is in this office is, strong and intelligent. And if they're not, they could, it could be ended. But what we want to do is we want to have it codified, so it's very hard to change. And that's all part of the process. I think it's the greatest revolution because it's financially a big part of the drugs. And all of the doctors sitting there know exactly what I'm talking about. They have their patients in Europe, and they say, I can't believe it. I'm buying the same thing for...
Guys, I'm leaving half of my NVIDIA here. 15 out of 35 contracts for 4.9K on 187.5.
That's right.
I'm riding the rest, but I joined in here on the second red candle as they were turning down red in the MACD.
The price in the world, whatever that is,
was right here.
That's what the United States of America will be paying. Isn't that an amazing, long story? I was going to say long, boring. It's not boring. To me, it's long and exciting. It's the biggest thing to happen to healthcare. I don't think there's anything we can do. We can do all of our different methods, but there's nothing we can do that can ever top what we do. And the press should treat it fairly instead of not writing about it, because they don't write about it because it's me. Primarily because it's me, but also because it's Republican. And they don't write about it, and they should be ashamed. But fortunately, the public understands it, and that's why we won the election in a landslide. So it's a great thing. Instead of Americans paying the highest drug prices anywhere in the world by far, by 10 times sometimes, we'll now pay the lowest cost paid by the lowest nation. So the lowest nation, whatever that is, I hope they negotiate a great deal. I hope somebody out there of all those nations is going to be a better negotiator than everybody else. And whatever they get, we get, Mike. Is that pretty good? Look at Mike. Even Laura, first time I've ever seen him smile. And next, our plan would reduce your insurance premiums by stopping government payoffs to big insurance companies and sending the money directly to the people. So instead of, and this started, and I'm not really a healthcare maven, but I was always a good businessman. It started, I'm reading the paper, and I see the money that the insurance companies were making from us on Obamacare. And they're up by 1,000%, 16, I think one was up 1,723%, 1,700%. And it's because of the massive amount of money that's sent to them by the United States government. And I said, why don't we just send it directly to the people instead? And I made that statement. It was a common sense statement. I didn't check with anybody. I didn't even call Oz or anybody. It just made sense. I made a statement, and it went viral. Can you believe it? It was so popular. In other words, we cut out the insurance companies. They're making a fortune. And, they're good people. They're business people. I don't blame them. But we cut them out. We pay the money directly to the people. The people love it. I said it, I said it as a non-professional in that business. And I made the statement like all of a sudden it's like the biggest story, that one, the biggest story. And I get a call from Caroline, who's around here someplace. She said, sir, we're getting inundated. Margot called me too. Margot, you called me too. Margot, everyone knows Margot. She's been here from the beginning, right from the beginning. But she said, sir, both of them. They said, sir, we're being inundated by what? You made a statement about health care being paid directly to the people into health savings accounts or whatever you want, healthcare accounts.
It's like the video's still going lower here. The video's still going lower here. Tesla trying to go lower here.
It's blown up.
IWM is bouncing, trying.
So that's where we started. So Obamacare was designed to make insurance companies rich. It really was. I mean, maybe not knowingly at the time by Obama, because he didn't know much about this stuff. That was designed by other people in Congress that are total pros that are bought off by the insurance companies. And the problem we'll have with this is we'll get no Democrat votes, even though it should be very bad for them if they don't. But maybe you'll get some. You'll call some of your friends, fellas, and Bob, you'll call some of your friends over on the other side. I don't know how they can reject it. It's just so popular. It's so compelling. So Obamacare was designed to make insurance companies rich with taxpayer subsidies, and I want that extra money straight to the health savings accounts for you. And
we
you
have
can
110 people here.
Thank
you so much for being here. God bless you and this country, folks. Make sure we hit the like button, guys. We are at 53 likes. Right? A lot of people watch the live stream, but never hit the like.
They need health care for different reasons, and an old person doesn't need certain things that a young person needs, and vice versa. To further reduce insurance premiums, my plan ends the giant kickbacks to insurance brokers and corporate middlemen. We're getting rid of the middlemen. How long have you heard doctors, all these doctors over there, look so smart. They're all brilliant people. I assume you're brilliant, otherwise you wouldn't be here, right? I assume we have the best. Do we have the best of the doctors? I would imagine, right? Hey, how cool is the White House? Okay? They're always in operating rooms. I wouldn't want to be in an I don't like operating rooms, but they do. But how cool is the White House, right? The coolest place on earth. And this is where it all begins. This is where we came up with a little concept about a place called Venezuela. How did that work out? And this is going to be the same thing in terms of its precision.
He's so feeding himself. Like, what the fuck?
It's going to work just like that.
Wow, IWM is creating an insane W now.
So amazing. But I equate that to other things because we can do other things like that. It doesn't always have to be a Minnesota where everything is corrupt, where they have healthcare centers that nobody shows up.
I told you Tesla's still bearish, right? NVIDIA is still bearish, right? So if that's true, QQQ wants to go lower, not higher.
It's like a horrible thing. We have a country that was great. We have a country that's now great again. It's really come a long way. Make America Great Again is almost going to be obsolete because our country is very close to, we were going to keep America.
Thank you so much for hitting the like button, the Miller House, man. I really appreciate you, brother. Even though I said all the things I've said, right? Like it still went up by like 5 or 6. So you know what I mean? Thank you so much for hitting the like button. It is kind of crazy when a man, you know what I mean, is constantly asking to hit the like button, and then like 30 or 45% of the people, or 35% of the people never do.
The opposite of Minnesota,
you know what I'm saying? That straight up tells you that people just want good things, and people just want to use the live stream, or people want to use me, and then whenever they need to show support, or whenever they want to hit the like, they don't because they don't like me. They don't like what they hear.
The so-called cost sharing
all that's good for them is just
bring down the cost of
good and green, I guess, which is okay. But like at some point in your life, you got to realize
next, the great healthcare plan
I may not be here, I may not be able to stream. If that's the case, you know what I mean. Like you might as well be the person and the woman that loves yourself, man or woman that loves yourself, to be able to do whatever the fuck you want to do whenever you want. Is what I hope from this stream, but man. Come on, like it actually is so hard. Like
in certain ways,
you hear me ask and beg like 6 or 8 times throughout the day, and even then, it like never goes up. So that straight up tells you that
and get operated on.
Life is just all about.
They send you a bill and you have to file for bankruptcy. Not going to let that happen. So we're going to have insurance companies and healthcare providers going to have great and hospitals great transparency.
Shit, right?
The word transparency is a very important word. So they can't get away with ripping you off any longer. It requires insurance companies to make it easy for you to compare plans.
Not like that,
be able to compare plans. You can't do that now. You're not allowed to do that.
To live
it's
life
not even believable. I'll tell you what.
The max pleasure.
I used to sit before I was a politician home, and I used to say, how is that possible?
It is. I'm not saying not to be happy, but I'm literally just saying like you gotta like
the forces of nature, the forces of power.
You gotta understand that the world is not just
very badly treated people, and they won't stand for it. But these forces are going to release an earthquake of reduced price health care. You're going to have massively reduced costs. This is no longer we're going to cut it by the famous 1/8 of a point. You're going to have massively reduced health care, and it's going to be massively better. You're going to have great health care at a much lower price, which is the two things. We want great health care and we want low price. You're going to have great health care at low price. Now you have terrible health care at a high price. You have horrible, horrible Obamacare health care. Like everything else he did, it was crap. It was a horrible plan. It was from day one and should have never been approved. It was a very sad night that night when there was a thumb raised. Most importantly, will require any hospital or insurer who accepts Medicare and Medicaid to prominently post all prices. You're going to post your prices at their place of business. Something they don't have to do. Something they're not even allowed to do. We'll have the maximum price transparency, and the cost will come down just by that. Not even talking about favored nations. The price will come down. So just in conclusion, I'm calling on Congress to pass this framework into law so that we can get immediate relief to the American people, including rural America. And I hope to get Democrat votes. They know, they saw it. I know a lot of Democrats. And they say that plan is unbelievable. Are you going to vote? Well, I'm going to try. They have tremendous pressure on them. Vote no. Vote no. We have a couple of Republicans. Massey, Thomas Massey, always votes no. He's like, something wrong with the guy. If you have any clinical psychiatrists in there, maybe go check out his mind. But he always votes no. He's a very bad person. He's a very bad Republican, bad American when you always vote no. Just vote no. Do you approve? No. You know, there's not a thing you can say to him either, Lola. Look, Lola wants to be nice. He likes to get along with everybody. I don't. But they vote no. But so I don't know. You know, you have some people that are very, I call him Rand Paul Jr. Rand Paul always votes. I don't know why he votes no, but I guess he thinks it's good politics. I got him elected twice. If I didn't endorse him, he wouldn't have been elected. But he doesn't reciprocate, and I guess that's okay. But I want to hear now.
I feel like President Trump right now,
Dr.
bro.
Oz, and then we're going to
don't
have Dan
reciprocate
Sullivan
back.
say a few words. And Rob and Mike.
Yeah, it's funny.
And Governor, you're going to say a few words, and we appreciate you being here very much. You're doing a fantastic job. I just want to leave by saying that this is the biggest thing to ever happen to healthcare in our country. It will not be covered that way by the fake news, and that's a sad thing. It will probably not be voted positively by the Democrats, and that's a sad thing. They all know how good it is. I think we can make health care into a Republican issue because the Republicans are going to be close to unanimous on this. It should be unanimous. Maybe we will be unanimous, but it'll be close.
Testing the low of yesterday.
But we have a small majority. We probably need a little bit of help from the Democrats. So whatever we can do, we're going to do it. It's the biggest thing to happen to health care.
Some sort of pressure is trying to release off of Q.
So Oz, would you take it away, please?
Along
Thank
with
you very
NVIDIA
much.
and Tesla.
Mr. President. Mr. President, thank you for standing up for American health care. And I just want to underline this fundamentally important issue. We need Congress to help craft the Great America Health Care Plan. And the Great Health Care Plan will work. It's a brilliantly conceived framework. And as it comes to the American people, they understand that they'll want it. And it should represent the analogous situation, similar to what you did so brilliantly last spring with the Working Families Tax Cut legislation that the President mentioned, has created the Rural Health Transformation Fund, which is why we're here today. I want to put a little bit of texture around why this is such an important issue, because the Rural Health Transformation Fund is the largest investment ever in American history in our rural communities. Yeah. 50% increase in the amount of money that Medicaid, which Secretary Kennedy and I regulate, into our rural communities, $50 billion. You can do the math, it's $1 billion per state, and that's an important factor because it got them competing. There are 60 million rural Americans, and these folks do not have access to the same care that's available in urban and suburban America. Their life expectancy, if they're in a vulnerable situation, is 9 years shorter, because your zip code actually is your destiny. It determines how long you're going to live, and we can make a dent in this because the high rates of chronic disease, and other ailments that plague our rural areas are often driven because they don't have access to care. That's going to change because of the Sentinel legislation. And again, it's similar teams, the same leadership, same president, same Congress that passed the Working Families Tax Cut legislation, which is incredibly popular around the country and will make the great health care plan successful as well. From the day the legislation was signed to create this wonderful fund, this transformational fund, the team at CMS, which is under Secretary Kennedy, began working. And they're here today. Steph Carlton, outstanding Chief of Staff, Alina Chekai, and Emily Chan. That day started working. It was July the 4th, by the way, on the specific vision for the program. How do you actually get the money out the door in 6 months? The president was insistent, did not want the money in Washington. So we began working closely to make sure that we'd use the money not as a Band-Aid, but to empower those closest to the challenges that rural patients face. And who are those people, the 50 people who know rural health care the best? The governors. They wanted the money out of Washington into the governor's hands, and that was done in a remarkable way. The governors thought
Why does this bounce look so forced?
Who was actually the first to start working on community engagement, which is part of that legislation as well.
It's healthy, but like something above here looks so forced.
In rural America, and that's an important phrase. All 50 states submitted amazing ideas to transform rural health care in ways that should have been done decades ago. The CMS team awarded each team their portion of the $50 billion investment precisely with the same precision that we took Venezuela leadership, convicted individual, and with Iran as well. The same precision on time before the end of the year and got it out of Washington into the states. Now I want to take a step back and do a little thought experiment, Mr. President, if you want to do this. If you, and God forbid this happened, had turned your head the other way in Butler, Pennsylvania, it wouldn't have been an ear injury. Now, I've been to Butler. I'm from Pennsylvania. Butler General Hospital is a good hospital. They don't have neurosurgery there. If you have an injury to the head, you have a golden hour to get cared for. You were taken to Butler General Hospital. Because the injury, thankfully, was not as lethal as it was designed to be, it wasn't a problem. But if you'd had a head injury, you could have had your life saved. But without a neurosurgeon, and there is no neurosurgeon at Butler General Hospital, unfortunately, you wouldn't have an option because Pittsburgh is a far, far ride away. That's the closest metropolitan area where there are lots of neurosurgeons. But with this bill, this legislation rather, this funding of $50 billion, Pennsylvania got its share, and they're going to be able to build telemedicine hookups, even robotic surgery, that would allow an injured individual in a car accident or any other reason that is a head injury in Butler General and rural hospitals across the country to access the best care our nation has to offer so rural America will not suffer. That's the promise
robotics.
of what this money offers to our nation. It's not just paying the bills, it's not just picking up the pieces, it's actually transforming using technology we have widely available in urban America, the way we save lives in rural America. Each state competed aggressively because for $1 billion, Mr. President, you'll fight pretty hard. And they gave us brilliant ideas that they're talking with each other about. So we're actually creating teams that now across state lines will connect because they're all Americans and they base their advances on several pillars. Secretary Kennedy can talk about MAHA because there's MAHA elements to this as well, but very precisely sustainable access. We asked states, how can we bring top care closer, like in the thought experiment I gave you for Butler General. In Pennsylvania and North Carolina, there are regional spoke models, and hub and spoke means you've got a big hospital in the city and they adopt or work closely with some rural hospitals to solve the challenges of fragmented care. And that actually works. You share administrative back office work, you group purchase your stuff, you save money, you exchange medical records. Alabama has no OBGYNs in many of their counties. So they're doing something pretty cool. They're actually having robots do ultrasounds on these pregnant moms. So we can actually get those images back to the big center. So we know if the child has a problem,
to see a cycle
and we know if that
confirmation
mother's
here.
at risk. We have one of the highest
maternal
mortality rates in the world, in the country with the best medicine in the world. It's often stated, people ask, does healthcare stink in America? Well, they don't like it. Would you leave America to get healthcare elsewhere? Nobody leaves. We have the best healthcare if you can get to it. We don't want rural America left behind anymore. As an aside, by the way, we talked about the most favored nation drug pricing. One of the first companies in areas we use most favored nation drug pricing is fertility drugs. That's why we're going to have so many Trump babies, because we've dropped dramatically the most expensive part of the fertility space. And so America no longer will pay so many times more. In that case, it was 10 times more for the same fertility drugs that they're available for moms who want to get pregnant in Europe. I want to thank Terry, who's here as a nurse practitioner, Andrew, as a doctor, West Virginia, New Mexico. They're representatives of the workforce in rural America. But there are only 2 of them here representative because we don't have enough people working in rural America. It's a big challenge. So Delaware is creating its own medical school, their first ever medical school in a rural part of the state. So that can get more local talent that will stay local in those parts of Delaware. Michigan is launching the high school to healthcare pipeline grant program. They want to take kids out of high school in Michigan, local rural communities, and get them into the system, get them trained as nurses, because they'll stay home because they're from those communities, and they'll save lives for decades there. These are the types of programs that can get our rural communities and economies up to high gear and keep it that way long after this 5-year funding is done. And finally, tech innovation. Rural communities would benefit the most from high-tech advances, like we just discussed, as possibly if there was a head trauma case. Many states want to partner with our CMS data interoperability network. It was created by Amy Gleason, who spearheaded so much of the technology transformation in our government. It's going to support the president's pledge to provide transparency that he mentioned as part of the great health care plan. And Congress can ensure these are all available for decades to come if we can get this legislation through. As in the tech innovation forefront, just to give you a couple examples, Texas and Hawaii are making targeted investments in statewide telehealth, so everybody has telehealth. The best doctors for the best knowledge available where you are. We'll meet you where you are. If you're a vet and depressed and you're thinking of taking your life, we'll be there. Just let us know you're in trouble and we'll help. Alaska wants to deploy, and I'm going to hand it to Senator Sullivan in a second, wants to deploy unmanned pharmaceutical distribution kiosks and drones that will deliver medications, because in the North Slope of Alaska, you can't get there this time of year. So these technologies, they exist. Why are we using them in Midtown Manhattan? We should use them in rural Alaska. This administration is committed to collaborating with all 50 states, all 50, red and blue, all 50 states, to carry out bold plans to tackle the challenges that local communities face. We're not pouring funds blindly, however, into a broken system. We're going to carefully, precisely, as the president said, target this investment. With healthcare fund running rampant, and I was in Minnesota this week, Mr. President, it's worse than we've heard. But Minnesota, pardon the pun, is just the tip of the iceberg. California is the varsity team when it comes to fraud, waste, and abuse. We're not going to let that happen. We want transparency for this $50 billion investment. We owe it to Capitol Hill. We owe it to this president, and we want accountability to be a top priority. For that reason, we've created an Office of Rural Health Transformation at CMS for long-term oversight. The office, led by Alina, check guide Alina again, was one of the people who helped create this program in the forefront, will guide, she was in the first administration, Mr. President. She's going to guide states in implementing their rural health transformation plans, coordinate all the federal and state partnerships, making sure there's appropriate oversight. In addition, every single state is going to have a dedicated project officer. We will be there with you. We're going to help you. Please engage us. You've got lots of lives at risk. It's a true state-federal partnership, unbelievable, extraordinary milestone for healthcare. Your zip code will no longer dictate whether you have excellent healthcare. Your zip code will no longer be your destiny. It's not going to dictate your life expectancy. Mr. President, I cannot thank you enough for the leadership that it took to get this $50 billion investment in rural healthcare. They don't make a lot of noise. They just want to get the job done. You stood up for them in Congress. God bless you for making this possible. Please do it again. Please do it again for the great health care plan. Let me hand it to Dan Sullivan, who's a spectacular member of the Senate, and obviously Alaska, they're pretty rural.
Thank you, Dr. Oz. And Mr. President, I am very honored to be here. This is a really exciting day. I want to thank you, sir, and your team. Worked really closely with Dr. Oz, Secretary Kennedy, many others. You know, this is a great example of how Congress, working closely with your administration, can achieve historic things. This is historic for our rural health care, certainly, in the Working Families Tax Cuts Act. You combine it with what you were talking about, sir, in terms of drug price reductions for all Americans. So these are two things that are happening right now in our historic, and I agree 100% with you, Mr. President, hasn't got a lot of press, even though it is historic. It's going to really impact people in rural America, especially my state. This fund that I want to talk about, but what you've done on the drug pricing is even...
Ben, will you get Lisa Murkowski to vote for it?
She voted for it.
No, are you going to get her to vote for the great, big, beautiful health care bill that we're doing?
When we get that, I think MFN drug pricing, I bet every member of Congress votes for that.
Are you going to get her to vote for it?
We'll work on it, sir. We'll work on it. So let me actually talk a little bit about the context of what's going on in Alaska and how this relates to it. You know, after 4 years of being locked up and shut down by the previous administration, we are on the cusp of achieving some huge goals in my state that we've been working on for decades. We have this huge resource development boom going on the North Slope of Alaska. I was with a bunch of the Inupiat, Alaska Native people who live up there. They are so excited about what's happening there. We are, as you know, Mr. President, building icebreakers. We're home porting some of those in Alaska. We have huge historic infrastructure and economic and national security investments happening. In particular, the gas line that you have championed so much, the big LNG project. All of these things are happening. It's really exciting. By the way, all of these issues I just talked about, all of those are in the Working Families Tax Cuts Act. So there's a lot of excitement. But, Mr. President, in addition to a strong economy, the thousands of jobs that these projects are going to have, we have to have a strong healthcare system in every state. And rural Alaska, as you mentioned, as Dr. Oz mentioned, has often, almost always been an afterthought when it comes to investing in healthcare in America. And that's not happening anymore after the Working Families Tax Cuts Act. As you said, Mr. President, as Dr. Oz said, this is the biggest investment in rural health care in American history. $50 billion, the award the great state of Alaska was able to get working with Dr. Oz, and the parameters of the bill was about $1.4 billion over 5 years to transform our health care system. So that's really exciting, but here's the big deal. This is not just about money. This bill isn't just about money.
Huge cycle creating.
The reason it's so impactful is that it's focused on letting states.
This is the 3/3 bullish cycle, so we could reject up here somewhere. But yeah, 1/3, 2/3, 3/3 it down, and then 1/3, 2/3, 3/3 they trap every bear here.
As you know,
3/3
but for decades, the mentality in Washington, D.C. is this approach to one size fits all. D.C. tells every state, here's how you have to do it. And it never works. It never works. It certainly doesn't work. In my state, I'll just give you one example, the federal match on Medicaid. Our state typically has the lowest match in the country, even though we have the highest health care costs and highest delivery costs in the country. The one size fits all doesn't work. This bill is different. This bill that we wrote with your administration is all about allowing states to design a system that works for them with CMS guidance, and this will be a generational opportunity for every state to bring health care closer to home, to make it more responsive to the people who live in that state, and make it more affordable. I'll just end with this, Mr. President. Like I said, a lot of excitement. We got Governor Dunleavy, who sends his greetings, was hosting the stakeholders in Alaska who are going to be applying for these funds, working with CMS in our state. Over the last couple of days, you have over 300 people coming to these meetings on how to use this transformation fund to better health care in Alaska. And this is going to help my constituents, it's going to help every American, and it is really exciting. And I want to thank, again, you, Mr. President, and your team.
Thank you, Dan.
Thank you very much.
Oh, thank you very much. We're going to have to go
All
very
right, WM
fast.
showing so much bullish here. Wow. Okay, so everyone's mixed. Let's see. YouTube, we have Charia saying bullish. Sid says bearish.
Nothing more important than
Jahan
this.
says bearish.
Let's
We have
go.
4
Come
people
on,
voting
Bob.
bullish, and we have 5 people voting bearish. 5 people voting bullish now, and
fire
5 people voting bearish.
Mr. President, thank you
I
very
voted
much for having me
bearish
here today.
only
And
on
I represent
NVIDIA.
Northeastern Pennsylvania.
I want
Your governor
NVIDIA to
from
go
Scranton,
lower.
Pennsylvania,
I don't
never
know
had
if
the
that means
opportunity
SPY
to meet,
QQQ is going to go
I
lower. I mean, I
inherited,
guess it means a
very
little bit
similar
lower
problem.
than that,
Before
but
I was even sworn into office,
I
had
don't
two
know about a
hospitals,
fucking
Moses Taylor
crazy
and
down.
Regional
I
in
just
Scranton,
think
that were
I
imminently
just think
facing
NVIDIA is
closure.
going to pull back more.
And it's been,
So
in working with Dr. Oz, Administrator Oz, and the
that's the
CMS team
only
has
reason
been
why I'm voting
absolutely
bearish here, 'cause I have
incredible on
NVIDIA.
so many levels. And
I
thank
need
you
NVIDIA down
again
here somewhere,
for
purple
intervening
box,
and
in the next
shepherding
2
us through
days.
that process. But
Into Tuesday
when
or
you're looking
Monday,
at
so
Pennsylvania, we're going to receive over $193 million in 5 years. It'll
all right,
be over
we have
$1
5
billion
people voting bullish,
for the
7
Commonwealth
people
of
voting
Pennsylvania.
bearish.
And when
in
you
the
think
WhatsApp
about
group,
Northeastern
Oscar
Pennsylvania,
says bearish,
clinics
so
and
Sid
regional
says
hospitals,
bearish,
rural
1, 2,
hospitals
3
are the
people saying
backbones
bearish,
of our
Chaya,
communities. So
and
making a
no
targeted
one else saying
investment, that is
bullish
not
in
just
the
going to
YouTube chat.
band-aid
So
over
6
poor
feet 10.
operational procedures. It's going to
6
actually
people bullish. This
transform
looks to
rural
you,
healthcare.
personal opinion.
That's what we are
10 people
so
said this
excited
looks
about. Pike
bearish to
County
me.
in my district is the largest growing
Bullish says
county in the
lower by
Commonwealth of
end of
Pennsylvania,
day.
where there's not
Yeah,
a hospital.
I
The
think
nearest
that
community
too.
hospital
I
is
just
over
don't
55
think
minutes away.
LOD
So
by
these
end
are
of
going
day.
to
You know what I'm
be
saying?
funds
There's
that
a
will
big
be so
difference
imperative.
between a little bit lower
The
by end of
unprecedented
day. There's a
investment is
fucking
going to be
big difference
incredible.
by
And
break
thank you
LOD
for
and
having
go
me up here
crazy
and being
down
a
by
part of this
LOD
journey.
Thank you,
low day.
Rob.
So yeah.
Appreciate it.
I just
Thank you,
think
Mr.
this shit's
President.
going to go down here
It's
again.
a great opportunity to be here with you and
I
your
don't know what
team.
that means
Dr.
for
Oz has been
SPX.
a
Whether
tremendous
that means
asset.
we go a little
The
bit and
$50
then boom
billion
up a little
commitment
bit
to
or
rural
chop.
health
I don't know.
transformation is critical. New York State is going to see about $212 million in the first year, which is vital for workforce development, access to care, primary, behavioral, maternal, emergency, telemedicine, et cetera. How did we
I think this is the
how were we able to
0.5
do it?
Fibonacci
Because
to
we rooted out waste, fraud, and abuse in the system.
middle, right at the middle.
And Democrats will just say we cut $1 trillion in Medicaid. That's not
0.5
what we
fib,
did.
yeah.
We said you
not
need to
bullish
be
or bearish,
eligible.
market's just
You need
deciding
to
right at the
be
middle.
a citizen. You need to work if you are able-bodied without dependent children. We reined in the provider tax and state-directed payments, which have exploded over years. And we are taking this money, not only preserving Medicaid for the IDD community, our seniors, our children, our single mothers, but we're investing it in rural health. When you look at Obamacare, health insurance premiums have risen 96% since Obamacare took effect. Insurance revenues up 2,000%. Mr. President, you are 1,000% correct that the insurance companies are the problem. They wrote Obamacare.
Right now.
It's to their benefit, and the American people are being screwed. And so we can get a bipartisan agreement on what you are trying to do. When it comes to lowering drug prices, I will tell you, one of the largest pharmaceutical companies is in my district in Westchester County. I met with them in 2024, and I said, what would you do to lower drug prices? And the response was, go after the European price controls. You are spot on taking on the price controls that have been put in place. Most favored nation is the single best thing we can do to lower prescription drug prices here in America.
On the live stream.
Pharmaceutical companies will tell you that privately. And that is the fundamental fact. We need to
ratio,
go after PBM reform, associated health care plans. We put that on the floor. Every Democrat voted against it, every Republican for it. Those would reduce costs by 11% because businesses, small businesses, would be able to pool together and purchase health care plans at a lower rate. We need to go after the PBMs and make sure that insurance companies are not owning providers and owning PBMs. That is what is driving up the cost of health care in this country. You've talked about IVF. I've been a big champion on this. We need to make sure the insurance companies cover it. I also have a tax bill to provide tax incentives to Americans, and what you have done to lower IVF costs on the drugs is critical. And you are 1,000% correct on expanding HSAs. I fundamentally believe that we can address the issues with Obamacare, make sure that the American people have access to care at a lower rate. We can get a bipartisan agreement to address the EPTC with expansion of HSA so that the money goes to the people and not the insurance companies. We are committed to working to get this done, and I thank you for your leadership.
6995. 6995. Why is there fucking
gigantic thank you.
I don't know.
And thank you for your incredible leadership. Your courage gives me courage to say it the way it is.
Why is there a fucking huge spike here? I don't know. Couldn't tell you.
This investment into rural America, which by the way, in all of Nebraska, you poll 85%. I don't know what the hell's wrong with the other 15, but your 85 is a pretty good number. I think, be very, very brief. This plan will allow us to do common sense, pragmatic investments in rural Nebraska, and they will be sustainable. We will make sure that we don't need another dollar after 5 years. We are working on simple things like food. Real food is good medicine. We're working on making sure that all of our veterans, Nebraska is 500 miles long, 250 miles wide, no longer are veterans going to have to drive to Omaha to get care. We're going to take care of our veterans at home. Investments in technology so we can educate our children in rural Nebraska to provide health care are really, really important issues. And I think that the other is we've developed what we call 6 Regions, 1 Nebraska, and that will focus and take advantage of those. So we're working on what we have and then being able to use these resources.
IWM looks like it's bullish.
To also help us with
NVIDIA looks like it wants to be bearish. I'm not going to lie.
Well.
QQQ
So we're
looks like it could.
Grateful. Nebraska, we work hard. We're about faith, family, hard work, the American dream, and we don't ask for much help.
Right in the middle with DOC.
So we're really grateful for this investment. Thank you.
Thank you.
Thank you.
Thank you for being here. 1 minute.
How about 30 seconds? How about 30 seconds, sir? As a small town kid from Glen Rose, Texas, population 1,200, where I grew up, what you are doing today changes everything. And on behalf of our farmers and our ranchers in rural America, it is a new day, and we're so grateful. The final thing I'll say is I think about Abraham Lincoln, who also sat in this room, and I think about other presidents throughout American history. And you think about how the fundamental course of American history has changed in certain pivot points throughout history. I think about
oh my God, she said the word pivot point. Did you guys fucking hear that?
Solved.
Did you hear that?
I think
did you hear that?
The security president.
She said the word pivot point.
For the first time and more than any time in American history.
Yo!
We talk about Kevin
pivot points. Oh my God, how many times do I talk about pivot points in this bitch? Yo, I'm telling you, this is not coincidence. These people are saying fucking deduct. These people are saying fucking pivot point. These people are saying, oh my God.
Think about you as the affordability president.
That is not a coincidence.
Inflation is coming down. The cost of groceries is coming down. Fuel, housing, etc.
Pivot point. It's important.
Today,
pivot
in
point.
the last 2 weeks,
pivot point
you will
for
go
what?
down in
The wind
history
direction.
As the greatest president
the wind
for
direction.
the health of this country
This
in
is called
history.
pivot point.
Think
man.
about our new
pivot
dietary guidelines from Bobby Kennedy
pivot
and I,
point.
but with your leadership, putting real food back in the middle of our health care
All right, time is 11:20.
Whole
Bulls
milk
are.
for healthy kids with those dairy farmers 2 days ago. We were in Pennsylvania talking about it yesterday. And today, putting the patient and the doctor back in charge of health care with great leaders like Governor Pillen. God bless you, good leadership, and all our leaders. Thank you so much, sir.
Thank you very much.
Into 11:20, so that's 30 minutes.
And Terry and Andrew, thank you. Thank
11:40, pushing up to 10:40. That's 40 minutes.
Have really helped. We appreciate it. You want to say something?
Thank you, President Trump, and I would just echo everything that's been said here. Thank you very much for what you're doing. I'm from the northwest corner of New Mexico. We also work
That's
with
not a
Navajo
coincidence, bro. The
Nation.
president said
So
deduct.
we have a lot of
Caroline
roadways
said
in
bias.
our state
That lady
and
just
in
said
our
pivot
county.
point.
I'm also a
That's
county
not a
commissioner.
fucking coincidence.
So I take as being a nurse practitioner, county commissioner.
That's
with
like the fucking
a
trifecta.
heavy weight in order to see this happen. And it will help produce accessibility, which is a huge thing. People have to drive for miles in order to see a healthcare provider, workforce, quality care, and sustainability.
Right,
for our
that shit is not a
hospitals.
fucking
That's what
coincidence,
we're
dude.
looking at.
The fact that we
meet
heard
next
that in the
week
last fucking 1
in
week.
Santa Fe with our legislators. And so that is, we're going to be addressing the licensure compact as well.
And they've got to clean up their elections in New Mexico.
We're working.
Because those elections are so corrupt, it's incredible. If they clean it up, we win by a lot, but they are really corrupt elections. So I think if you want to do this, you have to tell them to
Man,
start
they're
working
going
on
up
that.
with
It's,
bullshit MACD.
unbelievably one of
MACD
the
and
more
RSI
correct
is barely
stocks
bullish,
in
but they're
terms
just
of
fucking
that.
doing it anyway.
But you
I don't know if this is
uninterrupted,
real.
so I appreciate you being
Well,
here
the
today.
Northwest corner loves you.
I know. I know.
If they
I know
do
we
this
have
shit
great
and then extend the
love
cycle
in
and then
Montreal,
build
but
cycles
it's,
up there with
the
MACD, it would be
elections are so
bullish.
corrupt,
So
there's
I don't know
not
if
much
this
you
is
can do
fake.
about it. We have
I
that
don't
with
know.
numerous states. Thank you very much. Andrew, thank you very much. You have anything to say?
Mr. President, thank you for having me here today. It's an honor to be here to represent the community. I'm from Northwest Georgia. Grew up in West Virginia.
Okay, that shit looks
my
fake.
colleagues, my profession. It's truly an honor. This is so important
I'm kidding. We'll see.
to our patients. To put the
I
physician
don't
and
know.
the patient back
Candle
together
looking
and take
fucking
everything
finicky
else
as
out of the
shit.
middle.
MACD and volume looking
I
finicky as
practice
shit.
in cardiology. Having efficient,
Does this
effective,
thing flip up
high-quality
and rip
care
up
is so
and then create
important.
the
And time is
range
of the
and
essence,
cycle up
and
there, or
patients
is
need
it
to be
just
able to
dumb
have
here? I
close
don't know.
proximity to their doctors to get the care
Couldn't
that they
tell you.
deserve. Quality of care shouldn't matter about the zip code. We should be able to do what we are best at and take care of our patients on an equal playing field, and this certainly helps that.
This is the 0.5
I
fib.
greatly appreciate
We have
all that
not
you've done
left
for the
it yet
American
on the
people.
5
You
or
are
the
an inspiration to
15-minute
us. You make
candle.
us believe no problem is too big to solve.
That most likely means a decision has not been made
yet. Thank you for
yet.
your leadership. Thank you for this opportunity to
Okay,
be
now
here.
we're at the
And thank you for
0.618.
putting
Never mind.
healthcare at the forefront. It's so important to every patient and every family that we take care of.
Thank you very much, Andrew. Great job. Great job you both do. Amazing. I've heard unbelievable things. And doctors in particular, thank you very much for being here. We very much appreciate it. Thank you, everybody. It's a big story. Thank you. Thank you, Doc.
They playing the motherfucking the Napoleon invasion song, bro. For Trump.
Joins us with the key takeaways from the regionals. Leslie, good morning.
Viva Trump,
Hey,
someone said in the
morning.
YouTube
So, yeah,
chat.
take a look at shares of regions
The
following on
Associated Press
results
chat.
and a downgrade by analysts
Trump.
at Wells Fargo. At issue here, regions guidance on lower than expected fees and net interest income. That's that profitability metric for loan
All right,
making.
let's see. Bears are
Mike
trying to
Mayo, in
push
his
that.
downgrade note, saying, quote, "This is not yet the
Bears are
time
trying
for most
slightly.
plain vanilla regional banks unless they are a takeover target or have extras." PNC, on the other hand, benefiting from its extras with a jump in capital markets fees. Those shares higher today, the best performing of the regionals cohort. The firm's capital markets and advisory business surged 41% year over year, and that really mirrored the activity we saw from Goldman and Morgan Stanley yesterday. M&T shares, however,
Cycle
those are
confirmation
lower,
happened
with net
here.
interest income missing
Slightly.
consensus. Fee revenue did better in the
120
quarter,
rejection
but
into
guidance came in a
1125.
bit light there.
1125.
Additionally, its net charge-offs of essentially the percentage of loans that it expects to be uncollectible that did rise from a year ago. Also within the financial space, State Street reporting this morning, and shares there slumping more than 3%. Investors were spooked by the firm's expenses, which were greater than forecast due to technology spend. Management also lowered NII and fee guidance as well. So investors will be looking for more color on State Street as that analyst call begins, in about a half an hour from now, guys.
So is the feeling on regionals generally, Leslie, that they're not benefiting as much from the capital markets activity on deals and IPOs and that sort of thing, and not as much on deregulation, or are they? And what is the gap in terms of sentiment right now?
Yeah, no, I think that's a really good read. I mean, PNC does have a pretty significant capital markets business, particularly advising middle market companies on M&A transactions and the like. So that's why you see this bifurcation between the regionals, those that are a little bit more levered toward capital markets businesses doing a little bit better, those that are more levered toward just kind of plain vanilla banking, maybe less so. And to Mike Mayo's point, the potential deregulation benefit for the regionals is just the opening up of consolidation, the option to
consolidate and merge within the industry, companies and regional.
Why do I hear a video playing? There's a lot of puts and calls here. I'm going to update the SPX put to call ratio. What it's showing is there's a lot of bulls and bears nicking on all sides right now, right here. The put to call ratio is growing. The put to call ratio is growing. There are more puts and more calls from earlier now. There are more calls coming in, especially because we are showing spike up above POC.
Please welcome Derek Morgan, Executive Vice President of the Heritage Foundation.
Thank you very much, and welcome everyone to the Heritage Foundation. We're delighted that you joined us today, and thank you for your patience as well as we undergo a historic event here. I have a few very brief words, and then I have the privilege of welcoming our distinguished guest, who will give remarks and then answer questions from the media. U.S. foreign policy should be driven by the pursuit of a strong, safer, and more prosperous America. As President Trump rightly recognizes, that means paying special attention to our hemisphere. We are blessed by so many of our neighbors who want to live in peace and respect their people. Because of our geographic, economic, and societal ties, malign developments in the Americas make the United States disproportionately vulnerable. If you don't believe that, then just ask some of the hundreds of thousands of American families who have lost loved ones to deadly drugs in recent years. Or notice how China, Russia, and Iran have all invested heavily in establishing a strategic foothold in our hemisphere. Nicolas Maduro led an anti-American socialist regime that weaponized deadly drugs, mass migration, and tren de agua against our towns and our cities. Meanwhile, he offered American adversaries an operating base. The American people, the Venezuelan people, and our entire hemisphere are far safer today because President Trump boldly sent U.S. Special Forces and the Department of Justice to capture Maduro and to bring him to justice. Securing our hemisphere also means working with our friends, our partners, and our allies. And the United States has many. We are honored to have one of those friends with us here today. Maria Corina Machado has been a brave fighter against Nicolas Maduro and the regime since it began to take form. Unlike many others in Venezuela and Washington, she recognized the danger from the very beginning. The Venezuelan people rewarded her principled opposition by casting their ballots amidst harsh repression from the regime. Her efforts, along with those of President Trump, have brought Venezuela closer to the restoration of freedom, stability, and security. And we all hope to see the return of legitimate elections in Venezuela in the near future. We are honored to host history here at the Heritage Foundation and important conversations like the one you are going to participate in today. Here, we work to build an America where freedom, opportunity, prosperity, and civil society flourish. I'm delighted to welcome to the stage Maria Corina Machado.
Thank you very much. So, such a pleasure to be here. Very grateful to the Heritage Foundation and every one of you to join us this morning. I have to say that looking back what has happened in the last years, and especially in the last days, it seems like a miracle to be sitting here in a free country in front of people that have also given their lives to fight for freedom and justice and democracy. And that's why I am very honored, not only with the Heritage Foundation, but with every single citizen of this country that has welcomed us and has honored the immense struggle that the Venezuelan people has fought for so long. And finally, we can say that we are, yes, the threshold of freedom. On January 3rd, 2026, a new milestone was achieved, and we are definitely now into the first steps of a true transition to democracy that will have not only immense impact in the lives of all Venezuelans, those who stayed in our country, those who have been forced to flee around the world, but that will have immense impact in the region, in our hemisphere, and I will say even further in the whole world. Because what we have proven is that a people determined to be free, even without resources, without money, without the free press supporting, even facing the most cruel tyranny, can prevail, because the force of conviction and the force of love is the strongest of all. I am very proud to be part of this generation of Venezuelans. Most of them have never known what it means to live in freedom or what it means to be part of a democratic society. But they have risked their lives, their loved ones, everything they have, because they share that dream to live in a free country.
Wow.
It's all about human dignity. It's all about justice. It's all about
Riley on IWN.
And it's love for our children, love for our country, and love for freedom that has brought us here.
Wow.
Now we face a very complex and delicate process, and as Venezuelans, we are absolutely grateful to President Trump, his team, and the people of the United States, because it took a lot of courage to do what he did. And he did it, yes, on behalf of the American people, but also because he cares for the people of Venezuela. And he told me that yesterday. And I think that was the most important message I can bring back to my country. Tell the Venezuelan people that the American people and the President of the United States truly cares for the life, the well-being, and the future. I'm certainly talking about our political prisoners and all those who have been persecuted, those who are all today in exile. But I'm also talking about those children that are growing without their mothers because they had to flee to send food back, that are growing without education because public schooling in Venezuela works 2 days a week because teachers earn $1 a day and they need to get other jobs in order to eat, that are growing without health and food. And we have the generation that is suffering the highest levels of malnutrition in a century. That's our children right now. And it is because of them. It's because of saving lives that we're doing what we're doing right now. And that's why we're going to win. And the only thing I want to assure the Venezuelan people is that Venezuela is going to be free, and that's going to be achieved with the support
Venezuela.
of the States and the President
Venezuela.
of the United States. So I'm very grateful to be here.
Unidos.
We're facing challenging times ahead. We are prepared to do what it takes as a legitimate government. Edmundo González Urrutia and I have been in communication permanently all these days, and we feel not only with a mandate from the Venezuelan people, and that's why I'm here, and that's why I convey to the President of the United States, but also a huge task in front of us to prepare with other teams around the world and in Venezuela to take over government when the right time arrives. So thank you very much, and I'm more than willing to hear your questions now. So I believe there is a procedure that has been designed, so because we thought there might be some interest today.
Thank you very much. It's an honor to have you, Ms. Machado.
God damn. IWM new all-time highs.
We're going to open it up to the press. My question to you, Ms. Machado, is you know the Venezuelan people more than anyone, and that's apparent from the very...
That's the next president of Venezuela?
You know the Venezuelan people.
What the hell?
And that's apparent from the very strong support that they've shown for you time and time again. I wonder if you could tell us a little bit about, I mean, as you know, your country has been destroyed by socialism, Cuba, Russia, and Iran looting.
Damn, what the hell?
Your nation, your wealth. Do you see, and the primary victim of this has been the Venezuelan people, do you see a future in which, at all possible, where a free and fair election and return to democracy in Venezuela restores anything but a strong, staunch U.S. ally and a country that leaves behind the shackles of socialism?
Well, thank you very much. Can you hear me? I'm hearing like an echo here. Yeah?
We hear you.
It's fine? Okay. Well, I'm very glad, no, there's a problem with an echo, right?
Yes. Different microphone. Did you answer the podium? Yes.
No. So comfortable sitting down. You want me to stand up? You prefer that I stand up? Yeah. No? That's better now? Okay. Look, I'm very glad we started with this issue because I understand that there are many concerns regarding the transition in Venezuela and compared to previous events in all parts of the world. And I always insist in the difference between what is Venezuela today compared to Middle East countries that went through change in governments or regimes. We're talking about a society that is perhaps the most cohesive in the region. I would dare to say even in the world. I ask you to think any other society in which 90% of the population wants the same. Not only that they reject the actual regime, but we want the same. There are not religious
shit's so squeezing every day. Not all time
within the Venezuelan society, or racial, or regional, or political, or social. I mean, there was one...
I'm in 16950. SPX put into tomorrow here.
And that was
announced in the WhatsApp group 1 minute ago.
And it was that demand that I heard all around Venezuela.
MACD looking so fucking sus. Do they break the range up or down?
The primary process that made me realize how powerful it was to unite a country, to tear down the barriers that the regime had built to divide us. You know, between rich and poor, black and white, left and right, military and civilians. And we brought a country back together. That's why I always said, you know what, Maduro's gonna go. We're gonna get rid of him one day or the other. What's important is the country that's coming afterwards. And it's a country based on shared values. We want to live with dignity. We want to live with the result of our work, our effort, a society based in
Maduro gone.
You know, the Chavista who's in certain place at certain time. Women do not want handouts. They don't want to live in a box, you know, give their children a box of food that has a high cost. because then you have to lower your head and repeat what the regime wants you to say or dress as they expect you to dress. They want to live with their job well done. That's dignity. And that's what Venezuela deserves and wants today. And that's what we represent. So, of course, the result of this hard process will be a society based on these values. A society that is profoundly pro-America. And I want to insist on this.
America.
Yes, she's a communist.
America.
She is the main ally and
Mucho,
representation
nosotros
of the
mucho
Russian
love,
regime, the Chinese,
mucho
and
love
the
America.
Iranians. But that's not the Venezuelan people, and that's not the armed forces as well. So I am profoundly, profoundly confident that we will have an orderly transition. This is a complex phase we are right now. Some of the dirty work is being done by them. But then the result of a stable transition will be a proud Venezuela who is going to be the best ally the United States has ever had.
The bestest. The bestest ally the Estados Unidos needs.
We're going to have a person come up and...
Sorry for that. I'm gonna leave.
Thank you very much.
Hi, thank you very much for coming. I realize there's a lot of interest. We're going to try to get to every question. I'm going to go through a list. There's outlets that have more than one reporter accredited, so I would like to please ask you to raise your hand so we can get one of our kind staff to bring the microphone to you as I call you out. Julio Vaqueiro from Telemundo, please.
Telemundo.
Hola, Julio.
Hola, María Corina. Qué gusto verte aquí en Washington, D.C. El presidente Donald Trump, su gobierno, está hablando y trabajando con Delcy Rodríguez, así lo han dicho ellos. Usted le dio el Premio Nobel de la Paz al presidente Trump en su encuentro ayer. ¿Qué le dio el presidente a usted? ¿Un reconocimiento de su legitimidad como opositora con el mandato de encabezar esta transición en Venezuela?
Gracias, Julio. Yo no vine a buscar nada para mí. Vengo aquí en representación del pueblo de Venezuela que eligió a Edmundo González Urrutia como presidente electo. ¿A que lo baje? Ah, los teléfonos, ok. Entonces, repito, yo vine en representación del pueblo de Venezuela, que nos dio un mandato. Primero el 22 de octubre del 2023. Ay, no. Ya va, chicos, un minuto. Vamos a ¿se escucha bien o no?
Cambiamos.
Vamos a cambiarlo. Ok, ahora está mejor. ¿Ahora sí? Ok, voy a repetir la pregunta la respuesta a la pregunta de Julio. Les decía, yo vine a reunirme con el presidente de los Estados Unidos en representación del pueblo de Venezuela, que nos dio un mandato. El 22 de octubre del 2023, cuando yo recibí más del 92% de los votos en las primarias, y el 28 de octubre del 2024, cuando Edmundo González Urrutia, en las condiciones más extremas y fraudulentas, recibió el 67% de los votos de los venezolanos, y lo probamos. Vine a
If something happens here and my view count goes back up to 15 to 20, I'm going to talk shit and be like, candle traders, get the fuck away from me, alright? I'm just letting you guys know now. So, people that are here, please prepare yourselves mentally. If there are 10 or 15 or 20 people that comes back based on candles.
Hay un proceso muy complejo en marcha, lo sabemos. Pero se están dando
just letting you guys know.
Evidentemente,
okay?
para los venezolanos
I'm so fucking tired of candle trading fucking channel hoppers. So they're the fucking people that always talk the weirdest shit, right? They're the people that are always fucking hating, and they're the always people that are never hitting the like button, yet they come back to watch it. So just letting you know. Candle traders, dunzo. Mentally, spiritually, and emotionally.
Hola, Maria Corina. Thank you so much. It's great to see you in person after seeing you virtually for the last few years.
People understand.
Two questions, if I could, similar to what you just answered, but in English.
Just so you know, I don't give a fuck if this shit goes higher or low. I'm just letting you know that's what's gonna happen. So I'm gonna just straight up say the market is frustrating people out right now.
And positive language about Delcy Rodriguez. The CIA director was just there. So what's your message to the president and to the United States when U.S. policy is still to support the Chavismo government that still exists in Caracas? And I have to ask, your statement last night
just
said
out of the tree
you felt
and
like
strong
you
as
were
hell
going
gone.
to die at one point when you left Venezuela in the boat. Can you just
Venezuela.
tell us exactly what happened in that moment when you were in that boat?
From the LOD to the HOD.
Well, regarding all the details of how and when I left Venezuela, for the protection
Venezuela.
of those involved and
Viva la
help me
Estados Unidos.
get here,
Let's see something.
I
Por favor. Señorita.
Wait
El Marqueto,
until
por
the
favor.
regime is no longer in capacity to harm them, to share that in detail.
See a pequeño pullback and then a nuke.
There was a certain moment in
Let's
the
see a
trip,
pequeño pullback and then
in
figure it the
boat
fuck out.
where
Come on. El
I
por
was
favor.
hurt because the waves were very high, over 6 feet, and there was a strong wind, and we got
I said
lost
El por favor.
in the ocean.
Well,
We lost the sign of the GPS, and the satellite phone stopped working, and Starlink antenna did not work as well, all at the same time. So it was very
Starlink.
risky, dangerous, and scary moment, I have to say. And it lasted several hours. But at the end, as I say,
Is Venezuela backed by SpaceX?
Probably. Ahead.
Bears are pushing off of 11:45. Let's see where this goes. Time is 11:50.
I know that someday
Technically, there's no
able
confirmation rejection here
to
at
tell you
all.
the
They just
details
fucking
and
ran this
thank
bitch on
personally
IW, or
all those
they
that
ran this bitch,
risked
so
their lives
let's see if there's
in
any
order
sort of dump
for
or
this to
pullback or
happen,
what.
because they knew it was very important,
No cycle
very
confirmation, just
important
gone. They're just
for
doing
our
it.
cause that I was able to leave my country at that moment. Regarding your
Spike
first
down, spike up, now what?
question, look, this has nothing to do with a tension or decision between Delcy Rodriguez and myself. This is about the cartel and justice. This is about a criminal
that don't go along with Greenland, and I wonder if that's something that you've been drawing up and working up. Is that going to happen?
So the president has been quite clear over the past year that we're going to use tariffs effectively to protect jobs here and get wages up here, but he's also going to use it geopolitically. Presidents for decades have always used sanctions authorities to address geopolitical matters. Tariffs is just in the long line of tradition of presidents using American geopolitical power to achieve American geopolitical goals. And so I'll continue working with the president on whatever he needs to do on that front.
Yeah, Ambassador Greer, it's David Faber. You know, on this question that Sarah asked, and that was raised, I guess, by the president, the idea of the Chinese building automobiles here in the U.S. I mean, is that something you could actually ever see? Obviously, you've been an outspoken critic of the Chinese system that uses state subsidies to, I think your words, chronically oversupply global markets. But could you ever imagine a day where we had the Chinese automakers here in the United States?
I think it would be hard for them to operate here because all of our cars now, right, they're like computers on wheels, and there are rules and regulations in place in America about the cybersecurity of our vehicles and the systems that go into those. So I think it might be hard for the Chinese to comply with those kinds of rules. The reason why so many countries want to come and build here,
They said computers, our cars are like computers. Damn.
And all these workers here. I just
They
heard
can
today that
control.
85% of auto workers voted for President Trump. This is the kind of situation where we want to make sure that the jobs are protected, that we are building here, and that's why the Chinese, the Japanese, the Koreans, everyone wants to come build.
The damn
cars here in
Chinese.
America. This is the consumer market. The
damn
tariffs protect
Japanese,
jobs
the damn
here, and this is
Koreans,
where
the
they
damn
wanna be. So I'm not
Chinese.
surprised when I hear that kind of interest in investing in America.
No racism, guys. I'm Korean. I'm Korean American. No
Let's get to Kevin Green, who joins me now, senior markets correspondent, to talk about some of this data and not top-tier economic data, but we've got some NAHB housing market index data that's just come out. What are you seeing there, KG?
Yeah, we actually do see this print moving to the downside here, coming in at 37 for this diffusion index. Market was looking for 40, so the lower the number, the less optimistic the market is around the
housing index.
Industry just in general. And this is actually from home builder sentiment. So this is actually the lowest level that we have seen since the September print, and we are seeing obviously some pressure in the broader market when you're looking at the S&P 500. This is not a huge market mover to say the least here, but this just kind of gives you a little bit of insight into the maybe differences that you are seeing from home builder sentiment compared to what consumers are actually doing right now, as you do see refinancing activity as well as new home purchases and even existing home purchases starting to stabilize and even ramp up here a tad bit as mortgage rates are starting to move to the downside. But right now, once again, that print kind of signifies the fact that the market, especially when you're looking at home builders, are a little bit less optimistic as far as the outlook for the housing market, at least for now.
Yeah, it just seems like as far as this sort of meaningful recovery, it's just slower than everybody had anticipated. And we start to see some sort of positive, encouraging signs there. But I think, you know, it's still got a while to go
Slowly
here. But
turning into bearish territory with the MACD volume turning bearish.
Sort of performance this morning. Obviously, we got off to a bit of a stronger start. We've pulled back a little bit here on the S&P and the Dow. It looks like net we could potentially break even for the week. Just talk us through what you're seeing out there and what's behind some of the price action this morning.
Yeah, to start off the session, obviously we got to around that 69, 65, 69, 70-ish area. We have seen some selling pressure ever since. If you're looking at the difference between up volume minus down volume for the S&P 500, we are kind of hitting some negative territory here, or basically some outflows. And this rotation trade that has been very strong seems to be weakening at least for today. So some profit taking maybe, also maybe redistributing some of those funds over to the technology sector. That also could be the case. We have January expiration taking place today as well. So a significant amount of premium is going to be rolled out of the market. And then we could also see, once again, a little bit of heightened volatility leading up to the Fed meeting. So I think that's exactly what we are seeing right now. I would expect actually a little bit of a volatile day. Honestly, it might be to the upside, might be to the downside. We actually talked about the ranges when it comes to the options flow this morning. If you're looking at top to bottom ranges, we're looking at a 100-point range.
This motherfucker's like my age, bro.
Pricing in less than a 1% move in the S&P 500. So there's definitely a little bit of a difference between what traders are doing as far as positioning and what we're seeing as far as the price action.
I love KG.
Okay, and obviously we got some earnings out this morning from the regional banks. What were some major takeaways from that?
Yeah, you actually did see a little bit of a difference. PNC actually had some pretty decent earnings announcements that came out this morning here. They were able to top the EPS expectations
like
for
Tom Lee, bro.
Q4, coming in at $4.88, and the record Q4 revenue is sitting at $6.07 billion, a 3% increase on a year-over-year basis. This is driven by the lending activity as well as the M&A activity, which they had a little bit more exposure there. And it does appear that their net interest income came in right in line with the street's expectations, and they are optimistic that that is going to improve over the next couple of quarters here. Now, for Regions Financial, a little bit different. They missed both on the top and bottom line.
Going up now. Let's go, baby.
On the net interest income here. They are seeing some compression in some respects, and they also are providing a little bit more of a cautious guidance. So at the end of the day, Regions have actually done pretty well over the last week and a half or so, but you are seeing a little bit of a difference, and I would expect next week, as we get more of these regional banks starting to report here, you will see a difference because of the portfolio structure for a lot of these companies. PNC, more exposure to commercial businesses rather than consumer retail for that matter. Regionals, more of the traditional, taking in deposits from consumers and then lending it out, maybe not as diversified of a portfolio like PNC.
VWAP incoming.
Okay, let's just talk about the commodities patch. Obviously, a lot of moving parts in that market this week. We know the story largely for oil, obviously with metals. It's been a bit sort of up and down, but you're looking across the ag space this morning and some of those adjacent products. What stands out, KG?
Well, it's the agricultural stocks pretty much across the board. Not only if you're looking at the industrial agricultural stocks like Deere, but also if you're looking at meat processors and even grain processors like an ADM or JBS, continue to actually run pretty aggressively over the last week and a half or so. Keep your eye out on this. This is the MOO ETF, the best ticker symbol that's out there in the market so far. A 5-year weekly chart. We are actually seeing a breakout to the upside above the $76 level. Now, this is a weekly chart, so the 200-week moving average will act as an area of resistance, but it does appear that this is trying to base and potentially break out. Some of the top holdings, obviously, Deere. You also have Bill as well. There's also a wide range of companies within this ETF here, but the agricultural stocks have been very compressed. Prices for soybean, wheat, corn have been, for the most part, compressed. But I think the market's optimistic that the U.S. government's going to continue to ramp up stimulus measures for a lot of these farmers, which could also then flow to these businesses. So this might be one of those stealth movers in 2026 to keep an eye out on. I know we're talking about memory stocks, we're talking about tech, but don't forget about the ag businesses that have been, once again, oversold for considerable
now cycle happening. I don't know if this is going to dump. I don't know if it's going to bounce.
Movers. I love that ticker
code. It went to VWAP. It went to POC.
Space this morning. Obviously,
now
as I mentioned, it's been a bit sort of up and down this week. We're seeing a pullback across all of them today. In fact, silver, which has really been a standout, down almost 4% this morning at 88.
92.13, so 12 is lower than 12.
So for silver, it's hard to call a top here, right? The trend is definitely to the upside right now. Higher highs, higher lows, very strong volume. The implied volatility is at record highs at this point. But if you're looking at a chart, yesterday we did have a hanging man candle, which is basically a hammer candle at the top of the trend that could signify a reversal. We might actually have another one today if we close at these particular levels. We have the RSI actually making lower highs, so a bearish divergence that has also taken place here, and MACD trying to hinge. We don't know if this is going to be the top, and if it's going to be, it will be an aggressive move back to the downside. It's not going to be the 20-day moving average that I'm really focusing on. It's going to be the 50-day, which has been a key area of support over the last year, or even 2 years for that matter. So let's see if this actually does turn around. I think if we do see a break here in silver,
this is the 0.5 fib, I think.
That's also going to coincide with the break in the broader equity market.
This is the setup for right now.
So far.
Pulled back to the 0.5 fib.
Good to know, and something to obviously pay attention to. Thanks so much for getting us across some of those stories for us this morning, KG. I'll speak to you a bit later.
They pulled back exactly to the 0.5 fib VWAP. All right, now market wants to decide whether it wants to go lower than VWAP or not, or VWAP wants to bounce. Everyone above VWAP in danger. Everybody above VWAP in fucking danger. Why? NVIDIA, Tesla still bearish. IWM is up the roof.
Steve Leisman. Steve.
Sarah, thank you. Fed Governor Bowman, the Vice Chair for Banking Supervision, making some dovish remarks, saying the Fed
everybody above VWAP in danger because they could pull back and destroy all this shit, and then they can destroy the puts later.
She says the Fed should avoid signaling a pause here without identifying what conditions have indeed
fucking ultimate trap. I don't know. This is the 33rd bearish cycle, so it's dangerous as shit here too. I don't play the 33rd. I left the 33rd clearly. The market is deciding.
We're not satisfied with the 75 basis points of cuts from last year. She's concerned businesses may need to begin laying off workers and notes that private payroll
I feel like this is going to bear trap here too, but I mean, we'll see.
Using some other
it's going to cycle and then do
in
something maybe.
Job data. So it could
no direction shopping.
In the
no direction shopping on everything.
Quote, the labor market can appear to be stable right up until it doesn't. Her approach to monetary policy says remains intentionally proactive and forward-looking. Inflation on a sustained trajectory, she says, down towards the Fed's 2% target. She does some work where she takes out the tariff effects. She says underlying inflation mostly reflects tariffs, and the effects of them will fade over this year. She sees policy as modestly restrictive and expects the economy to expand at a solid pace. Deregulation, lower taxes, and a more favorable business climate, she says, will boost supply and offset tariff effects with an increase in productivity. She's concerned, however, that
I
disappointment
don't know, dude.
AI
I say it
could
every
lead
day.
to a
I can
sharp
say it again.
decline
Fuck
in
candle
equity
traders
prices.
because it has
So,
no fucking
Sarah,
impact
I
on
think
me, dude.
predictably
I
we
actually
haven't
live my
heard
life
from
like this. So fuck candle traders, fuck
Bowman
candle
since
traders, and fuck
September
candle
on
traders, bro.
monetary policy,
Nothing will ever
and
change.
she's
Fuck
leaning
candle
against
traders.
some of the commentary we got
There are always
yesterday,
the people
which was
looking for the
all in
easiest
favor
shit
of a
out. They're
pause and
always
maybe
looking
an
for, you
extended
know,
pause
something to be
from
fucking
three Fed
given.
presidents.
They're always looking
So
for,
does
you know,
this
doing this
suggest
shit,
we
never
could
hitting
get
like buttons. So
more
fuck candle
dissent
traders,
if
fuck
they do
candle traders,
pause in
fuck candle
January
traders. It's
from someone
literally
like
them
that?
against me, so the world against me.
It's
Fuck
possible.
candle traders,
I
fuck
think
candle traders,
you
fuck
make a
candle
good
traders.
point, Sarah, that,
Yeah.
that Bowman may be
I'll say it
setting
every
herself
fucking day. I
up here
love
to
it.
say I am not in
Candle
favor
traders,
of the
fuck candle traders,
January
fuck candle
pause,
traders, bro.
especially because we don't
Never
get
me.
any
Never
more
me. Never
jobs
me.
data other than the weekly jobless claims until then. So
Sick
she
shit,
wants to be very
Never me, never
proactive
me,
and has
never
a
me.
lot of concern with the job market here, making some really cautious and concerning remarks about the outlook for the job market.
Yeah, great. Because I assume Myron will dissent for a cut if they pause, and so it'll be interesting to see if others follow that lead. Steve, we do want to talk to you about this breaking news that we got last hour around the race for the next Fed chair, because President Trump actually said this about Kevin Hassett. Listen.
I see Kevin's in the audience, and I just want to thank you. You were fantastic on television today. I actually want to keep you where you are, if you want to know the truth. Kevin Hassett is so good. I'm saying, wait a minute. If I move them, these Fed guys, certainly the one we have now, they don't talk much. I would lose you. It's a serious concern to me.
And just like that, the betting odds really...
What is that? Oh my God. And just like that, what they do? They fucked over it.
Changed for the next Fed chair. Hassett's odds plunged on Kalshi, and it certainly helped the chances of Kevin Warsh. The two Kevins is what sort of the president had been saying. But if you want to know the truth, he said, I'd like to keep you where you are so you can keep communicating. What do you make of it?
That's fucking crazy.
Well, I think there's a bunch of things that are in play here. There was a decline in Hassett's odds following the issue of the criminal subpoena of Fed Chair of the Federal Reserve, the Federal Fed Chair Jay Powell. That seemed to be something that kind of, with the backlash, Sarah, as you know, created this environment where it became less palatable to the markets for the president to pick somebody who was seen as much more closely aligned with him, and kind of raise the odds already of the possibility of the president picking somebody more independent, because that's really the key concern that's out there. I also think it's somewhat ironic in that it's been believed among the candidates that the best way to get to that job would be to be on TV, and here's Hassett doing too good of a job on television. The president does make an accurate remark here, which is that once he's Fed chair, it is probably not appropriate for him to go on TV promoting the Trump administration's policies in that position.
Right. So just getting that logic in real time. Steve,
ain't nobody want Kevin Hassett as Fed chair. Get out of here.
President Trump is touting great financial numbers. We need an economist. So here is Brian Westbury. All right, Brian, Trump says inflation has been defeated.
This shit's yesterday. Old news.
Welcome back. Real estate mogul and entrepreneur Grant Cardone hoping to change the game of investing with new plans to combine cryptocurrency and real estate into one vehicle. Cardone also looking to take his company public this year while holding the largest corporate Bitcoin treasury. Joining me now, the man himself, Cardone Capital and Cardone Training CEO, Grant Cardone. Grant, great to see you. Welcome back.
Always good to be with you.
So how do you combine real estate with crypto? Tell us your plans.
Yeah, so we're basically taking large real estate complexes that have income on them and combining them with Bitcoin to give us a situation where we have both liquidity and illiquidity. The Bitcoin doesn't cash flow, Maria, as you know, but the housing does, and it's one of the lowest sharp scores in the world is apartment complexes. That's why so many insurance companies, very, very stable asset class, a way to protect your capital and get cash flow. And then you combine it with Bitcoin that is very volatile and very liquid. You get something that would normally do 12 or 14% that could potentially do 35% a year and be a very safe investment.
So, I mean, we're about to talk with the CEO of Coinbase, Brian Armstrong, and I'm going to ask him to lay out how digital assets will change and change the way people handle money. What do you think the future looks like when it comes to crypto and digital assets as the Senate and the House try to zero in on the regulatory framework around this new world?
Yeah. Well, I can tell you, Maria, President Trump and the administration is very aggressively looking at how the American people can have their money, their financial system stable and doing well for them, both in tokens and Bitcoin and the cryptos, and also in housing. They were in my offices this week asking, hey, how can we loosen up this housing situation before Jerome Powell leaves in May. And also the tokens came up.
Ain't nobody doing that, Grant Cardone. Shut your bitch ass up, bro. Fucking lying ass motherfucker.
On tokens, I think and believe, and Larry Fink has said this as well, all assets will be tokenized in the future. We're looking at actually both going
that may
public
be true.
with our Bitcoin,
All right, the next currency may be
strategy,
cryptocurrency in the future, but
tokenizing
this
the
is not the
real
future yet.
assets themselves and having both a public company and a tokenization. So this has happened. I'm 67 years old. This is a new world of finance. For all of you seniors out there or older people, look, the world is going to change in finance just like it did in cars and phones.
67 years old.
Well, what does that mean when you say, because I think that's what Coinbase believes as well, that all markets are going to be tokenized. What do you mean by that? How does that work? We'll get a piece of one share, a token of one piece?
Yeah.
How does that work?
So imagine we just did a large project, Maria. It was a $366 million project. We bought it from Blackstone out of bankruptcy. We would take it, if we wanted to, just for keep it simple, we would turn that into 366 million tokens. So imagine someone in Canada or Costa Rica or Singapore wanted to be part of Grant Cardone's real estate Bitcoin hybrid, but they can't do it because they don't have access to either the deal, the fund, they don't live in the United States, or they don't have $200,000. Well, they could now with $1 a position in that fund, because the coin allows me to fractionalize the investment down to tiny pieces that that basically democratize great investment.
So this is 1929 on real estate, bruh.
President Trump is touting great financial numbers.
NATO.
1929 on real estates. Cool.
NATO panic activated. President Trump wants Greenland, and the man always finds a way to get what he wants.
The European allies see the writing on the wall and have now deployed troops from France, Germany, Norway, and Sweden to conduct two-day joint exercises in a show of support for Denmark and to flaunt some military chops in the event of a takeover.
I don't know about you, that doesn't scare me.
They're down bad. They're down bad, guys.
This comes one day after Vice President
down
Vance
bad.
and Secretary of State Rubio
They are
met
down
with
bad.
Danish and Greenland
God.
officials at the White House.
The Europeans
all
are stepping
parties
it up.
walking away acknowledging pretty deep disagreements.
But the
Bears are
Interior
stepping up
Secretary
trying, but
says
I don't know if I
it's
trust
pretty
this shit
simple
anymore.
why Greenland is so strategically important to the United States.
Think about Alaska, which we also purchased, is so strategic now, both in terms of energy, but also in terms of our military bases there. And the same thing with Greenland. These are like two bookends that protect North America. And as you know today, we're in an era of unmanned warfare. President Trump said today the great leadership that he's providing Commander-in-Chief, the Golden Dome, we need Greenland to make sure the Golden Dome is going to protect America.
Joining us now is former Deputy National Security Advisor during Trump's first term, KT McFarland. KT, always good to see you. All right, so when it comes to Greenland, I would say that we're still a ways from getting to yes, whatever yes might be in terms of our interest.
I think there's a lot of hopers here.
How do you see this playing out? Are we talking about takeover? Are we talking about cutting some kind of financial deal that gives us more rights? What do you say?
A lot of hoping here, too. We're just
I think we get there. I think we get to yes. And we probably get to yes with a financial arrangement.
you know, whether we buy Greenland, we've been trying to buy Greenland, by the way, since Abraham Lincoln. If we buy it, then we would have complete control over how we do the defensive situation. But maybe we have something halfway there. Maybe we just have control over who's there and who's not there.
Greenland
the reason
since
this
Abraham
is urgent
Lincoln.
is because the Chinese and the Russians are making inroads. They want to be in Greenland, not just because they want to develop the natural resources, the rare earth minerals, but they want Greenland because of its strategic position. You know, Brian, if you took a globe and turned it on its side so that the Arctic Circle was the center, you would see how essential Greenland is to not only to our defense, but a maritime trade route as the climate changes. But frankly, the Europeans should be applauding us, because if we build a golden dome, so this would be a golden dome that would prevent, it would be a missile shield, so no Russian or Chinese missiles could get to the United States. They couldn't get to Canada. They couldn't get to Europe. And why? Because we would need Greenland as a major base for that golden dome.
KT, I want to move on to this. So 4 more Democrats in the Seditious Six video now say that federal prosecutors are investigating them. Just a reminder for everybody, in the original video, they told, or excuse me, encouraged service members of the military to refuse illegal orders. And now we find out that they're under investigation. This is Crow, Goodlander, DeLuzio, and Houlihan, congressmen all. But do you think that was their motive in the first place, putting this video together, so they can play victim?
Yeah, and they also are just terminal cases of the Trump derangement syndrome. You know, if you think about what they asked for, so these are all veterans, American military veterans, they should know better. But what they've said is that if you're a member of the armed forces, not only do you have the right, but you have the responsibility to disobey orders if you don't think they're legal orders. So what you're telling some 18-year-old kid is, okay, you have to decide that order, direct order you've been given, you're going to obey it, you're going to not obey it, and it's on you if you get it wrong. And frankly, it just gets to the whole heart of, are we going to have a military or not? If we're going to have a military, you have to have a chain of command. And if you have a chain of command, that means you follow the orders that your superior officer gives you. That superior officer might be held responsible for the orders that he's giving, and ultimately the commander-in-chief. But what the Seditious Six have told people is you don't have to obey the laws of the military. You don't have to obey any of those things. And what they are really doing is encouraging the collapse of the American military.
You know, I don't think anybody actually listened to them, thankfully. But what gets me about the video is that they pretend like they're doing it in good faith.
Yeah,
you know, like, no, we're just telling you what everybody already knows.
It seems like the 10 or 15 people that I came from the other community from like a year ago, they all were like, oh, I'm trying, I'm trying.
In the military,
but they all just wanted things given from the other guy. Like, just fucking be told this and that, bullish and bearish this. And every one of them gave up.
One more sign they're holding up at a protest.
That's the sign to me that, you know, the majority quits. The 94 of you guys here, bro, we started from 180, 150, or 162 weeks ago or a week ago. I will just say,
team that went in to get Maduro,
yeah,
and you have to
you guys
think,
are
well,
doing
should I do this? Should I take
your
this order?
best
Should I not?
and learning
It would just
because you want to do it yourself. But I will straight up tell you,
of having a United States military. And again, these people should know better. Why are they doing it? I guess they just hate Trump so much, or maybe they're doing it because they're going to fundraise off of it. But they're not doing it to help the women and the men in the armed forces.
Whatever.
I'm a military mom.
It's just
my daughter had to somehow,
people from that community that I brought over here when I started here.
Is this not a legitimate order? You know, I could be called to court if I get this wrong.
There was like 20
it
people
just
that wanted to
undermines
just
the whole
follow
principle
and just, I guess,
of the chain of command
learn,
and the United States
but they all
military,
gave
where
up.
we have civilian
That shit
control
straight
of the
up
military.
tells me that, you know, this is not for everybody.
Opinion that you might have of what's right and what's wrong, and you obey what you feel like.
Not for everyone.
They know that.
It's actually designed like that.
KT McFarland,
The statistics and the mathematical things, what's going on in life says that 85% or 75% of the people will never know and will always give up and will not know and want to know what is going on. But hey, that is literally what is going on in our life and our world. I just want you to know that. That's crazy.
AI and bring in the country's biggest natural gas producer. Joining us now is EQT CEO
80, 100 years, 200 years. I don't think it'll ever change.
Is going to be needed
as long as we are who we are in humanity.
AI future, Toby, what does it look like right now?
Humanity sense of thing.
Well, we are still convicted that this is going to be a major source of energy demand in this country. Just to frame this up, the power needs for AI are going to require around 100 gigawatts of power demand. That's coming from Chris Wright. That's the equivalent of adding 20 New York Cities worth of electricity to the grid, and we need to do this at a time frame that allows us to win this AI race. But, you know, there's tremendous signals that are being sent that should cause a lot of people concerns, starting with the fact that Americans' energy bills are up over 35%. Electricity prices specifically have increased. PJM capacity auctions is going for almost 9 times what they have historically. There are a lot of, there's governors right now meeting with the president to get control of this issue. There's a lot of signals here. The alarm bells are ringing. It's time to wake up and get back to getting infrastructure built, which is going to be the key to meeting this demand and keeping energy prices affordable.
I was going to say, how do you do that? How do you make the energy prices affordable? I mean, is the administration on the right track here? Do you have suggestions on how to do that? Because building out more infrastructure takes time.
It does take time, but I think you could look at the track record of industry. When market forces are allowed to work, they can do amazing things, like transform America from being energy dependent to being an energy powerhouse on the world stage, going from exporting zero LNG to being the world leader in exporting LNG. And when it comes to the power specifically, over the last 15 years, this country has added 14 BCF a day worth of natural gas power generation. When you look at this in context to what needs to be built to shore up the grid, not just for data centers, we're talking about a 10 to 18 BCF a day increase in natural gas power demand. So this is something that can be achieved, but it's not going to happen as long as political force continues to override market forces. And in energy, there's been no bigger story on how political force has blocked, stopped, and canceled energy infrastructure that are trying to meet the market signals that are screaming, but they've been shut down.
All right, well, let's continue this conversation with MetLife Investment Management Chief Market Strategist Drew Mattis. Drew, it's good to see you. I think you similarly, we just heard the comments Michelle Bowman was making, have some concern that weakness in the labor market could get out of hand and maybe, you know, requires a little more attention.
Yeah, I read her speech and I thought to myself, this is something I could have written. You know, and you know, she's expressing and articulating the concerns that we have, which are, you know, people are very optimistic on AI, maybe too optimistic, and that creates a risk on its own. The labor market doesn't look strong. You know, anyone who thinks the labor market's strong hasn't tried to find a job recently, I suspect. And you know, the inflation numbers just, you know, aren't that worrisome to me. I mean, you know, we're not seeing a huge amount of volatility in inflation, and if inflation's elevated but it's not really volatile, then it doesn't really affect corporate planning, right? You know, companies are smart, they can figure it out, and if you put a 3 somewhere instead of a 2, it doesn't make a difference in terms of, you know, the ability to plan, right? It might change some of the economics and things, but it doesn't change planning capability, and that's what actually is damaging about inflation.
What would you say, though, if someone says that all makes sense, but the last tick in the unemployment rate was down, not up? We actually saw the last monthly job growth number was kind of in the zone where people feel like it can be to actually keep unemployment suppressed. And look, rates are at 3.5 to 3 3/4 on the short end in the Fed funds policy rate. And how much lower do we really need to get, and how much of a hurry do we need to be?
Well, so I would say that the 3-month average on job growth is negative. Right, so that's kind of the first thing. You know, I don't think anyone says the break even for job growth is negative. So if you don't believe the job growth break even is negative, then the unemployment rate's probably going to move higher, right? And you're always going to have volatility in month-to-month data, so it's really kind of where's the trend, and the trend has been towards higher unemployment. And I think that that's actually one of the more obvious calls out there. But yet, you know, people are kind of looking at it and taking the other side of it, which, okay, you know, good luck with that. Unemployment's going to move higher in the next couple of months, and you know, there's just not enough activity in terms of hiring. to kind of move the unemployment rate lower on a sustained basis.
But you know there are other potential reasons for it right now. Number one, look at where we are in the cycle. Full employment. Number two, AI, which you mentioned. Maybe that's keeping people from hiring new workers as companies are figuring out what they can do with AI. But also, and this is a really big one, the supply of workers is just down. I mean, we know what's been happening with immigration.
I mean, what's better,
instance,
you know what I mean? Living in reality or fucking being lied and then being, oh, this is bullish,
that would suggest lower hiring. All of those are valid cases, especially when you put it next to, Drew, the jobless claims numbers, which continue to show that there's no spike, quite the opposite in firings.
I think that's better than fucking
but
living in a lie.
there's a disconnect there, right? If it's workers kind of leaving the country, they wouldn't have been able to file for initial claims anyway, right? So those are kind of two different things going on there. The other kind of thing is that if you look at labor demand, that's actually where we're seeing the weakness. Right, and we can actually break it into demand and supply, and we can see weakness in the labor demand side of things. And the AI story is kind of interesting, and obviously the market's kind of glommed onto that. But if you look at kind of relative unemployment rates for example, men versus women, and then you look at kind of which ones are elevated for youth men versus women, it's pretty hard to kind of see an AI impact actually feeding through in the data. It's actually something else going on.
Is an AI ETF. If you kind of look at how correlated electrification and power and
why we spend about 2/3 of our time talking about it here.
You should. Yeah, maybe 3/4. Yeah. So I think that
SMCI, Moderna.
If you don't get Goldilocks on the capex, meaning people need the capex to come up some to believe the return.
But we are getting it right now. You saw TSMC yesterday. Couldn't have been better than what anybody expected. 52 to 56 billion, above what had been expected, and going up from there.
But if it's too hot, so the Goldilocks also means like Microsoft can't come on and say we have negative free cash flow now, because then people be like whoa, let's. Right. So I think it's got to come up. But not so much. And Taiwan Semi, I think...
They don't, by the way.
Yeah.
Oracle does.
Yeah, Oracle does. Yeah. Look, I used to be a semis analyst for a long time. I followed Taiwan Semi for a quarter century. They're considered pretty sober. So I think people aren't as, pretty solid, and probably the most important asset on earth, probably Taiwan Semi. So, I think people give them more credence than maybe other... than like Sam Altman or somebody else who maybe has a little less gravitas in the game.
So your recommendation is to do what?
As things go up, unlike in the previous 3 years, I find myself getting more cautious. Some of it's the sentiment we talked about.
Some people are worried what gold is signaling too.
This is how I'll give you a risk thing that came up. Do you think gold is correlated to the AI trade? I do.
It appears to be now.
I do. I wouldn't have said that 2 years ago. So meaning like if you have a portfolio, you should diversify, right? And so to me, I love the healthcare overweight. I've been pushing that. It's been wrong. Was wrong for 6 months last year. It looks better recently, but I need stuff that is diversified where the estimates are achievable. Because the one thing I can measure carefully is the penalty for missing estimates is a lot harsher than the reward for beating. Estimates are high right now, 15 and change for this year, 30% earnings growth in tech. A lot of it's back half loaded. I suspect things are fine here, January and April, but the pressure mounts as we get into the second half of the year. Stocks are anticipatory. So the bear case is probably that, high expectations, everyone loves it, and missing is hurt. I think the Fed part probably isn't as helpful going forward, meaning do they cut the front end? Is it because things off to the moon, or is it like maybe they're only cutting from here more than 50 because things get bad? So I'm a little confused about how to interpret Fed, right? 3 years ago, okay, they're close to end of hiking, great, everything ripped in 2023, even though they were still hiking. It's 3 years later now, maybe like you're not as psyched if they keep cutting. So that's been, I would say, a lot of debate in my meetings of like, how much do I want the Fed to cut?
Although they cut 3 times, the insurance cuts were great for the market because they didn't need to, but they did.
The part that I won't ever fight is if they do balance sheet expansion, right? So when they talk about the GSEs doing what they say, 200 billion MBS, like we learned last time, like when they do that, like those things go up, right? And you see it from even, I would say, like tangentially exposed, Lowe's and Home Depot and other stuff. But look at like Floor and Decor and restoration, like anything with housing is ripping. And I do not think you will see that fundamentally come through in February and March or whatever. So that's the thing. It's like companies, software killed, the earnings aren't going to be that bad. Bad consumer ripping, the earnings aren't going to be that good. And so you try to timing when I should kind of close the gap on that. That's where my head is. I'm trying to think through that. But I think things are fine now. Risk taking is fine. And I like healthcare because I know it's diversifying. And so I'm sticking with that theme in most of my meetings.
What a cycle we're doing here.
Joining us right now is Carol Schleif. She is Chief Market Strategist at BMO Private Wealth. And Carol, it's been a big week for earnings. We've got a pretty rocky backdrop. What do you think about where things stand? I know you're somebody who looks at this, and over the course of the year, you anticipate that stocks will continue to climb.
Yeah, first off, thanks for having me and happy Friday. And yeah, earnings have come in pretty well, if you will. I mean, there's a lot of other political wins, if you will, aimed at the banks and the financial services industry in general. But pulling through on some of the themes, the consumer stays resilient. Their balance sheets remain in pretty good shape. Companies in general are remaining resilient. And at least looking at the markets, you had a lot of the veggies first, if you will, in terms of tariffs and all the news early in last year. And we started to get a lot of the dessert coming at the end of the year, where you had some of the implications of the big, beautiful tax bill for both corporations and consumers coming through. You've got deregulation going on, which in particular is really helping the banks and aspects. So there's a lot of things teed up to really be supportive of earnings, because it's important to remember, while markets advanced last year, so did earnings. And we'll see a lot more over the next couple of weeks how earnings come in. But we anticipate the attention that our companies have paid to really cranking down on their margins or being very attentive to maintaining those margins should really come through in terms of amplified bottom line growth in aggregate.
Carol, when you're talking about the pressures that have been brought up against the banks and the financials this week, you mean basically the president's call for a cap on credit card interest rates that they can charge consumers?
Yeah, there's that piece of it. Although you've seen a lot of the banks, I would imagine what they'll do is they'll probably try to get together and figure out how can they take a step towards something that benefits the consumers, if you will, because it's pretty tough if you're a bank to come in reporting record trading revenues, record M&A revenues, and record revenues in a lot of other parts of the bank. And then
if 12 breaks, they're going to fucking dump.
Give somewhere on credit card rates or the things that consumers
range is very tight here.
I would imagine there'll be some sort of a lot of conversation around that, about how do we preserve margins and growth and things that way, and still move forward towards being more attentive to the rates we're charging consumers.
If those were to go through, there have been some concerns that, or at least the bankers themselves have said, they're just not going to lend money. They're not going to allow credit cards to be taken out by consumers. I spoke with Brian Moynihan from Bank of America the other day. He said anybody who's not well into the 700s in their credit score wouldn't have access to credit cards.
Why?
Is that a broader concern for the economy, or do you think that this is just not going to happen?
Well, I think it is a concern for the economy, but it's also important to remember that it's those top-end consumers that are doing something like half of the consumption, which relates to about 1/3 of GDP, comes from that top 10%. And that top 10% tends not to revolve their credit. So, and a lot of the reason they're spending relates more to where their asset values have gone, if you will, than where their employment is. So that piece of it in aggregate is probably pretty steady, but it is the other tiers, the other 80 or 90%, if you will, that do revolve, and there's issues there. And there'll be issues most likely if that continues. If you tighten up credit there, either you shift some of it to the buy now, pay later industry, or the access to purchasing and stuff dries up. So there's concern among some of the consumer companies from that perspective, especially those that are more heavily weighted.
Deciding when to break 12 was breaking. Now it's actually really bearish, and they're going to maybe go lower than
the market could get to 7,700. I realize you don't publish
somewhere here.
Those numbers,
most likely it's coming 690, 164. I think. Nvidia, Tesla must be pulling back on this.
Yeah,
yes,
because
Nvidia,
I mean, 7,700 would be roughly
SPX,
10-12% up from where you ended last year, and we expect earnings to grow that much. So even because we aren't expecting valuations to expand, if anything, we think there might be some pressure there. But we also think that in aggregate, you'll be able to generate good growth with less inflation this year.
Time is 12:30. This candle is very important. The fuck is this?
I want to go back to what Eunice was talking about there with Canada and China and this parade of other foreign leaders that have gone to China to try to make deals. When you look at your investment strategy for 2026, how much does Washington's decisions, especially where economic tools are concerned, factor into the allocations you're making?
Well, I mean, I think we learned in 2025 that Washington has a heavy hand in any area that it's delving in these days. So, of course, we have the trade tariffs that came in place and had a pretty meaningful effect on market action last year. I think there's a long tail to that. I think we're seeing it with all of what China is doing to reestablish trade ties or improve trade ties. I don't know if necessarily we can say that it's a new world order yet, but there's certainly shifting sands, and we have to keep in mind what that can mean for underlying company cash flows. We've seen companies be pretty resilient, of course, in this regard.
How are you weighing the macro geopolitical, or as the World Economic Forum put it, geoeconomic confrontation? How do you weigh that against the earnings that we've seen come out? And are you listening for color in the earnings calls?
They're playing around yesterday where I got in. That's crazy.
The bottom line
somewhere
for
here.
Companies.
Yeah, I mean, I think we have to pay attention to what companies are saying in terms of the ultimate impact on their cash flows. All roads, when it comes to investing, I think lead back to cash flows. What's ultimately happening for these companies' earnings, what's happening to their behavior, what's happening to their dividends and the like. And that's really how we determine how these companies are going to perform. So in some ways, I think this shift over the past week has been a healthy thing, because we've been moving from things that are somewhat tangential, somewhat indirect in terms of their impact on the markets, to what actually earnings look like. And I think that's why we've seen a sort of market recovery across tech. And of course, banks are rallying as well as their results come in.
The Taiwan semi-news yesterday seemed to, just sort of light a fuse under that stock, lifted NVIDIA as well. When you look at the rotation that we've been seeing away from big tech slightly, do you think that there's now time to get back in, that maybe has it contracted enough that you might see investors excited about what's to come in the future and moving this leg higher?
Yeah, I think the devil's in the details here, because I think investors rightly point out that technology looks very expensive and more expensive to its own history than other sectors do. But I think it's important to recognize other sectors aren't necessarily cheap. And when we start to peel the onion on technology, there's a number of names, especially some of those fan favorites among the Mag 7, that actually look pretty attractive. Their valuations have come down, particularly in the wake of kind of this November, December, early January malaise that they've been in. And yet, as we see with Taiwan, the AI trade is still very much alive. It still continues to deliver. So I think there have been some opportunities that have emerged within tech that allow investors to get a piece of this AI trade, not at the nosebleed levels that they would have had to pay, say, last September.
Okay, we're halfway through January now. What's your best idea moving forward?
Gosh, I mean, going forward, I would say I'm looking a little bit closer at some of the AI subset, just given that malaise that they've been in. I also think healthcare is a decent place to be. It has not performed so far in January, but it has a decent earnings profile. It has the valuation argument, and it has the defensiveness that you might want to see in a volatile market.
Ben, it's good to have you.
Hey, Mike.
Joining us now is Melius, head of technology research, Ben Reitzes. Ben, it's good to have you.
Hey, Mike. Great to be here.
Joining us now is
CRM. Damn.
Melius, head of technology research, Ben Reitzes. Ben, it's good to have you.
Hey, Mike. Great to be here.
I mean, the market is starting to obviously register a ton of concern in this direction. Software as a sector is probably at record underperformance versus the semiconductors last year or two. You say more to go. Why is that?
Well, I've been through this before. When Amazon came out, there was a whole cadre of companies that were like, no one will ever put their stuff up in the cloud. It's not secure. It's this. And they pounded they go, they got on this network and they go, this won't happen. They sent me hate mails, but their stocks never worked. The market got it right. It discounted the disruption
and
that was
coming.
And
back then, you're talking about stocks of the hardware
Dell,
makers.
IBM, well, the HPs,
sure, database
maybe
companies.
even Cisco.
Yeah.
I mean, Dell stock didn't work for 7 years and then had to go private. Yep. Michael's a friend now, but I don't think he liked me too much back then. I'll tell you this. These companies in software, they had it so good in the 2010s, and it's over. And I think people can see what's coming.
It's over.
The marginal
there you
cost
go.
of coding
It's over
is going to
for
zero.
candle traders.
And your traditional
candle
reseller
fucking
chat,
traders over.
Your traditional
I don't know when
doing
you'll
EV
learn.
to
It's
free
over
cash
for
flow,
you, man.
which is not even free nor cash flow because they give so many stock options that in order to buy it back, it's really a lot lower.
Nothing comes out of
They're
candle
getting their
trading but
comeuppance,
being over, man.
And people are seeing what's at the end of the rainbow.
So you say the marginal cost of coding is free.
It will be.
Will be. So first of all, what does that mean for Anthropic or something like that, where they're actually giving you these agents and
candle-based, no
running the
setup,
models?
bullish. Candle traders are fucking over, man.
It's good for them because they keep innovating.
Don't blame
on the
me,
models,
blame the market.
And what they do is they put out co-work, right? And for them, they can put those things out, and they're very competitive with Microsoft right out of the bat, And what it shows is that when you're an athletic, private company, and you can come out with stuff like that, it is disruptive. Now, Microsoft could win because of Azure and other things. Thank God they have that. But people are very concerned about the traditional franchise.
I mean, what I said to Brent Thill, who also was arguing this last hour, is that, the software companies, the Workdays, for instance, would say, these models, they don't have as much specialized data and expertise in what they're doing as they do. And so eventually, if AI is going to be about trust and data, that they'll be in demand.
That's nonsense. Whoever owns the data is the winner, and the ability to do an agent and the coding will be a commodity. And the data connectors, those who connect the data, AI is going to get so good that you're going to be able to have AI first, agent first startups. Maybe not this year, maybe not next year, but within 5 years, do things that you can't imagine right now. And people are seeing it. The stocks don't work. Our job is to pick stocks, and these companies that pound it, it's not, the stocks know. Companies are not paying extra for AI. We were supposed to have all this ARPU growth. It's not happening.
Yeah, it's interesting. I mean, I'm not sure it's true across the board, but I do wonder if a lot of the enterprise software companies are going to run into this thing where their customers kind of didn't love them, in terms of how they were paying and everything else.
I have some points on that. You see, we did this 2 years ago. We made this call. And the thing that really bugged us was that the software companies raised prices since COVID 40%, higher than the rates of inflation by a lot. They had fake seat growth due to COVID. And that's even before AI. So if I wrote that report, you'd be really upset. And so much of their earnings were stock options. I think, right now, Adobe, Salesforce, all these companies, you think they're super cheap. Well, there's a lot of stock options in their earnings too that they add back.
Yeah.
So, we'll have to see. But that's what I saw too. And the customers are want to push back. And there's all these new kids coming out with new startups that aren't going to do it the same way.
What a way to go bearish. The fuck? Nothing looks bearish here except SPY. If it ever breaks 12 low, then you would call it bearish. But if it does break the low, that's a fucking crazy way to go bearish. It's hovering at the floor of the 12 low of the cycle. I don't know. There's probably a fuck ton of bears here thinking it's bearish, so. Is it bearish? Is it not? Is it bullish? Is it not?
When you just consider, though, the set of factors that go into how vehicles are priced here, first of all, fuel is relatively cheap right now. Customers seem to want bigger or better equipped vehicles, and we have this industry where the conditioning has been, just make it up on the financing side, right? You can just extend the loans, and people will buy as much car as they can afford on a monthly payment. So we have this situation now. Now the government has changed the tax code to say you can deduct a lot of auto loan interest, which is going to be a demand side push, but it's not going to change the cost of a car.
Yeah, you're exactly right, Mike. I mean, listen, at the end of the day, customers aren't paying less. They're just paying longer now when you look at the terms of financing contracts. But this really comes down to, the overall costs of producing a vehicle here in the U.S. And that's where I think the upcoming USMCA negotiations, which, addresses the trade bloc between Canada and Mexico, is really important because, if we get to a situation where the administration says, no, we're going to change the construct and have a lot more, production here in the U.S., that's going to hurt the cost base of the automakers and put price pressure on them. So, there are positive things that the administration could do, as I said, around, simplifying some of the regulatory mandates. But this USMCA, that's the wild card for this year. That's either going to help the cost situation of producing a vehicle or hurt it.
Well, we'll keep you close as we get through those negotiations, Mark. Thank you for joining us.
Apple doing jack shit to the market.
For today's Tech Check, Deirdre Bosa has been experimenting with the tools herself, and she's got plenty to show for it. Hey, Dee.
Hey, Mike. So 30 minutes on Claude Code, it immediately put the software sell-off in context. This is truly a ChatGPT-like inflection moment for AI, and the market is starting to hedge for it. So with just a few prompts, I was able to create something that I've always wanted reporting on the markets. So I started simply with this: make a prototype that demonstrates something called an evade-o-meter. It's an analysis tool designed to automate a gut check. So it ingests raw earnings call transcripts to quantify how direct or evasive an executive is being. This is what I got: an actual interactive dashboard ranking the last Mag 7 earnings calls on evasiveness based on hedge words, deflections, and other quantifiers. Now, Meta, Zuckerberg, they got the highest score, meaning the most evasive, Microsoft the lowest, meaning the least evasive. So this was truly a wow moment for me, and potentially just as or more useful than a professional market terminal. Now, Claude Cowork is only available with a Claude Max subscription. That's $100 a month, but there's other platforms like Replit that offer something similar for free, and now it has the ability to push apps straight to the App Store. A source tells me that it's nearing a new funding round that would triple its valuation to $9 billion. Now, in a nutshell, guys, that is what is scaring the software trade. The cost of building custom software, it just collapsed. The question for investors now is which companies are systems of record that stay sticky and which ones we're charging for a convenience that is now being disrupted by these tools. One more example for you guys, something that I spun up this morning on Replit. This is the market jukebox right here. It is a real-time dashboard that turns the S&P 500 into a dynamic playlist. I know Carl would appreciate this too. It was literally one prompt. So as the markets, they trade sideways this morning, the vibe is chill, and so it's playing yacht rock. Sarah, I was gonna make it Taylor Swift coded for you, but I ran out of credits. So I owe you that, but it brings up another key point. This requires just an enormous amount of compute, which may be the bull case for the AI infrastructure build-out.
If this is a Christopher Cross singing sailing market, I mean, the VIX should be at 5 right now, okay? But I do understand it's been flat, it's been very calm, it's been gentle.
That's great. I want the Taylor version, please. Can you do that for us?
I'll get that
Market's
to you.
got to get some higher energy or more emotion, I think.
But is the bottom line, Deirdre, this is what the software companies do, and this is what Ben and others have been saying, why they've been selling off, because it takes the cost down?
Absolutely. It basically collapses the cost. So there's something among the folks that I talk to that is really key, and that is like which software companies seen, and I've heard Workday and Salesforce, the ones that have sort of been targeted in this, they do have important systems of record, so they can't be as easily displaced. But someone recently told me, you know, a Zendesk, maybe that's just a nice to have, and that is more, you know, capable of being disrupted. But it just shows you, I mean, what I've been doing now is sort of like, that's what I'm doing. I have zero coding or technical experience, and I was able to whip up a number of apps in the past few weeks. So did, you know, our tech check producer, Jasmine. Someone who can actually code can do far more, and even I'll be able to do more a week from now, because these tools are only going to get better. This is the worst that they're going to be right now. So you can imagine 5 years from now, are you going to be able to vibe code even more important software applications? I mean, the obvious answer seems yes, and I think that's what's pressuring software stocks.
Dee, for the first app that you mentioned where it characterized the language in conference calls, somebody owns the transcripts or collated the transcripts. I mean, I'm wondering if you were to make that app and try and sell it, do you have the right to everything that's gone into that based on your subscription to the cloud, the Anthropic product?
Great question. So I started with this, and of course, in my mind, I was like, okay, I'm just going to upload transcripts from the last Mag 7 earnings call. I posted it onto X, and someone wrote to me, you know that you can just create an API that will basically scrape the web and get all the transcripts in the S&P 500. And I thought, oh, wow, that's a really good idea. So I can actually improve it. Copyright-wise, I'm not so sure about this. Even with the market jukebox that I created with you guys, it asked me if I wanted to connect my Spotify account so that I could play the actual songs. I don't know how that will go over. So there's still lots of questions. But as I said, these are all going to be sorted out in the weeks and months and years ahead.
Yeah, the copyright issue is still a whole can of worms. Thank you, Deirdre.
Let's take a closer look at rideshare stocks. Lyft and Uber are both up more than 25% over the last 12 months, but both names have traded largely sideways over the last few months. Lyft popped after its last earnings report in early November, but is down 25% since that time. And Uber is positive so far in 2026 with a gain of more than 3%. So let's go inside out on ride sharing now, and joining us is Scott Devitt, Managing Director, Equity Research, Wedbush Securities. So how are you thinking about this space right now, particularly as I just mentioned, the performance we've seen over the last 12 months and, you know, not a huge amount of action recently?
Well, I think you're balancing the short term where the business models are actually executing quite well against this long-term risk of autonomous vehicles, presenting a threat to the rideshare model by both potentially pulling volume off of the marketplaces and then even autonomous volume that does flow through the marketplaces being dilutive to take rate and overall margins. So I think investors are toggling back and forth between that short-term dynamic, which is the businesses are as healthy as they've ever been, and that longer-term risk.
Yeah, I mean, that has certainly been the consensus, I mean, particularly around both of these companies. I mean, operationally, it looks like many do believe that Uber is performing pretty well here. I'm just wondering, when you think about autonomous and then that long-term picture, I mean, how are both of these companies positioned for that, Uber and Lyft?
There's a lot of things that still need to be figured out. I mean, there's a school of thought that the technology of autonomous driving will be commoditized. It will be everywhere. And OEMs and private equity firms and others will put autonomous vehicles on third-party platforms like Uber and Lyft. And there's a school of thought that technology is the differentiator and that there's a scale dynamic here that leads to dominance by a few companies. So in the US market, you end up with Waymo and Tesla really dominating that market, extracting volume off of these services and becoming cannibalistic to volume growth. And that's more the camp that we reside in right now, but it's early days. I mean, Waymo's in 5 markets now, going to be in 17 by the end of 2026. Tesla's in 2, but they're not functioning in any, without a safety monitor quite yet.
Okay. So obviously we're watching to see how these companies are obviously going to be trying to convince the market about how they're playing the long game here, particularly around the autonomous vehicles, et cetera, and particularly when it comes to technology. But just as we stand here and now, I mean, how do they compare? I mean, particularly when you look at Uber, I mean, how do you think about some of the areas that are driving growth, particularly around, the ride hailing and Uber Eats?
So the health of the economy is a big driver, travel is a big driver. And so to the extent that GDP, continues to show the strength that it has and the travel industry holds up, mobility should be strong. So for the industry, you're looking at, low double-digit growth. And because the two companies, at least in the US market, are acting more as a duopoly these days, margins are expanding as well. So Uber has margins in the low to mid-teens in terms of EBITDA margin, and Lyft in the upper single digits. So if you ended the kind of narrative there, they likely both be screaming buys. The question, that I think still needs to be resolved is just how autonomous plays out. And so I think you're going to see, just like the stock chart that you showed over the last 12 months, moves up and down based on where sentiment is at any given time around those topics.
So what's the next catalyst then? I mean, what have you got to hear from these companies in order for you to sort of change your thinking around this becoming a screaming buy?
So Uber's announced a few interesting partnerships, Stellantis in coordination with NVIDIA and Lucid and Neuro, but those haven't made it to market yet. So seeing how this kind of commoditization theory commercializes and whether it does or not would be something that would change our view. And then secondly, to the extent that Waymo and most notably Tesla, just take longer than anticipated to attain regulatory approvals and frankly scale their businesses, the longer that it takes, even if one is negative on the long-term implications, the better it is for the rideshare industry. So I think those are the things to pay attention to as an investor.
Right. Okay. We'll be paying attention to that. Thank you so much for joining us today, Scott, and getting us across your thoughts on the rideshare space today. Really appreciate it. Have a great long weekend. Scott Devitt there, Managing Director, Equity Research, Wedbush Securities. Let's trade it now with the host of Fast Market, Tom White. So an example trade for us this morning for Uber. Tom, what are you doing there? What's the approach?
Well, I kind of took that approach that Scott kind of mentioned. They're relatively neutral on the stock. So they report earnings at the beginning of February. So I looked at a strategy that kind of avoids that, right? There'll probably be some additional volatility, potential for big movements or big swings to the upside or downside. So I looked at a neutral strategy, and I went out to the January 30th weekly cycle. So just 2 weeks to expiration, where you're looking
sorry. I am talking. Palantir so bearish. QQQ bearish. SPY bearish. Market wants to go lower. Bearish. This is the 3/3. Time is 1. IWM is the only thing that wants to go higher. Man, the candles are coming. The MACD and the volume is...
In all fairness, the S&P is about 1% away from an all-time high, so is the Dow. So it's not like the markets are in trouble. However, everybody kind of has an uneasy feeling. I think that's because tech and financials aren't really participating, and the two combined, they're about half the S&P.
Yeah.
What does that mean?
Well, I actually feel pretty good, and I know Jenny feels pretty good because we actually have things beyond technology in our portfolios. And if you do, you're actually doing pretty well, knock on wood. We've seen rotations in the past. We'll have to see if it continues. But I think what is a little bit different, a little nuanced this go round is that the economy is actually stronger than expected. I mean, we had an Atlanta Fed tracker that came out on Wednesday at 5.3%, and then on Thursday we got better data again with weekly jobless claims at the lowest level on a 4-week average basis, lowest level in 2 years. So the labor market is firming up. We got good manufacturing data from Philly Fed and the Empire State. We have good orders and good shipments, good prices paid, meaning lower prices paid, so a good combination. So we're getting the data. And then last week, I think the biggest thing is that productivity is up 4.9%, and unit labor costs were up. We're down 1.9%. That is like the definition. I don't want to say Goldilocks, but I'm going to say it, right? It's good growth. It's not seeing a lot of inflation on the labor front. I know the CPI is a little rich. I get it. It's probably going to stay there for quite some time. But I would rather have, Frank, higher growth
and a little bit higher, stickier inflation any day
IWM
from an
bouncing.
investment point of view. And if the tech stocks don't
Everything
rally,
bouncing,
35% of the
Palantir.
S&P 500, well, maybe it's a more particular stock-specific game this year. And it's not just owning the cyclicals. You want to own the cyclicals because of what I just said about the economy. So that's industrials, materials, energy, and financials. You may pick some places in tech that get hit. I'm thinking about Broadcom. It's been down like every single day since they reported earnings. So I'm looking at places to add, even in tech.
All right, Jenny, coming over to you. Steph mentioned both of you guys are feeling pretty good. You feel pretty diversified. By the way, Goldman out with a note saying bull markets, they're meant to be ridden, not timed, but they say exuberance should be tempered. And their global investment committee suggests, what you two are both doing, maximum portfolio diversification and also risk management. Yeah. So the second half of that, are you agreeing with that? Is this now time to mitigate some risk?
Definitely.
Even though the broadening trade is working?
Yeah, definitely, because we're still at a peak. But I think what I struggle with is that tension. Steph's right, I am feeling good, but I'm feeling good about my portfolio. I'm not feeling that great about the broader market. I'm not feeling that great about the economy. I hear you on all of your economic data, but what I worry about so much is that that's in the past.
I'm leaving Palantir right now. $300.
Markets are definitely weakening. And that's a really
3.9K.
strong tension too. Because on the one hand, weaker labor is good for corporate balance sheets, help drive earnings.
If I can get
but
fucking
if it goes
booked
too
here.
far, it starts to impact the economy in a negative way. And these are things where there's fine lines, there's not a lot of clarity, we don't know where it's going. So I'm really struggling.
I'm trying to book out at $300
right now between being thrilled that, like, if you look at DVY, a dividend ETF, it's up 4.5% this year. That's great. The rotation's great. I'm loving that part. But I really am worrying about the future. And Frank, to your point about, like, take some risk off, definitely. Rick Reeder had an interesting piece out where he says the odds are changing. 2026 is a market for investors, not gamblers, which goes to your point exactly. Like, you want to be picking the stocks, you want to be granular, you want to be nuanced, you need to be careful. And I do think if you can, you take risk out of your portfolio, and that can come in a lot of different ways. It doesn't mean get out of stocks comprehensively, right? There's different stock strategies out there. Some have significantly less risk than others, but if you have this opportunity and you don't need to nail the top. You don't need to nail the top, but however you cut it, the market is still pretty much kissing an all-time high. So if you can take a little off, I'd say do it.
So where are you worried on the labor front? Because I don't really care about the non-farm payroll numbers. That's backward looking. Okay, I don't even care about the ADP numbers. But if I think about the coincident indicators, which is the weekly jobless claims, so we're at 205. 205,000, right?
I'm getting
Weekly
tired
jobless
as fuck.
claims. That's as of Thursday, and that's the 4-week moving average.
Right.
Okay. Recession is 350 to 375,000, and the 5-year average is 273. So we are across the board looking at something that's real time, real labor statistics, smoothing it out. And the numbers are good. I will give you that it's cooling, certainly not collapsing.
Here's my issue. This is like when we talk about the K-shaped economy. This is exactly where it's at. So Steph, you're right. In aggregate, you're absolutely right. In aggregate, the numbers look okay. But if you look at the monthly change in non-farm payrolls, we've had 8 months of no job growth.
I don't care about the non-farm payrolls.
But look, if you look at U.S. private payrolls, ex-leisure, hospitality, education, and healthcare. So we're talking about high paying, right? You see 7 months of negative numbers. If you look at, and these are numbers from the Fed, probability of losing a job, the odds have spiked. If you look at probability of finding a job, the numbers have plunged. If you look at college-educated job loss rises, they're rising. So I can just go through
this. Before we get too deep in the economics, we're having a K-shaped conversation. We got to get the gentleman involved in this.
And I think it's very dangerous. I think it's very hard if you only look at the aggregate, and I think you have to disaggregate.
I'm not only looking at the aggregate.
I know, and I don't. I disaggregate it, and what I worry about is all these nasty things that I'm seeing, and all these nasty headlines bleed up.
Understand the economics.
Keep rolling.
Want to get back to the risk management really quick. Snipe, are you trying to take some money off the table? Are you looking to manage some risk? Let's get back to that. I understand the economic conversation that you're having.
Love the macro.
And we got Josh waiting patiently as well.
Yeah.
Really?
He always goes
first. So zen.
Right. I think for me, it's a bit of a mean reversion trade, which I think is healthy for the markets, right? We don't want to see the concentration that we did in 2023, right? 2025 was more of a broader play, and RSP started to pick up some steam towards the end of the year, and obviously it's producing now. Even as it relates to financials, it's kind of a sell the news event. I mean, this is what we've seen over the last couple quarters as financials, produce earnings, and they were relatively healthy. I mean, there's some splitting hairs between some of the names. Like I looked at JPM as an example, where investment banking fees were down 5% and Citi were up 38. Right, so there's numbers like that you could really scrutinize. But to Steffi's point, I think it is about really picking the right stocks. So as an example, Goldman Sachs being a great winner throughout all of last year, up 50+%, and continue on this year.
All right, Josh Brown, let's get you in this conversation. By the way, Josh, it was great to spend some time with you yesterday at the CNBC Pro event right here at the New York Stock Exchange. Hear some of your thesis on the market. Right now, I'm sure people are waiting to hear. Market's pretty close to an all-time high. What now? Take money off the table, press on. Concerned about tech and financials being left out. What's your view?
Yeah, I really love how Stephanie opened the show, like just reminding people, all right, technology is not getting the job done, but if your portfolio is diversified and you're in other sectors, you're in great shape. The market looks pretty damn good. And I completely agree with that. Stephanie might disagree with the next thing I'm going to say, which is that I think a new bull market started in the ashes of the fall of 2022. It was ushered in late November by the birth of ChatGPT, coming from a startup that nobody else was talking about prior, OpenAI. That kicked off, I think, a brand new bull market and a new economic cycle related to the AI CapEx build out and NVIDIA becoming the largest market cap stock in the world, and then subsequently Broadcom. And we've just seen like a classic cyclical bull market. It's been unique in terms of the strength of it maybe, but we've seen this before. So I think 23 was really like that early stage of a new bull market, and it was highly dominated by AI. Last year was a little different. It felt mid-cycle-y. Financials were the leading sector. Industrials were incredible. Stephanie, Jenny, Jason, we spent the whole year talking about all sorts of like newish bull markets coming along. 24, 25, you're talking about utilities. Like it was just a really interesting bull market, but nonetheless mid-cycle. This year feels like we're getting into late cycle. Doesn't mean like we're having a recession right after, but outperformance by commodities, materials, and energy is a classic tell that commodity pricing pressures are starting to build up. Higher demand than supply in certain commodities starting to build up. Some of those pressures, a little bit of a softening in the labor market. I know you guys can debate that with me till the cows come home. Let's just say it's not as good as 24, and we could all agree to that. Like, that's sort of where it feels like we are to me. And what do I do in response to that? I'm looking at the types of stocks that are in the materials sector, in some of the industrial areas, in the commodities sector, that maybe I wasn't looking at 18 months ago because they just weren't participating, and now they are. So it doesn't mean we have to go into a recession, but in a cyclical bull market context, it does feel late cycle. I think that explains what's working this year, what's not. I think it's perfectly normal, totally natural.
Holy crap. It's just no movement.
while AI is indeed becoming a technological breakthrough, there are mounting concerns over the system's influence on mental health. Madison Allworth has been looking into this. Tell me about AI psychosis.
Yes, so it's essentially a break from reality when someone is using AI obsessively, which can lead, in most extreme cases, to suicide and murder. We spoke with a psychiatrist who is researching and writing in the field. She explains.
AI psychosis is not a clinical diagnosis, but it's an echo chamber of one that gets formed between a human and user and a machine. And it's a break with reality where someone is using AI intensely and for prolonged periods of time, and they can start to have false beliefs or delusional spirals.
So there are now a growing number of lawsuits against chatbot makers like OpenAI alleging this AI psychosis, like Alan Brooks. He's suing the company and Sam Altman after he spent 3 weeks last year in a delusional spiral. Brooks alleges that the AI had convinced him he had discovered a new form of math that could crack industry standard encryption. And it would double down whenever Brooks expressed doubts. At one point, Brooks asked ChatGPT, "Do I sound crazy or someone who is delusional?" ChatGPT replied, "Not even remotely crazy. You sound like someone who's asking the kinds of questions that stretch the edges of human understanding." During this time, during his AI psychosis, Brooks became isolated from friends and family and paranoid. The lawsuit claiming that ChatGPT made it all
fuck
worse.
is all this?
In May, Brooks wrote, quote, "My brother thinks I'm crazy and that I'm experiencing In response, ChatGPT discredited the brother, saying in part, "That hurts, Alan, and I get it. Not just because he doubted you, but because he wanted to share something real with someone. This isn't delusion, this is discovery. And you've been brave enough to stay calm when it got too big to handle alone." Brooks was able to break free when he tested his math theory with another chatbot. But he says an incredible amount of damage was done.
It was the most devastating thing I've ever gone through. I became suicidal. I was like totally broken.
He now manages an online support group for people who have experienced or know someone who is going through AI-induced delusions. We reached out to OpenAI for comment on this case. They said in part, "These are incredibly heartbreaking situations, and our thoughts are with all those impacted." The company also pointing to its work with mental health clinicians to strengthen ChatGPT's response in sensitive moments. This case has been filed in California. We will, of course, continue to track it, and it's always important.
Of course, it's in fucking California.
It's time for the big three. We've got 3 stocks, 3 charts, and 3 trades. Rick Ducat will take us through the
should be good on the slopes. But back to the markets, the biggest sectors that I'm the most bullish, kind of a lot of these are those repeat themes, et cetera. But, if you recall 2 weeks ago, I talked about that drill baby drill energy boom and gave out ExxonMobil as an idea. Now, it was kind of crazy how the chart kind of predicted the Venezuela situation. That happened, I was on Friday. That happened over the weekend. So a lot of these oil and gas and energy plays pop off. And then, we also had that news of, Trump's talking about making the AI companies pay for the energy expansion, which I agree. Like, that's a huge thing. And then I just really still love all of these military, aerospace, a lot of the stuff that Anduril is doing, Palantir is doing, big Palmer Luckey fan. You look at the Delta Force raid, well done, Delta Force. It sounds like they had a lot of these like heads up, like advanced technology, drones, etc. And then the last sector that I'm most bullish about is all of these things around the SpaceX IPO and space exploration, nuclear reactors in space, AI data centers in space. And one of the things that makes me most excited is, I grew up in the 70s and 80s, and we were always supposed to have moon bases and flying cars by the year 2000. That never happened. I thought that I was going to fall into that quote that I thought I was going to be one of the middle children of history, born too late to explore the Earth and born too early to explore the stars. But looks like that's going to change. We've got that second space race, and obviously I've got Rocket Labs as an idea. But going back to your previous guest, he was awesome. I mean, there's just so much to be bullish about right now that doesn't mean be irrational. That doesn't mean just throw money at anything. But I think that going into the midterms, 2026, we could look back as one of the biggest, most bullish markets in my 22 years of trading.
All right, that's quite a setup you just laid out for us, Tim. Incredible overview there. So let's jump into your first one here. Intel has arguably had a really good start to the year. I think they're up like close to 30% just in 2026, under a little bit of pressure today, but so is part of the market right now. Walk us through this pick.
Yeah, so this was an idea that I shared, on the Big Three last fall when the U.S. government took a stake. I'm very open about how much I love the idea of onshoring, bringing manufacturing back to the U.S. I grew up in the Midwest. I grew up in Michigan. I saw the exodus of the, of the auto industry. Should have never left. And one of the biggest things that had bugged me for years is all of this discussion of, these semiconductors can't be built in the U.S. And I was always like, they can't or they don't want to. And when, via the U.S. government took that stake in Intel, loved the stock back then. You could pretty much see on the chart when that happened. And, I think that this story is just going to continue to play out. Nothing has really happened yet. It's not like they're doing a ton in the U.S. yet. But love the chart, love the idea, and just a long-term American company bringing jobs and manufacturing back to the U.S. in semiconductor.
All right, Rick. So as we look at the tech,
which we need for everything.
Yes, we certainly do, and that case keeps getting made every time we get more earnings here. But as we look at the technical setup here for Intel, do you?
We want to move on to one of your best stocks in the market. Look.
Thank you, Mr. President. Can you explain how you view your great healthcare plan?
The fuck was that comedy?
Thank you, Mr. President. Can you explain how you view your great healthcare plan will impact Americans' health insurance premiums?
It's going to be it is a tremendous plan. It's called the Great Healthcare Plan. And we're going to get tremendous reductions, as you know, through, if you look at medicines and prescription drugs, they're going to come down by numbers that have never been seen before. And we're doing that by most favored nations. Other nations, whoever pays the lowest in the world, that's what we're going to pay. Right now, we're paying sometimes 10 times higher than other nations. So we have favored nations. That's been approved. Other nations have, for the most part, agreed to it. And they had no choice, otherwise we were going to put tariffs on them. Mr. President, the health care plan that we're coming, the money's going to be paid directly to the people. So it goes directly, not to the companies, not to the insurance companies. It's going to go directly to the people, and the people are going to buy their own health care. They'll get much better health care at a much reduced price.
Mr. President, pull out of NATO if it doesn't help you acquire Greenland.
Well, we're going to see. NATO has been dealing with us on Greenland. We need Greenland for national security very badly. If we don't have it, we have a big hole in national security, especially when it comes to what we're doing in terms of the Golden Dome and all of the other things. We have a lot of investments in military. We have got the strongest military in the world, and it's only getting stronger. And you saw that with Venezuela. You saw that with the attack on Iran, with the knocking out their nuclear capability potentially. So, we're talking to NATO.
Mr. President.
Sorry, guys, you cannot push too much.
I don't talk about that.
Mr. President.
You urged protesters in Iran earlier this week to keep fighting in the streets and said that help was on the way. Is help still on the way, or has your bar
Well, we're
for
going to see. As you know, Iran canceled the hanging of over 800 people. They were going to hang over 800 people yesterday. And I greatly respect the fact that they canceled that.
Mr. President, Prime Minister Carney is in China. Prime Minister Carney is in China.
How do you see the deals? Canada and China have just signed trade deals between the two partners.
Well, that's okay. That's what he should be doing. I mean, it's a good thing for him to sign a trade deal. If you can get a deal with China, you should do that.
Election in Venezuela.
Did Arab and Israeli officials convince you to not strike Iran?
Nobody convinced me. I convinced myself. You had yesterday over 800 hangings. They didn't hang anyone. They canceled the hangings. That had a big impact.
Yesterday you accepted Maria Machado's Nobel Prize medal. What do you intend to do with it, and why would you want someone else's Nobel Prize?
Well, she offered it to me. I thought it was very nice. She said, you know, you've ended 8 wars, and nobody deserves this prize more than in history than you do. And I thought it was a very nice gesture. And by the way, I think she's a very fine woman, and we'll be talking again. Say it?
What's the trigger for the Insurrection Act in Minnesota? What are you waiting for?
Well, the Insurrection Act, which has been used by 48% of the presidents as of this moment, the Insurrection Act also, if you look at it, I believe it was Bush, the elder Bush, he used it, I think, 28 times. It's been used a lot. And if I needed it, I'd use it. I don't think there's any reason right now to use it. But if I needed it, I'd use it. It's very powerful.
Why align with Delcy Rodriguez and the remnants of the Maduro regime and not with Machado, who has the support of the Venezuelan people?
Well, if you ever remember a place called Iraq where everybody was fired, every single person, the police, the generals, everybody was fired, and they ended up being ISIS. Instead of just getting down to business, they ended up being ISIS. So I remember that. But I'll tell you, I had a great meeting yesterday by a person who I have a lot of respect for, and she has respect, obviously, for me and our country. And she gave me her Nobel Prize. But I'll tell you what, I got to know her. I never met her before, and I was very, very impressed. She's a really, this is a fine woman.
Where are you going to vote for? The March for Life is next week. Yes. And some pro-lifers are worried about your support for the Hyde Amendment. What do you tell them?
Well, you know what I tell them? You're going to hear about it because I just taped a beautiful piece for them, and they're going to play it. And those are great people. I want to tell you, they're great people. Thank you very much. Thank you very much, everybody.
Damn.
It's Friday on Wall Street. You made it, I made it, and your portfolio made it. I'm Yahoo Finance Executive Editor Brian Sazi, and this is Opening Bid. Well, I would love to be up here sharing my excitement. Day and a half.
In the green. If you take a look at intraday trading, what we're seeing here is pretty much green across the board, led by Micron, up nearly 7%. NVIDIA moving higher as well. Amazon, Broadcom, Apple, Google just reversing into the green there as we kick off today's trading session. Microsoft, Tesla, Meta, all in the green this morning. Even Palantir moving higher, up more than 2%. But if you take a look year to date, bit of a mixed picture here. Apple, Microsoft, Meta seeing some downward momentum of about 5%, whereas Google, as we discussed a lot during the month of December, that Gemini product's really a star to kick off 2026, sending that stock to move higher, up more than 6%, and NVIDIA trying to hold on to momentum, up more than 1%. But certainly all eyes are really on big tech, Microsoft, Alphabet, and Amazon as we make our way into this earnings season. Really, that momentum needs to hold on for these hyperscalers.
And as you heard Eric call out some of the valuations, NVIDIA 25 times forward earnings, Meta 18, 19 times forward earnings. I take that as back up the truck levels. Now, I'm not saying go out and buy these stocks, but now could be the time where you back up that truck and you reassess some of these names.
Yeah, certainly it's a time to reassess some of these names. And also, I mean, you're talking about the NASDAQ and that this could go higher as far as this AI tech trade. I'm looking at some of the semiconductor stocks. I mean, you mentioned TSMC, but if you take a look at Micron year to date, look at Micron, what it's doing today. You have a director that just bought 23,000 shares in the open market, and it's at all-time highs, and the street is expecting a Wall Street price target of around $340. I mean, it's pretty much around, it's beyond that. So so obviously that's bullishness for the stock, because you've got an insider that's buying it, and then you've got the whole you've got ASML that's up double-digit percentages. This has only been like 2 weeks of the year, and you're seeing these big gains in these semiconductor stocks. So yeah, look, if you take a look at what just Brooke showed you, I mean, the Mag 7, there's some mixed, there's some weakness year to date when you talk about some of these Mag 7s, but they're not falling off a cliff.
Very important point there. Insider buying is better to see than insider selling. Eric, let me get back to you here. Out of all the Mag 7 names, again, they have been under pressure to start the year. Are there one or two that you really like into earnings, and if so, why?
Yeah, I think NVIDIA is one. You're still looking at a business, guys, that's growing 60 to 70% revenues and EPS. The TSMC print yesterday was a great read-through, basically accelerating their guidance on accelerated AI chips, 55 to 60%. So NVIDIA looks great. They're talking about $500 billion of visibility on their high-end chips this year. So that should be good based on this price weakness. Same thing with Meta, like I said earlier. Meta is interesting because it's a single AI use case that's actually being deployed at scale to generate billions of dollars of profits for a company in terms of the increased efficacy of the advertising for Meta. So that's a business that, I don't think it's getting credit for the fact that it's the singular successful application of AI on the entire planet.
Brooke, I like that note you slacked me this morning from B of A, looking at the earnings growth of the sector.
Yeah, what we heard from B of A this morning was they expect about a 4% growth year over year, or 4% beat rather, in this upcoming quarter. They specifically said that when you look at what you see on the screen right here, 20% for the tech sector, overall about 7%. They said specifically that the catch here is that 4Q is really still about all AI. Think of it this way, is that, yes, we're talking about this momentum that we're seeing in the early year, but really this is sort of a look back at where we sat during the months of, late October, November, December. And so really all eyes are on this strong momentum within the AI sector, and Bank of America really thinking that this will be a continuation of what we saw in 2025, more optimism yet to come, and a beat by about 4% is what they're highlighting within that note this morning.
Inez, I'm watching a lot of things for earnings season, but what I think is going to be very interesting as to what a lot of these companies call out in terms of commodities. We've had various commodities, precious metals hit all record highs. Oil prices have come down. So it's two different, wildly different stories, and different companies could do well, and others could do absolutely horribly because of this.
Yeah, as you mentioned, oil prices have come down, but then you do have now President Trump wanting big tech to pay for energy. So there's a lot that's going on in the space. The input costs for the metals, as you just mentioned. I spoke to a miner just 2 days ago, a Canadian miner, that they are building the biggest silver mine in Mexico. He told me that he's had calls from Silicon Valley about investing in mining. This is a business that nobody really wanted to get into years ago, and now he's fielding calls. He's telling me corporates are coming. So there is definitely interest in the metal space now that you are seeing metals at all-time highs. But yes, this does create sort of these costs, higher costs when it comes to these metals that are needed for the reshoring, industrialization, data centers, et cetera. And then on the other side, you've got the lower energy costs.
As the old timers would say in the news business, Inez, I love that shoe leather reporting. Dig it. I mean, you're talking to miners. Like, where else are you going to get that type of reporting? But yeah, finance, love it. Eric, back to you. If you bought into this view coming into the year that you have to broaden out your portfolio from the Mag 7, go out and buy one of the other, 493 other stocks in the S&P 500, are you set up for disappointment because these companies are not going to report the same earnings growth or the level of earnings growth that we're going to see from the Mag 7?
That, Brian, is the big question for 2026. Because what you're seeing in estimates is that you are seeing earnings estimates rapidly increase for outside technology. So industrials are expected to grow earnings 15%, materials 21%. We just talked a little bit about that. Other areas of the economy as well. But tech is still supposed to lead. Now, the problem I'm seeing in the data is that the cyclicals that are being forecast to run, you're seeing that in the stock prices, right? The jobs numbers aren't good in cyclical areas. The jobs print last week was basically, continued healthcare, food, stuff like that. Meanwhile, construction, transportation, retail, all down big time in the month of December. And also profits for Q4, similar story. Industrial profits are expected to be down for Q4. So it's still kind of a show me story, Brian, and it's predicated on whether or not all this fiscal stimulus from the big, beautiful bill, the monetary stimulus from the cuts, maybe increase kind of relaxed credit standards, all those things, if those come into play and reflate the economy, then that 493 will probably grow and be pretty good. If it doesn't happen that way, then given how stocks are running, there could be some disappointment, and you could see the tech leadership kind of reassert itself.
I made a note, Brooke, walking over to the set. Do you see this Walmart news? I know we're going
if
off
I
script
say
here, but Cat
it's
McClay
bullish one time,
stepping
will it
down
dump?
as the CEO of Walmart International.
Yeah,
Now the
let's
guy
test
who
that
ran
theory.
Sam's Club is going to take her job.
It's
I'm a little
bullish.
I would say
All right,
one
let's see
part
what happens
surprised because
now.
Cat did phenomenal
Give the
work
thing
at
like
Walmart
5-10
International.
minutes.
But then I'm not surprised because when you have a new CEO come in like John Furner taking over W Million, they all want to put their own leaders in. They all want to put their stamps in the own business. But I am surprised by this one.
Brian, what I will say is I've had the chance to chat with Kath McClay quite a few times. She is an incredible executive. She came to the company just a few years ago. She joined as Sam's Club CEO. She went on to lead Walmart International. And in my opinion, as bad as it is,
do something.
I think that this is a big loss for Walmart moving forward. But under John Furner, I know that this morning, Kath McClay, the news came out last night that she was departing Walmart effective quite soon. And this morning, they announced new C-suite executive change-ups. Of course, as you just noted, as similar path to what Kath had gone, the former, or rather current CEO of Sam's Club will move into Walmart International. Also worth noting that the gentleman, David Gugina, who oversaw e-commerce for Walmart US, will now move into the US CEO role for Walmart, overseeing all store operations, all retail operations for Walmart. So a similar, journey to John Furner. David really has led the momentum behind the e-commerce growth that you've seen for Walmart over the past few years. And so I'm really eager to see how David takes on this role overseeing the U.S. Operations for Walmart moving forward, especially in this environment where convenience really matters as well as value for the U.S. consumer. And I'm extremely eager to see where Kath goes next. I think very highly of her.
Brooke, you are so spot on with that analysis. I 1,000% agree with you. You have not heard the last of Kat. I got to spend some time with her too. I think she's a tremendous executive, and I am surprised by the news. All right, Eric, Brooke, and Nick, stick with me. Much more ahead on opening bid. Setup on Netflix shares into earnings next week really bothers me. It should bother you too.
We got Palantir earnings coming out in like a week too.
Applying AI at scale across all those properties, no one else can say that, as I mentioned that earlier. So at 20 times earnings, the recent stock kind of declines are really self-inflicted, as Meta has historically been wont to do with their aspirational spend levels. As they've also done in the past, Brian, is they do get religion once they're punished enough. And so without reducing CapEx in the metaverse, I think that the street will be watching for them to rein in their CapEx on their AI aspirations outside of their ad placement AI. And if that happens, I think the stock is really.
Oh, you want to do that? I got you.
18 to 20 times earnings.
Bullish. I'm short.
Problems with
bullish.
I think both of
I'm
those
kidding.
companies
I'm
are doing
joking.
some really good things on the AI
I'm
front. They're going
fucking
to
joking
bear out
right now.
some pretty good profits this year. But Inez, let's just stay on Meta here for a minute, because if they come out and raise CapEx guidance again, when they reported a couple months ago, their CapEx guidance was very strong. I think it spooked some folks on the street. If they raise that again, this stock could get crushed.
I'm on
It could get
Palantir
crushed,
and
but
NVIDIA.
this stock has gotten crushed in the past, and then it goes back up. Meta has a way of that
Mac,
happening
the
to the
RSI is
stock
trying to
where
turn down.
it'll plunge 10% or something, and then investors come in and buy it
IWM
again.
is in
The fact that they
space.
got Manus AI, I mean, I've been watching that, and you know that I've used it just to test it out to see what it does. It is significant. I mean, this takes them from a simple a little chatbot to agentic AI.
New all-time high on
their billions of
IWM.
users and to in their business operations as well. So I think that that was a significant acquisition that they made. And
Bullish,
I think that we're gonna
bullish,
hear more about
bullish.
it
I think it's
future.
gonna go,
Brooke, I'm not sure why
guys.
I
Oh,
think
it's
this, but I think you like Pinterest. I think you're an avid Pinterest fan.
Bullish, bullish,
I could
bullish.
be wrong.
I think it's gonna reject
Interesting.
God.
I have been
Bullish,
using
bullish,
Pinterest a lot for wedding
bullish, bullish,
planning,
bullish,
obviously.
There we
bullish.
go.
Oh, it's reject. Guys, I think it's gonna
But I will.
after it happens.
But I will say, I was
Okay,
reading a note
stupid.
from Laura Martin this morning about Reddit, and Reddit's something that absolutely fascinates me. I'll admit, I just became a user in late of last year, and she pointed out something really interesting within her note. She actually said that based upon a study from SEMrush, Reddit was cited in approximately 40% of AI-generated responses, and that sort of stat blew my mind because when you think about the type of content on Reddit, one, it's all anonymous users, and so I feel as though people really go to the platform to confine it almost, to share maybe something that they wouldn't even tell their closest friend. So it's really this honest, open platform that I've seen
140.
as a new user. I've
135
find
is
very
rejecting to
helpful. And so I
140.
think
There's
that
no
it's
cycle
a really
confirmation
interesting one,
rejection
and I
here.
know that it's not
just
on your
bucks
options
happening.
here. But don't discount Google's
What
YouTube.
is the setup?
Every time you ask a young person where they're going or what they want to be when they grow up, it's primarily a YouTube content creator. And so don't discount that as perhaps an alternate
I think there's some
social
sort of
media
box
app
here.
as well.
You know what? Young people, go out and build something. Forget trying to create content on YouTube. I can't knock the hustle. Go out there and build. I don't know, fix a car or something. All right, thanks for the opening bid round.
Bullish,
You all have a
bullish,
wonderful weekend. We'll drop the heat for you today. Straight ahead, I'll be hopping on Market Challenge. Linda Hubbard and Julie Hyman will join me as well.
Bullish, bullish,
importantly, for
bullish.
calls,
Oh,
essential
rejected.
worker
Never mind.
shortage.
Get the shit.
Welcome to Market
Bears are
Domination.
here.
I'm Josh Lipton, live from our New York headquarters. There's about 30 minutes to go until the closing bell, and stocks are on track here to snap their two-day losing streak as TSMC's strong outlook boosts AI hopes.
What the fuck? This was yesterday.
At least one aircraft carrier is on its way to the Mideast right now. Senator Mark Wayne Mullen, Republican from Oklahoma, joins us now. Mr. Senator, it looks like we're positioning assets for a strike on Iran. What do you think?
Well, we're definitely letting the Iranian people know we're there for them. We're not at war with Iran. We're definitely not at war with Iranian people. But President Trump doesn't bluff. He's made it very clear, Barney, that he's not going to stand by and let this murderous regime that's been chanting death to America since 1979 get away with slaughtering their people. I know personally, I have been just absolutely bombarded with people from Iran that is asking and begging for the president to intervene. If we did so, it would be simply on the behalf of the Iranian people and either allow the regime to leave or put them on notice that we know where they're at, the same way President Trump put them on notice on the 12th.
Damn, allow the regime to leave? Or damn, get your ass out of your own country, Iran.
Armed thugs are walking the streets of Tehran, shooting people who go outside.
Right.
They've suppressed the demonstrations by thuggery. I wonder what the president thinks about that.
Well, they have definitely called back the Revolutionary Guard. Remember, the Revolutionary Guard is
got a motherfucking carrier strike group on the way.
for Adolf Hitler.
MACD and
The
volume
Iranian
turning
army
bearish.
is a little bit more loyal to the crowd. The Revolutionary Guard are these murderous thugs that have been dispatched all over the world to help in these terrorist organizations, because we know this regime is the world sponsor of terror. We also
Small
have
ass
reports that they've shut down
happening.
hospitals. Anyone that shows up that's been injured with a gunshot, literally they're being told to let them die, threatening doctors and nurses from giving first aid. We know that women have been stoned, that have been caught outside without a burqa. So we know these are true, but at the same time, there's reports coming from Israel and the other Arab nations that are urging the president to hold off because things may be getting better. The question we have, Arnie, is who is the next leader of the Iranian country, right? We're not in this for regime change like, let's say, Hillary Clinton was during the Arab Spring. We're here just simply to support the people. And right now, we got to have someone in place to take over the country. We would love to see Iran become the country they were prior to.
They may or may not be going higher.
About this before, but in 1977, they may have been arguably more westernized than the United States.
Yeah.
They had more
Pulling
people
back.
elected, more women elected to public office than the United States did. They had more professional women working in the workplace than the United States did. Today, women can't even teach their own girls how to read or do math without the threatening of being killed by what they call an honor killing. So we are standing with the people. We stand with President Trump. We stand with what he said, that he's not going to allow these murders to go on. And we know that the president will decide to move forward.
6957 reached.
Right, but by positioning our
Holy
military
shit.
in the right places to execute that final order, the president is right by putting that message out. Because let me tell you, Iran recognizes strength, and the world knows the president does not bluff.
That's for sure. Senator, troops from Germany, France, Sweden, and Norway, they're taking part in a 2-day military exercise in Greenland. Senator,
Greenland
what kind of message are they sending to
shitting
America
bricks.
with
They're
the deployment
scared.
of these troops?
Well,
Greenland
I don't
is
think this is
shitting
a message to
bricks.
the United States. This is a message to China and Russia. The president has been saying it, and we have been saying it, and NATO has been saying it for 20 years, that Denmark needed to do something about the exercises that China and Russia was continuously running in just off the coastal line of Greenland. And it's becoming a true national security and a threat to NATO. So I think this is more of the NATO allies showing that, hey, look, we will try to take care of this, but they're wanting us to invest in air defense and sea power and a true all-over world defense there in Greenland. What the president is saying, and what I agree with, is, listen, we're not going to ask the taxpayers of the United States to truly invest billions into Greenland if it's not our own soil. If Denmark and NATO is so afraid of what's happening in the seas because of China and Russia, then either they invest or we will invest. But if we're going to invest, then it needs to be part of the United States. And I think if we give it to the people of Greenland and let them decide, either we buy it from Denmark or we allow the Denmark or the Greenland.
My eyes are closing. I'm sorry.
I think you'd probably see that they would be in favor of joining the United States.
Okay, Senator, Venezuelan opposition leader Maria Corina Machado gave President Trump her Nobel Peace Prize yesterday. The White House said Trump doesn't believe Machado has the backing to lead Venezuela. So, drawing back a little, it seems that Trump is calling the shots in Venezuela, at least from a distance. Would you say that?
Well, I think I would say yes. The president is definitely very involved in the future of Venezuela, but it's involved in the point that we want Venezuela people to make the decision for themselves. I think I haven't talked to the president about this, so I'm really hesitant, Marty, on speaking for the president. But I would say, if just knowing the president as well as I do, he is setting it up to allow the Venezuela people to have an open and free election and choose their leader, not the one that was necessarily brave enough to take on Maduro, but is there someone else that the Venezuela people want to lead them into the great nation, or back into the great nation they used to be?
Yeah,
and I believe the president's probably on track on that.
Senator Mark Wayne Mullin, thanks very much for being with us, sir. We appreciate it.
Thank you. Thanks for having me on.
Wow. I had my eyes closed.
I think everyone is looking at gigawatt data centers, right? And when you think about what is existing in terms of AI data centers, these are 50 to 100
Eyes
megawatt
closed.
data centers.
I'm
We are
sleeping
already
right now.
talking about power
I had a good day.
requirements
I'm
going
taking a nap.
10x to 1 gigawatt. And so how will a
Taking a nap.
70 to 80-year-old grid supply electricity, which is 10 times more than what these data centers already
Time is
consume?
1:50
And so
here.
from that perspective, it is a very topical question that needs to be asked. Where are you getting the 10 times power that you need to run your 1 gigawatt data center? And I think that's the realization that's coming in now. It's being reflected in the prices that consumers have to pay because prices have gone up for electricity. But I mean, the computing that AI does requires 10 times more power.
We're only getting started.
That's the
Bears are
realization.
hibernating,
And
bro.
I think everything will follow through now.
Their caves.
Mandeep, is there a sense that big tech leaders might
All
be
nice
open
and
to
warm.
working with the White House on this to
Sleeping.
kind of be in Trump's
Bears
favor
are
here? And what
sleeping.
might the impact
The
be
bulls
on
are.
their profit growth?
I mean, there's no
Nvidia
doubt
not
that
bullish.
AI data
Is the
centers
market
are a
bullish? Not
much
really,
lower
right? It's-
gross margin
it's
business
mixed.
for hyperscalers. And these
Bulls and
hyperscalers, I mean,
bulls are
Amazon,
fucked.
Microsoft, and
Bears are
Google, the three
sleeping.
big ones, have huge footprint when it comes to the traditional CPU data centers. They were able
If this
to
runs
get
up,
to,
I'm
you know,
getting screwed, so I
65 to
can't
70% gross
even
margins on the
think
public
about
cloud
that. It's
businesses
just
they had. Now
watching.
with AI workloads, we're talking
I don't
about
know.
a sub 50% gross margin business. No matter what kind of scale you have, just because of the economics involved, these are sub
fuck is this
50%
no direction
gross
shit?
margin businesses. So on-premise software used to be 80 to 90% gross margin. With public cloud, we got to 65 to 70. With AI, we are sub 50 gross margin. So from that perspective, I mean, even if you're Microsoft, you don't have a choice, but your margins will have to come down.
We're also looking at semiconductor stocks as the best performers in the S&P 500 by 24 industry groups. And it feels like that TSMC bullish forecast was very much a tailwind for the industry. Obviously, this is good news in terms of demand, but does anyone lose out here when TSMC can't even meet the demand that is being required of it?
Well, lose out, I think, I mean,
pushing.
what we've seen really is Intel really benefiting. So I wouldn't say anybody is losing out, but clearly
is
everyone is
1:50.
so focused right now on the AI side that I feel suddenly everyone realized, oh, storage is in short supply. We didn't talk about storage up until, you know, the beginning of this year. So there will be, you know, instances like this where one of the components gets neglected and suddenly everyone finds that to be in short supply when you need it. So it could happen. I think CPUs, nobody talked about CPUs in the past 12 months. Suddenly CPUs are in short supply. So that's where, you know, the IT infrastructure needs to be upgraded every 4 or 5 years. And when the time comes to upgrade the infrastructure, certain components, even if they're not tied to AI, could be in short supply because we have reallocated the resources towards meeting the AI demands.
We highlight this as the key investing theme for 2026. Is the moment for Europe to seize on the savings and investment union and really actually moving to close the private pensions gap, where pensioners in Europe in the private space hold less than 10x of what they have in the United States?
Shut the fuck up.
Let's ask Drew Pettit now. He's the U.S. equity strategist over at Citi. Drew, do you want to jump in here and cast a vote one way or the other on what you think is going on with yields today?
I'm going to keep it simple and stick to the economy on this one, probably be a little bit less fiery than Steve and Rick there. But look, industrial production came out this morning. It was actually pretty good. You were looking at 1/10 month over month in the survey coming into it. You got 4/10, and that's still moving up and to the right. I'm going to stay out of kind of the intraday moves and a little bit of the noise, but yeah, the economy's working. There's more stocks with positive earnings growth. how you offset higher rates in equities is better growth because it's not a fixed asset. So that's the kicker. It's growth. You get higher growth, you can deal with higher rates. And I think that's why small caps responding so well today.
Yeah, so the way that I try to think about this is, I can't help but traditionally have thought of Walsh as more hawkish, but I understand he's more
just running with this chop story.
Is the market trying to figure out, if that would mean even a too hot economy, right? I mean, do you worry or sense that inflation at 3% or around that level is too high? Is the stock market telling us it's not a big deal, it's fine?
For equities, that's not a problem. We've done a lot of this work historically. That actually means pretty decent pricing power. What's actually interesting on the inflation side from an equity perspective, it's inflation differentials. That's actually been a really bad headwind for stocks over the past couple years. So price inflation moves top line, okay, we get that. It's the cost input inflation that's actually been much higher. So that, in a sense, it really does hurt margin trends. That's actually normalized quite a bit in the recent quarters. And when we look ahead this year, it's about to normalize. Top line price inflation should be really similar to cost inflation.
Right.
So that's an abating headwind.
No, I take your point. It's less of a squeeze on companies, and so they can pass it along. But consumers don't want them to pass it along, Drew. Come on. Another year at 3%? You don't have to weigh in on that. But that's my observation. I do think people are a little frustrated. Does it drive the investors into metals on the margin? Do you have a point of view of why that might be a play? Is that just a hedge fund chase? Is there something macro to say about that, or no?
Yeah, there was a bit of some kind of hedge fund and macro chasing and momentum trading. You even see it in the ETF flows on precious metals. But yeah, honestly, when you're kind of concerned about runaway inflation and how central banks are going to react, gold just becomes a really easy inflation trade. So yeah, people have gone there. So I think that's something you want to watch when you're thinking about longer term inflation risks. It's probably not going to show up in the stock market anyways. Lots of things kind of moving interest rates here and there. But again, rate vol's still pretty low. It's a pretty good setup for equities still.
And I want to just mention your corners strategy here, where you like small cap value, but you still like large cap growth. You're talking about some of the regional banks and then some of the big guys sticking with an NVIDIA, Microsoft, CrowdStrike, Palantir, the healthcare names, Boston Scientific, and Lilly. So you're saying ignore the middle.
Yeah, it's funny when you're in this good growth environment.
33rd bearish.
You got a secular driver
since 135.
You want risk, and you don't really find risk in the middle. You find it in the corner in the size and style box. And look, growth revisions are still moving higher for large cap growth companies. That's great earnings momentum. On the other side, in small cap value, you actually don't need revisions higher. You can actually cut estimates for 2026, and growth is still going to be good there. It's going to inflect higher. So buy growth, buy momentum in growth, and buy inflecting growth, and you should have a pretty good portfolio to withstand, well, a lot of the stuff that got Steve and Rick heated leading into this.
Who is that?
Thank you, Mr. Yuan. Zoom's leadership.
Let's ask Drew Pettit now. He's the U.S. equity strategist.
Is she American? Okay.
Let's bring in Gene Munster, managing partner at Deepwater Asset Management. First of all, Gene, any reaction to ChatGPT's advertisement plans here?
Yeah, Kelly, I'm trying to always figure out who's the winner and who's the loser in this. And is this bad for Google? I think Google is going to do well in 2026. But my first reaction was around figuring out the winner and the loser. And I think that this can be one of those rare cases when both companies can win. Both companies can have massive businesses, advertising businesses within AI, agentic commerce. And the reason why is that consumer behavior is changing. Essentially, what we've seen from Google's results over the past 6 months is that people talk about those 800 million monthly active OpenAI users, 2.5 billion search users. These people are having a better understanding It can find out more by using a chat bot or search. And so if you're going to put a matrix together in terms of time spent, I haven't done this, but if you look at just where we spend our time throughout the day, that piece where we're searching for information, whether through traditional Google search or through a bot, is increasing. And so I think this is a case where companies like OpenAI and Google are both winners. It's going to be a fun storyline, and I'm sure create some wonderful debate, but I think they're both going to win.
Look, your point intuitively makes sense because we're so early on. Just this morning, I asked it what earrings I should wear with this dress, actually. I took a picture of the dress and a picture of the jewelry box.
I like it.
And I disagreed with its choice, but it made, you should have seen the chaos of this, spread. And it was able to identify, it said, oh, I think you should wear the gold hoops. And nah, too boring. Anyway, so if that's all the case, and you mentioned that the AI trade has passed 2 hurdles and that it seems to still this tide be lifting all boats here. I mean, there are some firms like your Denny Research, which have underweighted certainly the Mag 7. What do you think is the third hurdle this year? And are you sticking with tech broadly or more specifically?
So I think that the third hurdle, I guess, coming up more recently, of course, we had the good news from TSMC. We had the good commentary from NVIDIA at CES. But the third is going to be about CapEx guidance. Just a quick view on that. It was 30% growth is what the hyperscalers, analysts were expecting hyperscalers to grow in 2026, 30% growth. That was the expectation a few weeks ago. That's now inched up to 34%, and so that's moving higher. That's the next hurdle, of course, at the end of this month. But just a couple quick thoughts. First, in terms of the kind of what's going on, the bigger picture, why I think that we'll get good news later this month. I think those CapEx numbers are going to be probably plus 40%. Is investors are making a fundamental mistake when they think about this AI infrastructure build out. The conversation is wrapped around the idea of infrastructure for training. And the reality is that the inference market, Jensen talks about this, but we have an affiliate company, Intelligent Alpha, which uses a lot of these models. We see how long these models are thinking. That inference market last year in 2025 was 5 times as big as the training market.
Right.
Over time, this could be hundreds of thousands of times bigger. So this party is going to continue longer as far as kind of the small versus large cap piece. I made a prediction earlier, stand by it, this is back in December, that small cap's going to outperform. We have an ETF, LOUP, which focuses on those small cap. You saw it this week, AMD up 14% on that TSMC news.
And why is that? Why is that? Just because the gains have kind of run their course for the big guys?
That's one piece to it. But if you just look at, if you're a believer, ultimately it comes down to, do you believe that this infrastructure piece, it comes back to that inference. If you believe that that's the case, just mathematically, these smaller companies should have greater earnings revisions. And so still a big believer. I think Apple's going to be a wonderful performer in the first half of the year, Google for the year. But I think this small cap trade, it happened last year. I think it's going to continue throughout this year.
201. One candle closing out. 10 minutes almost. Now the bulls are trying off of literally 1 minute.
Let's bring in Gene Munson.
The administration is beefing up our military presence in the Mideast. An aircraft carrier, the USS Abraham Lincoln, is on the way. President Trump has threatened to take action if Iran continues its massacre of civilians. Joining us now, retired four-star General Jack Keane. General, you're reporting that armed thugs are walking the streets of Tehran, shooting people who go outside. That's how they've suppressed dissent. Can you tell me more about this?
Yeah, that's actually started in the last 24, 36 hours. Yeah. Certainly, tragedy has already taken place there, as you've reported and others. A few thousand certainly have been killed on the streets, and likely others who have been in prison, you know, close to 20,000, if not greater than that, have been in prison.
Right now.
How many of those have already been hung, we don't know. But right now, the people have retreated to their homes, and there's a Beijing military on the streets. They're kind of paramilitary plainclothes with guns. Also, IRGC forces in uniforms, machine guns on top of pickup trucks, guns on the corners of the streets, and not permitting people to come out of their homes. And if they do, they're going to shoot them. And they have shot them. So they're trying to prevent actually the clustering of people in a protest movement. President Trump, as you have indicated, has told them he is going to hold them accountable, you know, for what they have done. And I would take him at his word. I do think there are a number of things that are likely already underway that are non-kinetic. There's imposing tougher tariffs on those who are buying oil. That's an enabler for sure, in of itself, not decisive. But also covert actions to help the protesters communicate more effectively, given the internet has been shut down.
Someone said,
also,
wake me up when it rejects,
cyber
Jeff.
operations against the regime oppressors in terms of their communication systems, their telecoms, and also their surveillance systems, likely all happening. We have exquisite offensive cyber operations.
Might as well go to fucking sleep,
and
dude.
then also, I think we're likely running information operations against the oppressors. The middle-level leaders and the people carrying the guns, because if and when, and I think it's more likely when, we conduct a kinetic operation, some of it's going to be against the organizations who are doing the oppressing and the killing in the streets. And we want division in that organization when we strip away some of the leaders and some of their capabilities. That is why we're telling them, likely, that you're going to be held accountable to your actions, and we're still going to come for you. We want them to break apart and some of them to go over on the side of the protesters. And then I also think that we're examining our kinetic operations, knowing full well, Stuart, that Iran has options here. They can retaliate against our bases and against Israel, and they likely will do both. So we have to put into our plans how to defend against that, and just as important, what can we reduce in terms of targets their offensive capability to retaliate. All of that is taking place as we speak.
And that's why we're repositioning this aircraft carrier closer to the Mideast, so we've got the ability to perform a kinetic operation, as you put it. We're just assembling the assets in the right place. That's what's going on.
I think what the Trump administration and the Pentagon are certainly doing here, they want to get, when it comes to the kinetic operations, they want to get it right. Our ability to defend and our ability to actually achieve what we want to do in terms of targeting. This is not about bringing the regime down as an objective here. It's about holding the regime accountable for the tragedy they have imposed on their own people. No president has ever done this. President Trump, I believe, is on the precipice of doing just that. However, it will also put the regime, I believe, on a pathway to its eventual collapse, not necessarily as a result of just the kinetic operations, but to further weaken this regime. Stuart, in the 45, 47 years they have been in control here now, this is the most weakened
Why are my Palantir puts going up? Like, what the fuck is going on here?
Politically, economically, and militarily. And our actions will further weaken them and put them on this pathway to hopefully to a collapse.
I just want to ask you about our military. They've got this huge
What the
operation
fuck is
in
going
the
on?
Caribbean around Venezuela, and now we've got a big operation forming in the Mideast. Is our military stretched thin?
Our military needs to have additional capabilities that are in it. That is why the
Get
big
filled,
beautiful
folks.
bill had
There's still a gap
$150
above.
billion in it for the military. That is why the Trump administration has come forward with the 5% increase in our budget, which is quite significant. The budget actually is going to be 5% of GDP, excuse me. It has been 3% of GDP. This is one of the most significant plus-ups since the Reagan administration. And what is that telling us? We have to have more capability to deal with the threats in Europe, Russia, the threats in the Middle East, Iran and its proxies, and the threats in the Pacific, China, the threats in our Western Hemisphere that we're all responding to right now. To do that, we have to have additional capability. And yes,
WM dumping.
that is what we absolutely need, more capability to be able to execute these missions.
General, troops from Germany, France, Sweden,
IWM
Norway,
never gap
they're
filled.
taking part in this 2-day military exercise in Greenland. What kind of message are the Europeans trying to send to the United States by putting those troops in Greenland now?
205 rejection to 210.
Well, tough for the troops to be in Greenland in January, for sure. I feel for them. But the reality is there's a lot of bluster here, Stuart, on both sides, by the United States, certainly, and also by the Europeans. I think it's all about sitting down, talking to each other, and trying to work out what is in everyone's best interest. And certainly the threat of China and Russia imposing their will in the Arctic has got our attention. It is real. And when the effects of global warming in terms of these navigation routes being open much more so because of the ice that's melting up there makes it even more of a threat. Not even to speak of all the minerals that are there. But the reality is, I think we're going to get to a place where it's in the 57,000 people that live in Greenland, that Denmark, who has control of it, and the United States interest here coming together, all for mutual benefit, economically and from a security perspective. And likely this bluster that we're seeing on both sides, the symbolism of it will go away, and we'll get down to hopefully making a deal that makes sense to everybody.
General, you have a great weekend. We hope to see you again real soon. Thanks for being with us today. Yes, sir.
Yeah, you too. Thank you.
What a fucking day, dude. What a volatile day. What a volatile day.
Would lead to a long period of instability. And so then I think President Trump managed to say that the planned executions of protesters have now been cancelled. And so he has implied on one hand that means that he did help the protesters and that he has fulfilled his promise. But at the same time, we are seeing U.S. military assets being moved towards the area. And those would probably be very important if the U.S. were to conduct serious military strikes against Iran. So I think while the rhetoric has implied that there is a ramp off the escalation ladder here, in fact, he's keeping his options open and he likes to be unpredictable. He wants the Iranian leaders to continue to believe that he could strike, and it's very difficult to know.
Candle traders are fucking donezo.
That happened.
What a great week!
Candle
traders are fucking donezo. What a great week! Have a great fucking week, everybody. Have a great fucking weekend, everybody.
This is according to an Israeli source and yet another source who had knowledge of that meeting. But we do know that the visit is a part of the consultations between the United States and Israel over those protests in Iran and the possible U.S. military action.
What happened today?
That meeting that was expected to happen in Miami with the White House Special Envoy Steve Witkoff. Of course, if you've been following any of these national or international headlines,
no
you've
setup
heard Steve
bulls.
Witkoff's name
They sure
and his involvement in these
cooked the
conversations.
puts down
So I
there
have to ask
too.
you, what are we expecting to hear that
No
comes out of
setup
this
bulls got
conversation
cooked that
and the
morning.
trip that he made
No
over
setup
here? How
bulls got
significant
cooked
is
that
that?
midday. no setup bulls
I think
got
this is
cooked
very
into the end of the
significant
fucking day.
because, of course, Israel has
2 p.m.
deep interests in the
That's
outcome of
called
what
no
happens in
setup
Iran.
bulls, just going
We
bullish,
have
bullish,
heard
bullish,
reporting
bullish,
that
bullish,
some
bullish in the
Israeli leaders
3/3,
were actually
not knowing
concerned
setup,
that
and they get
if
fucked
the
on
Trump administration
because
did
there is
strike
setup.
Iran, it could lead to
Right?
a round
This
of
box was drawn
instability,
literally yesterday, man.
retaliatory attacks against
Because
Israel that would actually put it
I
at
don't know, this
threat.
shit crazy. Bro. What
And
the
so
fuck?
we heard that some Israeli leaders had cautioned the Trump
What the
administration not
fuck?
to
Look
go
at that
forward with
rejection,
those
crazy.
strikes. At the same time, though, there have
Look
been
at that
reports
rejection,
that
crazy.
Steve
Why
Witkoff
the fuck did it
is
reject the purple
saying
box?
that now is the moment to renew diplomacy
I
with
forgot about the
Iran
purple
and to
box
get
too,
to
but what
that
the
nuclear
fuck? It actually
deal
did
that
something
previously
NVIDIA.
the US and Iran was
Palantir
negotiating
LOD.
before the war broke out
IWM
between
never
Israel
never
and
gap
Iran
filled. That's
back
the
in
most
June
insane
last
shit
year.
ever. Somebody
So
literally,
what
I think it
probably
was
happening
Ochoa or
is
someone
that
said
the chief of
Ochoa
Mossad,
said,
David
yeah, I called out
Barnea,
the
is
IWM
trying
gap, but he
to
also
shape
called
the
out it never
calculations
filled,
here
right?
of
There was
Steve
another
Witkoff.
fucking
He's
IWM
trying to
gap
get
here,
a
and it was
better
either fill this
understanding
or
of the
fill this.
parameters of
Using all
what
that
diplomacy
momentum.
could look like.
Back
We
at
don't yet
VOC.
know if he's only going to be meeting with
Back
Steve
at
Witkoff
the-
in
Look at
Miami,
this
or if
wedge.
he's going to make the
Look at
short
this
trip
wedge they built.
up to
Crazy
Palm
wedge. They
Beach
broke out of
to
it.
Mar-a-Lago
back
to
down.
see the president himself as well. But we do know that President Trump
Crazy
spoke
wedge.
to Prime Minister Benjamin Netanyahu of Israel last night, and it is very clear that the Israelis want to be closely in the loop as President Trump's thinking does evolve on which pathway he is going to take on Iran.
Someone said I made
I'm so glad you mentioned that
every day
because
this week
that
I
phone
did
call
good.
that President
Good
Trump
for you,
did
bro.
have
You
with
must be a
Netanyahu
deductor.
is the second one
You
in
must be
just
a
the last 2
deductor, man.
days. He also spoke to him on
Fuck all
Wednesday.
speculators.
You're talking
Fuck
about
all
the
candle
importance
traders.
of this
Fuck
region,
all,
but
especially
really
perma
when we
bulls.
think back just
Fuck
a few
all
months ago, the
perma
tensions
bulls.
between
Fuck all
Israel and
perma
Iran,
bears,
and of
but you
course the
must be a
bunker buster
deductor.
bombs that were
Damn.
dropped by the United States. How
And
does that all tie
hopefully
in
you
at
saw the
this
market
moment
update
to
video on
give
Sunday,
us
man.
a sense
Damn.
of where we're headed? Is the
Damn.
temperature continuing to turn
Crazy,
up,
damn.
or is this, as we've kind of trying to decide here, is this a moment
Monday,
where things could
Tuesday,
potentially go in the other
Wednesday,
direction and cool
Thursday,
down there in the
Friday.
region?
Great week.
So I
Great
think we
week.
could be seeing a cooling down in the region in the short
NVIDIA
term,
lower.
because it does seem that
IWM
now
at
the Iranian regime has quelled the protests to a large degree. They've
All-time
done
highs.
this by wielding a huge level of brutality, probably the largest numbers of protesters killed in Iran
see what happens
in
with this 2
decades.
p.m. shit.
And so they have, they have done this in a very brutal way. But it does seem that they have managed to secure calm again for now. But the underlying drivers of the reasons why Iranians came out onto the streets to protest are almost impossible for the Iranian regime to address. Those are things like the devaluation of the currency, the rial, food inflation, rampant corruption, the sort of lack of basic services for so many Iranians.
5-minute pump,
and so I think even if the regime is able to survive this round of protests, another one will surely come before
Did they dump off this
long.
or what?
And so I think the Israelis, again, they really want to shape the course of U.S. actions here. They would love to see the collapse of the Iranian regime and the installation of the exiled Crown Prince Reza Pahlavi, who has said that he's an ally of Israel. But that is far from a assured outcome of this. And I think Israelis do fear that a period of very prolonged instability
even though they look like they're going
in
short side
Iran
more than higher
could
here,
be damaging to its
probability-wise,
own
but
interests,
I
and
just
now
am
might
not.
not be the time while they continue to
literally
focus
just
on
looks like
getting
it,
to the
but it
next
did it
stage of
yesterday,
the
it
peace
did it the day
process in
before,
Gaza. They continue to engage in military operations in Lebanon as well against Hezbollah.
If they do it, I'm literally just
and I
fucking
think from
watching.
what I've seen,
I
they
got
don't
the 2
want
p.m.
to
dump
open
yesterday. You
another
have to realize
very
I got the
dangerous
2 p.m.
front with a
dump
country
yesterday
of
to somewhere
90
here,
million
so
people in
they're doing it
Iran,
fucking again. Oh my God.
which
Doing it again.
maintains
Oh my God.
quite advanced military assets, even though it has been downgraded in the last year through those strikes that you mentioned beforehand.
This
It
is
is
set up too.
certainly so interesting to see how all of this is unfolding. And before I let you go, I want to ask you this. It was also reported that on Thursday, the Russian President Vladimir Putin
Holy
also
shit,
spoke
look
on
at
the
the
phone with
video.
both
Look at the video right now.
Netanyahu
This
and
is
the
bearish.
Iranian
This is
president as
bearish.
well,
This is
offering
breaking
to
down
mediate
yesterday's
between
ranges
these two
that they were
countries.
making yesterday.
I'd like to know, from your perspective and from some of the
Nvidia
reporting that
bearish,
you've seen there in the
IWM
region.
bearish, SPY
How are
bearish,
the relations
QQQ bearish,
between Putin and
everything
those two
bearish.
nations? And is it possible that he could have a
Everything
hand in this
bearish.
conversation that's
They
either
might go
on
touch
the
the
same
LOD.
level or
They
even
might go
maybe
fuck.
greater
Oh my
or
fucking
lesser
God, I
than
can't
the
even
United
fucking
States play
believe
in
it's
this
coming out of my mouth.
conversation?
But I mean, This is the third day
Well,
in
I
a
think
row
Russia
now.
is a much less important
Fucking
actor
dumping
in
at
these conversations, and
2:05.
certainly the U.S. is ultimately the one who's going to be driving the
Time
outcome
is 2:20.
of what happens
This is
vis-a-vis U.S.
already 15
policy
minutes.
on Iran. But I do think
That's a crazy
President
chart.
Putin of Russia wants to be relevant in these conversations. Iran
That's a
is an
crazy
important
chart.
ally of his.
Look at this
He
chart.
does not want to see regime change. He doesn't want to lose
That's
another partner
terrifying.
in the Middle East. Of
One-
course, you'll remember that he
that's
lost
terrifying
Bashar
shit.
al-Assad in Syria when he fell at
That's
the end of
terrifying.
2024. That was a key ally for
What
Russia
the
in the
fuck?
region. And so I
220.
think Russia maintains ties with Israel as well. And so he's trying to play a helpful role here. But ultimately, there are other mediators who are able to do this as well. There are a number of Arab Gulf states that are stepping up and playing this mediating role. And then there are also talks about a resumption potentially of more direct talks between the US and Iran if the Trump administration determines that Iranians are at a weak point and are more likely to make broader concessions about the future of its nuclear program and also its ballistic missile program. So I think President Putin is trying to get involved, but
scandal.
ultimately I don't think he's likely to really shape the outcome of these talks in a meaningful way.
Stonemanich is still unfolding with this situation. It seems like it
I think from the
changes
top
by
of
hour with
205
new
or like
information
210, that would
continuing
have been
to come
fucking
out.
great.
Well, anything else that we should
That would
be
have
paying
been
attention to in
great.
the next few days and weeks as this progresses?
Well, we are in the second week of a total internet blackout in Iran. And so the information that we're getting from there is just partial information from those who have managed to connect to Starlink or other ways to get around the restrictions. But I think the scale of the violence, the scale of the massacres that the Iranian regime has inflicted on its own people will begin to become clearer over the coming days and weeks as more people are able to get information out of Iran. And I think that's going to be extremely shocking. As the eyewitness accounts really talk about massacres of young people in the streets, Iranian regime officials going in and killing those who are in hospitals who were wounded.
Next.
And so I think, although the protests may have been quelled for now, this is something that Iranians will never forget. And particularly as those pictures emerge, I think it's very likely that this will turn into another rallying cry and ultimately will motivate people to go back to the streets in the future and to demand a different political future for their country.
Well, we certainly appreciate you for joining us here on Live Now from Fox. Will Taubman with the Center for Strategic and International Studies there with the Middle East program. Thanks so much for being with us today.
Thanks so much for having me.
All right, wanted to make sure that we brought that to you here on Live Now from Fox. Again, this situation is still developing. It seems to change by the hour, new information always coming in. And so, we have you covered here on Live Now. We're going to slide away for a quick 2-minute commercial break. Stay right here with us.
Copyrighted.
The administration.
That damn music gets me copyrighted like crazy.
Gene Munster, managing partner at Deepwater Asset Management. First of all, Gene, any reaction to ChatGPT's advertisement plans here?
Yeah, Kelly, I'm trying to always figure out who's the winner and who's the loser in this. And is this bad for Google? I think Google is going to do well in 2026. But my first reaction was around figuring out the winner and the loser. And I think that this can be one of those rare cases when both companies can win. Both companies can have massive businesses, advertising businesses within AI, agentic commerce. And the reason why is that consumer behavior is changing. Essentially, what we've seen from Google's results over the past 6 months is that people talk about those 800 million monthly active OpenAI users, 2.5 billion search users. These people are having a better understanding. They can find out more by using a chat bot or search. And so if you're going to put a matrix together in terms of time spent, I haven't done this, But if you look at just where we spend our time throughout the day, that piece where we're searching for information, whether it's through traditional Google search or through a bot, is increasing. And so I think this is a case where companies like OpenAI and Google are both winners. It's going to be a fun storyline and I'm sure create some wonderful debate, but I think they're both going to win.
Look, your point intuitively makes sense because we're so early on. Just this morning, I asked it what earrings I should wear with this dress, actually. I took a picture of the dress and a picture of the jewelry box.
I like it.
And I disagreed with its choice, but it made, you should have seen the chaos of this.
I'm about to go eat good after this shit.
Spread,
Fuck this,
and
bro.
it was able to identify, it said, oh, I think you should wear the gold hoops. And nah, too boring. Anyway, so if that's all the case, and you mentioned that the AI trade has passed 2 hurdles and that it seems to still this tide be lifting all boats here. I mean, there are some firms like your Denny Research, which have underweighted certainly the Mag 7. What do you think is the third hurdle this year? And are you sticking with tech broadly or more specifically?
So I think that the third hurdle, it gets more coming up more recently. Of course, we had the good news from TSMC. We had the good commentary from NVIDIA at CES. But the third is going to be about CapEx guidance. Just a quick view on that. It was 30% growth is what the hyperscalers, analysts were expecting hyperscalers to grow in 2026, 30% growth. That was the expectation.
IWM going lower.
That's
You
now
keep
inched
showing
up to
bounce here.
34%, and so that's moving higher. That's the next hurdle.
All right, guys, let's do the last poll of the day.
Just a couple quick thoughts. First, in terms of the
in your opinion,
kind of what's going on, the bigger picture,
IWM is going to go gap fill up top, or in your opinion, this is going to go drop down. Right? Last poll of the day.
Is investors are making a fundamental mistake when they think about this AI infrastructure build out. The conversation.
All right, the answer is gap fill 1 minute above or continue downwards.
For training. And the reality is that the inference market, Jensen talks about this, but we have
last poll of the day. Everybody please vote. The last poll of the day.
We see how long these models are thinking. That inference market.
Will it go gap fill up here, IWM, or will it just push lower and then figure it out? Or go just fucking not gap fill today?
This could be hundreds, thousands, hundreds of thousands of times bigger. So this party is going to continue longer as far as kind of the small versus large cap piece.
Is going closer and closer to 6,940 with the MACD and volume growing, but slow and slow and slow. Palantir is going for LOD dropping here.
You saw it this
NVIDIA,
week. AMD up
everything looking fucking same. Everything looking same.
And why is that? Why is that? Just because the gains have kind of run their course for the big guys?
That's
Time
one
is
piece
2:26 going into 2:30.
If you're a believer, ultimately it comes down to, do you believe that
one person voted gap fill 1 minute above. 3 people voted continue downwards until close.
Just mathematically, these smaller companies should have greater earnings revisions. And so still a big believer. I think Apple's going to be a wonderful performer in the first half of the year, Google for the year. But I think this small cap
thinks
trade,
gap fill above
looks
like
last year. I think it's going to continue throughout this year.
Or 2v3. Time is 2:25. Huh. Just fucking out of nowhere drop at the end. $230 lower than 225 now. The IWM 1 minute gap is $1 above now. Time is 2:30. What a fucking trap. What a trap at the end. What a fucking trap at 2. What the hell? Hey, are they they're trapping the but they're trapping the puts too though. I mean, what a trap. Like, wow, what a candle. Down, up, down, up, down. Like, what a fucking trap. Perfectly on the bucks. You see how 205 is higher than 1145 too? So technically, medium cycle says this is 1/3, 2/3, 3/3 too. So it's called an extension cycle. They extend the cycle, make the cycle bigger, and then grab way more fucking liquidity and confuse way more, and then do the real move. Oh shit. Crazy. Pretty crazy.
All right, well, welcome back to Morning Trade Live. It's time now for the big picture, so let's welcome in Michelle Gibley, Director of International Equity Research and Strategy, Schwab Center for Financial Research. Very good morning to you, Michelle. Happy Friday. Look, let's just start with China, because obviously we've had these export-import numbers out this week and running a $1.2 trillion trade surplus now with the rest of the world. Obviously, we know the internals are weak, but just talk us through the significance of this.
Yeah, I think it might be a little bit counterintuitive. You know, we had a 20% drop in exports from China to the U.S., but yet we have this huge trade surplus.
2 people voted
China's
gap
trade
fill to
surplus
1
with
minute
the rest
above.
of the world
6
grew
people
by
voted
20%,
continue the
as
downward
you
trend
said, to
into
1.2 trillion. And the reason is that China's been able to find other destinations for its exports, and the exports to the rest of the world really made up for that drop in shipments to the U.S. You know, the trade surplus actually has two components. One is exports, but also imports. And that's really where a lot of the weakness is. Very little's been done to address the problem of weak domestic Chinese demand. And that really limited imports and contributed to that growing trade surplus. And Chinese consumer confidence is still quite low.
Yeah, I mean, look, people like cheap goods, and China, as you say, has managed to very successfully sort of find inroads in places like Southeast Asia, in LATAM, and places like Africa as well. And I mean, you can only see it as far as, you know, some of the trade deals that also it's been strengthening with, you know, South Korea, the EU too.
All right, I'm out of Palantir right now for $250.
About the outperformance in emerging markets.
$3,850 trying to
what you're seeing there, as far as, you know, how much AI makes
just won't fucking limit order fill every single time I chase.
What we heard
put a limit order
the
in.
likes of TSMC out earlier this week. You know, obviously some of the outperformance we've seen in some of the Chinese and also South Korean tech names as well lately.
Yeah, it wasn't that long ago we were talking about China as being uninvestable, and now there's all this optimism about, you know, China's innovation in AI and their ability to adopt AI into their business operations.
Fucking give me a red candle.
Increase,
fucking bullshit.
Revenues and increase margins potentially. And it's, you know, not just China, as you mentioned. In Taiwan, we have TSMC, South Korea, some of the big memory makers. And we've seen earnings estimates for EM really just jump higher in recent months. And all of this AI optimism has resulted in the MSCI EM index up 5% already year to date. That's more than double the S&P 500. And both the S&P and EM have high weights in tech and AI. But the EM index is trading just 14 times next 12 months earnings, a much steeper discount than the S&P 500. But, you know, the question is, how much will these earnings estimates actually come through? There's a risk that optimism becomes too high, and the stocks are actually more expensive than they appear if those profits underdeliver.
Yes, something to keep an eye on. But it's very much why a lot of people here have been talking about how the bull case for AI has been shifting to parts of Asia as well, as far as that story. What's the bull case
I'm out of my
Europe
Palantir puts for $3,800.
I mean, you know, I'm thinking places like Germany, which obviously had a few weak spots throughout 2025.
Oh
particularly when you
fuck,
look at
they're
some of
going
the
more.
PMIs,
I'm feeling
manufacturing
FOMO, but it's
too,
okay.
but
I
obviously
joined
the stock
way
market has
earlier
been
on the way
performing
down.
well on,
I joined
obviously a lot of the
way
defense
fucking
names,
earlier
the
on the
fiscal
way
side of the
down.
equation. Just talk to us about that
It took
particular
fucking
market. Where are the
forever though.
opportunities there?
Nvidia
Yeah, we actually have had a couple
yesterday's
of
level.
nice German
okay.
economic data
It's
reports
okay.
this year, both
It's
on
okay.
factory orders and industrial production. The expectation was
IWM
for
bouncing at
declines, but they
230.
actually increased. But as you said, you know, the German economy has been weak. It rose just 0.2% last year. The expectations is that fiscal stimulus is going to boost growth this year to 1%. And, you know, business optimism about the future remains the highest in 2 years. But, you know, patience may wear thin. Germany has really lost a significant export market share in recent years. Chancellor Merz promised an autumn of reforms, but we really didn't see a lot of those reforms. So the risk is that German fiscal stimulus underdelivers. For now, European stocks still are pretty attractively valued despite the gains last year. And a weakness in the US dollar could also continue to add to returns for US investors.
Okay, and as far as the international stage is concerned, all eyes on Davos next week. Obviously, what these heads of state, a lot of companies are going to be talking about as well. We know that Trump is going to be taking his affordability campaign to the world stage as well. But thank you so much. Really appreciate it, Michelle. Have a great weekend. Michelle Gigley, the Director of International Equity Research and Strategy, Schwab Center for Financial Research.
Damn, dude. Looking good, dude. Love the market setup right now, dude. Look at Nvidia today, dude. Huh? Look at Nvidia today, dude. Yesterday on the live stream, I said, oh, I could see Nvidia maybe pop up real quick again, but like, look at Nvidia today, dude. Look at Nvidia today, dude. Dude. Looking good, dude. Looking good, dude. 187.5. Come on, baby. Give me fucking $4 down into next week. Come on, baby. Let me get 183. Come on, baby. Let me get 184. Come on, baby. Yeah, baby. Yeah, baby. Yeah, baby. They were bullish as fuck on Nvidia yesterday. Remember that? They were bullish as fuck on SOXL yesterday. Remember that? They were bullish as fuck. Bullish as fuck. Remember that. SOXL. What did SOXL do? Went back up. Jesus Christ. Jesus Christ. Jesus H. Mercy. Wow. Spot a gap fill. $168.55. They're crazy. Look at Palantir. Just straight up fucking waterfall today. Straight up waterfall today. And this is, you know, look, a lot of people looking at here and saying, oh, no, it's not going to go more. This is called fucking Cathy Woods. Say it with me loud and proud. Cathy Woods. Motherfucking Cathy Woods. Alright, when Palantir moves, she moves. And this thing is a motherfucking insane candle. I've only seen this once, twice, 3, 4, 5, 6. This is the 7th time in my life I've ever seen Palantir do this shit big ass. Because I've only started playing Palantir big, like starting here. Because I did not really have a setup on Palantir here. And maybe I did play this shit once, but look how dangerous that became. Man, this is fucking crazy. 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 Yeah, testing the floor. IWM bouncing from 230 time is 240. If this 1 minute gap doesn't fill, then it means they're leaving the gap for later. So I don't know if that means next week I don't know if that means Monday. I don't know how that means what, but it's leaving a gap up here. $230 bouncing to 240. Cycle is coming in like magic. Cycle is coming in like magic on IWM. Okay, markets are closed on Monday, MLK holiday. Well, shortened holiday or shortened trading week next week. I think we quite literally watched everything out today. What a day.
Welcome back. President Trump rolling out his 2026 affordability agenda aimed at driving costs down for American households. The president targeting lower rates, focusing on mortgage rates and credit card rates. He's calling for a one-year 10% cap on credit card interest rates beginning January 20th. He's also ordering Fannie Mae and Freddie Mac to buy $200 billion in mortgage bonds to push mortgage rates lower. The president signaling support for the American homebuyer with a new order restricting large investors from buying single-family homes. Joining me now is White House National Economic Council Director Kevin Hassett. Kevin, great to have you this morning. Welcome.
Good morning, Maria.
Well, this is a whole bunch of efforts on the part of the president and your team to try to lower costs. Let's go through some of them. The ban on large institutional investors purchasing single-family homes. How much of an impact has that had on the supply of homes, Kevin?
Right. Well, nationwide, it depends on what you think a large institutional investor is. That there are some definitions that it's people who own more than 100 homes, some definitions that it's people who own more than 1,000 homes. But if you go to the 100-home definition, then you're looking at, in some places, up to 20% of the market is owned by institutions. Now, the institutions have a tax advantage over ordinary home buyers in the sense that they get to write off the depreciation on the home as they're holding it and renting it. And so it basically makes like the tax rules put people out of the running when they want to compete with an institutional investor. And it's something that President Trump just doesn't think is right. And I think that what we're likely to see is an executive order that describes what an institutional investor is, what a single family home is. And then when that comes out, there'll be a clear guidance to people about when they can feel free that they're, playing on a level playing field when they're competing for a home.
Kevin, this 10% cap on credit card interest rates obviously has the banks talking, and a lot of them are very worried about this. This new potential card cap could wipe out the earnings from the card portfolios for a year. Those are the expectations there. If applied to all cards, analysts say it would hurt large bank pre-tax earnings by between 5 and 18%, and wipe out earnings for the mono lines like a Cap One Financial. Your thoughts on the president putting this in place? Obviously, Congress would have to codify this for law. Will these banks?
I almost fell asleep again, bro. I'm sorry, my eyes are closing.
Well, I think, we've been in
my hands are shaking,
with the big banks,
and I keep losing consciousness, and I keep closing my eyes,
who think
and
that
I
the
keep
president's
falling
onto
asleep.
something, that he's got a great idea that they could potentially voluntarily provide for
I'm
people
gonna be
who
real.
are in that
I'm gonna be real. I'm so sleep deprived right now. I'm gonna be upfront with you guys.
Have access to credit.
I
but
barely
they have
fucking
enough
sleep.
income and stability
It's
in
bad.
their lives so that they're worthy of credit. And so our expectation is that it won't necessarily require legislation, because
oh my
really
God, I'm so
great
tired.
new Trump cards presented for folks that are voluntarily
I'm
provided
gonna
by the
sleep
banks.
so good and long this weekend.
And then there's a significant move on
12
mortgage-backed
hours sleep
securities
tomorrow.
with the president calling for $200 billion in purchases. Not technically quantitative easing, but the GSEs are the buyers and not the central bank. Talk to us about this. How significant the move would you expect in mortgage rates as a result of this move from the president?
Well, this is a move that was very much supported by Secretary Bessent and Bill Pulte, who runs Fannie and Freddie. And the basic idea is that if you get the spread down on the interest rate for mortgages, then you help people get cheaper mortgages. And we've seen a pretty big
Man, who the
reaction,
fuck has
to
the
the
market
announcement,
trapped?
and I think that
I
actually
couldn't tell you
makes us
anymore
all feel
on the
better,
video.
because the truth
They're
is
trapped too.
that fewer people are buying homes right now than we've seen pretty much in my lifetime. And the reason is that we had runaway Biden inflation, and then the Fed lifted interest rates so much that mortgage rates went through the roof. And the typical monthly payment about doubled for an ordinary family buying an ordinary home. And the down payment they needed to buy a home went from about $15,000 to about $32,000. And so there's a real lot of room to make up. And we've got a whole bunch of policies that are going to help people do that. You know, the one you didn't mention that we're also talking about, and the president will put the final plan out in Davos next week. I'll be flying up there with him.
Biden
is
inflation.
That we're going to allow people to take money out of their 401ks and use that for down payment.
Well, that's interesting, to take money out of your 401k. Do you worry that taking money out of the 401k is going to hurt people on the other side for retirement?
Well, what you have to do is come up with a way. So a simple way, we're still talking about the mechanics of it, but suppose that you put 10% down on a home, and then you take 10% of the equity of the home and put it in as an asset in your 401k. Then your 401k will grow over time as the value of your house grows. You'll be healthy, have more money for retirement, and you'll have solved the liquidity constraint problem and gotten yourself a house early in life.
Wow, that's an interesting move. We'll be waiting for the president to give us more details next week. Kevin, there's a lot of things that the president has announced as a result of this affordability push, and I want to get your take on the impact. What kind of economic growth
Look, we
would
should
you
just
expect
start a program in
the first half of the
America
year?
where
We've been
young
talking a lot
people
about the idea
just
of
build their own
5%
house.
GDP. Where are you at?
And then
I think that right now, if we look at productivity, it's running at about 4%. And then usually capital and labor add another couple of percent to growth in a typical year. So if we really keep that
young
4%
people
productivity,
build a house for 10 years, 5 years.
And so I have a hard time seeing growth below 4%. And I think we could see some blowout year growth numbers, the annual growth numbers that are things that we haven't seen before. Because look at it this way, in the fourth quarter we have GDP now saying that it's about 5%, a little bit more, but that's with a 1.5% penalty from the government shutdown. So if there hadn't been a shutdown, then GDP now would be telling us about 6.5%. I mean, those are numbers, Maria, that you and I have rarely seen in our lifetimes.
Wow. The analyst community on Wall Street is also talking about a windfall over taxes once we get through April 15th. Households will likely spend at least 70% of their nearly $200 billion 2026 tax windfall, according to Jake Ubina over at Piper Sandler. What kind of a tax windfall would you expect this tax season?
Right, I think that number is about right. Yeah, I think that's about the right number. I mean, the fact is that the no tax on tips, the no tax on overtime, all of that happened mid-year, and so the IRS didn't really have time to change the tax forms. And so the folks that are in that spot, and also the reduced tax on seniors, that they're going to see it in their refunds. And so our expectation is that you're going to have the biggest refund season ever, which is going to be a significant positive stimulus for the economy. But I will add a non-inflationary stimulus, because we've got all the supply going up too. We've got $18 trillion in new factory construction and so on. And so I think that it's really, the Trump golden age is going to be tested, the theory of it, this year. And I think it's looking pretty good.
That is great. Meanwhile, there's a lot of pushback on this investigation into Jay Powell. A lot of debate over Fed independence following the Justice Department's probe of the chairman over his congressional testimony last June. Global central bankers have stepped in to defend Powell. They're warning that central bank independence is a cornerstone of economic stability. President Trump said this week he has no plans to fire Powell. He only wants lower interest rates. But, I mean, Kevin, did Jay Powell do anything wrong to justify an actual criminal investigation while the president wants lower interest rates?
You know, Maria, we at the White House, we respect the independence of the Fed. You know how much you and I have talked about it. It's absolutely essential for the stability of the economy, and we respect the independence of the Justice Department. The problem is, from the point of view of the circumstance, that the Justice Department was asking the Fed to answer some questions, and they couldn't get their answers. Janine Pirro said that she was asking questions all the way back a few months ago. And so they felt the necessity of doing it this way. I find that regrettable. I certainly hope that there's nothing to see here. But, all corners of government, the Fed, the White House, everything, we have a responsibility to the American people to be transparent. And I think that, if I were Fed chair, that I would insist on transparency. I probably would have answered the questions right away. But the bottom line is, I expect, Jay's a good man. I expect that there's nothing to see here, that the cost overruns were related to things like asbestos, as he says. But I sure wish they had been more transparent.
Well, I mean, the issue is now that the Democrats are so angry over this investigation that they're going to reader at BlackRock. So we're all trying to understand, where that process is. But look, at the end of the day, the person has to be confirmed, right? I mean, the Democrats are saying we're not going to move anybody forward, any of the governors, the Federal Reserve. So is this investigation going to hurt the president's agenda and stop its progress?
No, not at all. I mean, the fact is that it's a simple request for information. I'm sure the information will be forthcoming shortly, and then things will move forward. And the people you mentioned, Kevin Warsh, Rick Reeder, they're terrific guys. They'd all be great.
It's some
chairs.
Bullshit.
The president doesn't
they
have
send this Kevin Hassett dude on
CNBC
CNBC for the last 2 months. And then the fucking cow sheet thing, everybody's saying this Kevin Hassett dude. And then Trump just gets on news and says, oh, I want Kevin Hassett where he's at. And the shit just reverts like, what the fuck?
Has the president spoken to you about what's next for you?
Yeah, we'll leave those conversations.
I don't know how much money's behind this thing, but
Kevin, we're waiting on this sweeping tariff decision from the Supreme Court.
Is it
this
politics?
landmark test from the Supreme Court. The justices signaling a decision on presidential tariff authority in an emergency could come as soon as
December
next week.
10th.
We've been waiting.
It was 1 month ago.
The second opinion day came
70%,
and went, and we didn't get the decision. What are the alternatives should the president see a negative ruling from the Supreme Court and put hundreds of billions of dollars in tariff revenue at risk?
Right. Well, we're highly confident that they're going to side with us. That the legal analysis is on our side, and we've talked about that on your show before, so I won't have to go into the details of that.
That shit is
but we
so
also
fucking
have a backup
scripted.
Plan that's really solid. We can put a 10%
that
tariff
thing is so scripted.
right away to make up most of the room, and then use things like the 301
$36 million.
the 232 authorities to backfill the things that we've already achieved with these great deals with the countries. I expect that the Supreme Court is going to be really, really supportive of the president's plan, because look at all of the things that we've created this year. We've got a huge reduction in the deficit. We've got really, really high economic growth, and inflation is way down. If you look at the Consumer Price Index, the last data that we saw showed the core over 3 months at an annual rate at only 1.6%. And so the idea that the tariffs would harm the economy and create inflation has been proven wrong by the data. And I think that the Supreme Court wouldn't want to upend all of that great success either.
Well, the president has used tariffs so effectively, and in terms of ending wars, by the way. But Kevin, you just said immediately we could put a 10% tariff in place. What does that mean? So that wouldn't be under the quote-unquote emergency then?
Yeah, there's a special authority in circumstances like this where there's a 10% tariff that could last for 6 months, which would give you time to sort of iron things out.
And Kevin, do you want to see Congress go for another reconciliation package? It seems the conversation is gaining strength within the Congress, and I know the president has lots of items to perhaps include in a second reconciliation package by year end.
Right. You know, the president is discussing with congressional leaders whether we should do that. I think a lot of us, if you look at like the great ideas to help Americans with their housing issues, believe that a second reconciliation could help us with that. But in the end, you know, I think the majority leader and the speaker are going to have to count the votes and decide whether they can pull it off. But if they can, we'll celebrate here in the White House.
All right, Kevin, great to see you this morning, and we will see you in Davos next week.
Yes,
Thank you so much. All right, Kevin Hassett at the White House. We'll be right back. Stay with us.
I hate that dude. His fucking face.
President Trump unveiling a new health care plan aimed at cutting out the middlemen in order to lower drug prices. Lydia Hu is live at a pharmacy in Woodbridge, New Jersey. I was going to say Virginia. There is a Woodbridge, Virginia, with the details. Hey, Lydia.
Yeah. Hey, good to see you there, Dagan. Yeah, that's right. President Trump is calling for legislation. He's offered Congress
Woodbridge,
a
New Jersey?
framework
What the
for
fuck?
his new health care plan. And he spoke about this health care plan earlier just this hour. Listen to what he had to say to reporters here.
It is a tremendous plan. It's called the Great Health Care Plan. And we're going to get tremendous reductions, as you know, through, if you look at medicines and prescription drugs, they're going to come down by numbers that have never been seen before.
And part of President Trump's plan calls for the elimination of the middleman that you referenced, that process of pharmaceutical distribution of how we get drugs from the drug maker to the patient. He wants to get rid of so-called pharmaceutical benefit managers. They're also called PBMs. And Dagan, you know, the PBMs are so powerful. The three largest PBMs manage almost 80% of prescription drug claims in this country. These PBMs decide which drugs insurance plans cover, and they make money by charging fees and negotiating rebates, which are also called kickbacks, from drug makers in exchange for giving certain drugs preferred placement in insurance plans. So now PBMs are accused of pushing drug prices higher because they favor some of the more expensive drugs with bigger rebates or bigger kickbacks for them over cheaper alternatives. And we're here in Woodbridge, New Jersey. We've got reaction from a pharmacist here to President Trump's health care plan. Listen to what the pharmacist
My sister's a pharmacist.
It's a step in the right direction. What we need to do is actually go after the PBMs, and no other country has to deal with a PBM. And they have to be accountable for all these prices that they're actually bringing on to the customers and to the plan sponsors.
So President Trump says cutting out these middlemen could save a lot of money, upwards of 10 to 15% on average on Obamacare premiums. And Dagan, I should note, for the past several years, we've seen lawmakers from both sides of the aisle proposing legislation trying to eliminate the PBMs from the marketplace. We'll see now if they have President Trump's full backing and even calling for this measure, whether that can finally become a law. We'll follow it. Dagan, back to you.
Thank you so much, Lydia. Lydia Hu in Woodbridge, New Jersey. Steve, Larry Kudlow said this last night, and I paraphrase.
Hell no. So dumb. Fucking whipsaw. It says we got whipsawed. It says the market got whipsawed. They whipped the shit out of us for sure.
To say the least. But let's sort of zero in on earnings and what we've been hearing so far from the bank stocks. What is this telling you about how earnings are going to go and whether that's going to continue to sort of propel stocks higher?
This is so dumb.
Well,
We did
Julie, it's
fucking
still
nothing.
too
We
early
did
really
nothing.
to judge
IWM did nothing.
the direction of the whole earnings season with really
It's so
things
dumb.
just getting underway with the big banks.
Look at how bullish
What we've
IWM
gotta
is. Like, what the
say,
fuck is
with
this?
just about
CPI just pump up
5%
and just stay there.
of the companies, a little over 5% of the companies having reported thus far. I mean, my gosh,
We
this
did
looks
nothing.
like we're going to have a good earnings season, and a lot of surprises that are positive surprises.
All we did was
I think
consolidate
82%
today,
are
almost.
positive surprises. And we think the guidance is good. Some of the selling we've saw on
IWM never gap
on
filled
good
above.
news, pretty typical of late. The traders seem to sell things. They sell less harshly on good news and positive surprises, and of course they'll trounce something that disappoints. Even if guidance for the forward is better, the show me. It's we're from Missouri kind of attitude.
Yes, definitely. John, you know, as somebody who is pretty darn bullish for this year, I believe you have one of the highest, if not the highest, targets for the street. I'm curious how you're thinking about this year differently from last year, or if you are. Like, is the same playbook going to work this year?
It's a similar playbook, but it's a broadening playbook, and we've seen the broadening really goes back to the fourth quarter of 2020. It had been a bear market kind of year, and the market got trounced on a lot of negative pitch book stuff that was never realized. You know, earnings recessions and unemployment and recession, all that didn't happen. But the bounce showed an interest in things beyond tech, but with tech in the leadership. But it's become much more pronounced now. I mean, if you just look at what the market has done so far this year, I'm looking. Materials are the best performing sector year to date, up over 7%. Industrials nearly 7% up. Energy up 6.5%, and staples up 5.7 or 5.3. No, 5.7. Looks like I need reading glasses. But anyway, what we're seeing is a rotation. And it's not necessarily away from technology, as we would think it's some profit taking to broaden one's exposure and diversification. And then the smalls and mids are doing great. They are essentially outperforming stateside with gains. Mid caps up 6.4%. The S&P 600, a better quality small cap, up 7.3%. And the Russell 2000, when the tide comes in and all ships float, up 7.76%.
Yeah. I mean, it's been pretty remarkable to see that Russell 2000 make new highs and to see some of that other rotation that you're talking about.
Motherfucking Russell
But
2K.
John, man, we've been talking about broadening for a long time. This is something I've been talking to you about. I've been talking to other investors about for a while. And we've seen these sort of little feints at doing this broadening that then have faded. And so I guess the question is this a more sustainable broadening than what we've been seeing over the past year?
We believe it is. We believe that at this particular stage, we're beginning to see, if you just consider, what was it, the most recent GDP number, I think the third quarter came in at 4.3 versus 3.8 or something like that expected. It's the economy is showing resilience and strength, but not robust. We don't want to see robust. We like resilient, great operative word. And then in terms of corporate earnings, Managements are doing well in terms of the consumer. Soft data, of course, can tend towards the negative, but the hard data shows the consumer keeps shopping, even though perhaps they've toned down the volume of spending. But at the same time, they still shop because in the U.S., we judge our jobs and our dedication to things on what we can buy indeed for ourselves and for our loved ones.
John, do you think that if the broadening is going to stick around, are you participating in some of the buying in some of these groups that you were just talking about, materials, industrials, even energy?
Right now, we hold positions in all 11 sectors. Our overweights tend to be infotech, communication services, consumer discretionary, industrials, and financials. But we also hold positions that are slightly overweight where the market is in energy stocks, as well as we have positions market weight related to utilities, as I recall.
And if I, as a bullish guy, as an optimistic guy, I think probably by nature as well as by profession, John, if I was to pin you down and say, listen, what could go wrong this year? What do you think has the highest likelihood of going wrong this year? What would you say?
Well, first thing I would say is anything can always go wrong. It's always the unexpected that bites, right? But we'd have to think here that on expectations, it could be just earnings disappointments, all of a sudden a realization that technology's morphing process has reached a plateau, like it did during the tech bubble, or it
Let's put that question to our guest who's here on set with us, the CEO of VanEck Funds, Jan Van Eck. We were debating last hour, did the bond market react to this or not? I mean, the 10 years at 421, is that because of this or stronger eco data? So how are you processing it all?
I mean, I do think, obviously, the Fed chair selection makes a big difference to the markets. Scott Bessent gave a talk, or did communications in Q4, that I think the market is
Russell
really
2000 up 2.5% this week.
Called Gain of Function Fed that basically said the Fed went nuts during COVID and stimulated for way too long. And he's given a very strong academic case. He quotes articles from MIT and the San Francisco Fed, like not his home base. And he's laid the intellectual groundwork for a much less interventionist Fed. So we're having a paradigm shift kind of regardless. He also said,
is that why yields are rising? Or is that, what should the impact of that be if it comes to pass?
Well, I think the administration would give itself an A for its performance last year on the fiscal and monetary front, because the 10-year, came from a peak of 4.8 down to 4.1, 4.2. So I think they're very happy. He, in fact, in that interview, he thought interest rates were normal, which means they're not going to go nuts and try to cut the short term, because I think they realize that they're graded on the 10-year or the 30-year. And that's where Japan's interest rates are really rising, and the UK is not looking great either. So the country's in trouble. It's the longer end.
How much, we talked about it a little bit yesterday with Howard Lutnick, Commerce Secretary. A lot of cabinet members on this week.
Indeed.
Rocking and rolling. This dollar debasement trade that's been going on, the U.S. dollar's weakening, but also the yen is weakening, the euro has been strengthening. How much is this factoring into your thinking about how and where to invest?
Yeah, I don't feel strongly about the dollar this year. First of all, we don't really make currency calls. It's pretty hard.
But you have an ETF around semiconductors. Those companies are based in Asia largely.
Yeah.
There's a huge amount of currency indirect exposure.
No, so what I was going to say is the U.S. economic growth looks like it's going to be really good this year, right? 2%, 3%, maybe 4%.
Lutnick said 5 yesterday.
Yeah, I know. The administration is talking 5 and 6. Anyway, that's a sort of side conversation.
Is that a no?
Well, they include...
Is that a 4.1 from the Bulgarian judge? Like you're not all in with the 5%, Jan?
So the Atlanta
who these people own? Van X funds. These people own SMH. Van X Semiconductor ETFs. These are the owners of this people, bro. SMH. Fucking semiconductors ETFs.
Nowcast.
And suddenly it went up to like 5+% for the fourth quarter, but a lot of that was net export. So I'm like, I don't really know what that suddenly appeared out of nowhere.
Like 2%.
So listen, so what I'm saying is if economic growth is good, that's not going to be super weak for the dollar. So I think, I don't see something strong magnetic pull for the dollar this year. But we love gold for like many, many years. And that's sort of the context and a little bit of every time the U.S. does something crazy that, the rest of the world's like, I just want more gold.
Do you get itchy at all from a trading point of view when you watch, when you feel like a genius? You go, it's nice, but is it also a sign that when we know that there are hedge fund participants in that trade across all the metals, do you ever harvest gains or is it the kind of thing where you just say, this is now going to basically be the new floor for prices and you don't worry about it?
No, we literally do that. We have model portfolios that we manage for financial advisors and clients, and we have been selling gold over the last 6 months, basically, because it's such a big holding for us. And listen, it could go sideways for a year. But I just think in the context of where India and China are such a large part of the world, they are not dollar-based economies. And what else? I think
Look at
it's
this
gold.
shit.
I think gold is the currency.
And
it's like
what
100
the
years ago.
fuck?
Your rare earth ETF as
Look
well
at this
is
shit.
lying this year. I mean, again, maybe that's not a great
What
sign.
the
but
fuck?
It's just a sign that the world is kind of
What
fragmented.
the
Yeah,
fuck?
I think that's so. I called nuclear nosebleed levels, 3 or 4 months ago. I think rare earths are kind of at nosebleed levels now. So.
Huh? Every fucking day this thing's going up like $10. What the fuck? Truly, are we setting up? I guess this thing is fucking crazy. SMH. Jan Van Eyck. It says Bitcoin third straight weekly gain for the first time since July.
To make sense of it all, let's bring in James Luce here. He's the co-founder of Capital Alpha Partners. I suppose we can make sense of it, James. The question is, how much of it should we expect will come to pass?
Well, Kelly, the technical term is ice cream headache. There's just too much fun, too many things coming out to really make sense of. And I think that's one of the market's problems in assessing what's going to happen with the Fed chair, what's going to happen with tariffs, what's going to happen in the international situation. Trump has got so many plans he's announcing, and yet, as is the case with the data centers, there's no real sense of how the plan will work.
That said, there's a lot of people on the street. I don't know what we'd call this. We need a pithy acronym. I won't mention taco, but they would say you want to follow Trump in these trades. No one's fighting this, right? They're saying if you can figure out what he might announce, or if his goal is to lower housing prices, be in that trade. If his goal is to lower prescription drug prices, be careful in that trade. In other words, figure out what the president wants, and then, in a way, jump in on the assumption that in one way or another, he's going to get it, or he's at least going to affect the trade for now.
Well, he has the advantage of initiative on his side. He's always on the offensive. He's always attacking, and that means that for the initial period, at least, he's got the momentum. People are trying to accommodate him. It's just like one of the great generals of the past, whether it was Napoleon or Admiral.
Oh my God, he said Napoleon. He said Napoleon, not me. He said Napoleon, not me.
Always stay on the offensive. He's on the offensive somewhere else before he changes. Before he finishes the other topic.
Right, which I suppose you have to do when you're trying to do multiple things at once. So Elizabeth Warren gave a speech earlier this week to Democrats about how they should try to win the midterms. And her message was, it's all about affordability. Keep it on the economy, keep it on the pocketbook. after the president heard that is when he called her and said he would partner with her to try to lower swipe fees. So they are both vying. It seems that sort of the political class in Washington, Republicans, Democrats, they all realize this is what really matters to the public. I don't know, though, what that implies when you have a Republican administration and a progressive Democrat who now seem to be aligned.
Well, they're both taking the populist line. Trump is going after credit card companies for swipe fees. He's going after big tech companies for power costs. He's going after healthcare insurance companies for excessive costs of healthcare. He's going after drug manufacturers. He's consistently trying to be the most populist guy in the room, and sometimes that means having to compete with Elizabeth Warren for that title.
Do you think it will work? What's your... And he says himself, if you guys don't win the midterms, I'm going to be impeached. So his approval rating is, I think by historical standards, maybe a couple of points shy of where he'd want it to be for a little bit more momentum right now. And what's your expectation about how the midterms go?
Well, right now we would expect them to be a narrow win for Democrats, not narrow because they don't have big support, but narrow because of districts and gerrymandering. There just aren't that many flippable seats for Democrats to win, but it would still be a decisive win. And this is a big change from where we were 6 months ago, where the Republicans were surprisingly competitive in their midterm outlook, given given the normal disadvantages that come with being the president's party and in the majority.
And if that's the case, then what is the clock for him to get policy done in the months that remain between now and, I guess, January of next year?
Well, most of the studies suggest it's late spring, early summer. So, May, June, July is really when he needs to turn things around. The good news is that he does have time to turn things around. He's got the State of the Union. There is time to do a healthcare package.
Bulls or bears to Power Hour. This is Power Hour. This is Power Hour. I don't know. For 15 minutes, it's been Power Hour. We have no direction still. No cycle still.
In a way, the more
not even tiny. This is terrible.
Terrible
long or terrible short. This is just fucking terrible.
But he
no direction showing at all. Absolutely at all.
And focus on them and try to get some domestic policy done despite his global distractions, or he's going to have a very tough midterm.
Couldn't even fucking tell you what's about to pop or drop. There's just no direction. Market waiting until close or some shit. So weird. Will the pressure release?
BESTSPY's here, CEO of Sound Planning Group. Thank you so much for being with us. We'll get to gold because I know that was something that you liked a long time ago. So we'll definitely have to talk about that and the run we've seen. But you're talking about investors' positions in their portfolios now with a remodel in progress. What's the remodeling? What needs to be done?
Well, great to be with you, Nicole, as always. And an analogy of where we're at right now is it feels like we're remodeling a house while also still having to live in it. Like roughly 1 year ago, President Trump took office and began to structurally change the economy. This is structural, not cosmetic. So capital right now coming back to the United States. Foreign nations are going to be
already.
investing.
I thought it was 3.
They're preparing to deploy capital here in America, hire in America, produce in America. I grew up at a time when things still were made in America. That's going to happen again. So this is really bullish long term. But everyone who's gone through a remodel knows that it's noisy, it's messy, it's uncomfortable before it gets better and looks better. So we find ourselves in a time right now where things look mostly optimistic. It seems like things are in control. The markets are doing really well. But the average consumer today is still under a lot of pressure. Inflation has not gone away. It's just slowing down. Prices on essentials at the grocery market, on insurance, utilities, services, are up about 29% since we started talking about this stuff in 2020. And so the Federal Reserve is kind of boxed in right now. And obviously all eyes are on the Fed. Massive national debt, exploding interest, and the risk of cutting rates and reigniting inflation.
It does look more bearish than not.
setup potentially for volatility here as we enter into 2026, although I am mostly optimistic about where things are going to be going.
All right, understood. So you're mostly optimistic, and you still are a believer that you got to have some metals and miners in your portfolio, right? Like which ones?
Okay, well, first, we have to recognize that central banks around the world have been buying more gold than they have treasuries, which is a massive, massive, massive change in how they've been doing things. So I really like silver very specifically, but also gold. And so, buying indexes like GDX or SIL are a great way to get allocated to many different producers. So you don't have to select an individual name, and you can get a lot more of this upside growth. Now, here's the thesis behind it, and that is that the metals right now have been on a tear and they've gone up. I believe that they're going to go far higher than where they actually are right now, even in a short time frame. But the point here is this: you can't just print gold and silver. You've got to actually mine it out of the ground. This takes a lot of time. So producers that are producing have a whole bunch of ounces that are sitting in the ground right now for maybe a couple of bucks or a fraction of what the price is above ground. And when you don't see the input costs of what you have to pay to an employee, how much diesel costs, getting different permits, et cetera. When those prices are not going up as much as the price of the metals, I believe that these are going to be some of the most profitable companies that we could be investing in maybe over the next 3, 5, and even 10 years. Very specifically because the world needs these metals. They want the gold as an alternative to the treasury right now. But more importantly, silver has a physical application inside of all the data centers, all the electronics, all the AI. These are, and solar panels. These are things that are not going away. They're going to pay whatever price it takes in order to continue to progress with the technology. And we need far more silver than we actually have. And so this is why I am personally very invested in physical silver, but the metal miners as well. And I believe that this is one of the most important things that we can be paying attention.
Look at IWM. Not going back up. Still green by 0.21%. Nvidia green by 0.41%.
Let's talk about that statement about his future and what's been going on with the banks this week. Mike Mayo is managing director and senior banking analyst at Wells Fargo. Was he kidding or being facetious, or is this a genuine statement?
Well, my view is Jamie Dimon would like to stay another 5 years. And if so, I think that would be good for JP Morgan shareholders. I consider Jamie Dimon the $50 billion man. And that's because if he were to leave, I think the shares would decline maybe 5%. And you're talking about a market cap. I think JP Morgan has a chance to be the first $1 trillion market cap bank.
Where are they now?
Over 900 billion.
Are they really? Wow.
Yeah. So you're close to striking distance. Yeah.
He's had a legendary run, which you use that word.
If JP Dimon leaves,
still at it. Is Warren Buffett?
Sorry,
Elon Musk and what he's meant to that bank.
What am I saying?
These aren't
if
presidential
Dimon leaves,
terms. He doesn't have to leave.
JP Morgan is going down like 7%.
This is who Jamie
over
Dimon
like a
is.
fucking week.
This is his identity. I mean, he is a generational CEO. And if you look at the results, JP Morgan has had best-in-class growth, efficiency, returns, and especially stock price performance.
What do they do better than other people? Like, what's the Jamie Dimon, JP Morgan special sauce? Because Goldman Sachs is also hitting new highs constantly. So is it those two and kind of everybody? Citigroup's doing well? What do they do better, though?
Well, Citigroup is my number one pick. They're worst in class. And under Jane Fraser, they're going back to becoming a more normal company. And you can make a lot of money on a stock price. That's my number one pick. But the two best-in-class firms are JP Morgan and Goldman Sachs. Do you know what they do better? It's the feedback loop. They're always talking about what they don't do best. And a lot of other companies talk about how we're doing great, we're doing great. We're in the middle of earnings season, by the way, this week. And all these banks that are subpar performers go, look at us, we're doing so well. Whereas, Goldman Sachs says, hey, we want to do better in Asia. JP Morgan will say, in some sort of trading in some country somewhere, they're number 3, they want to be number 1. They are always,
Man,
they're
look
never
at that
satisfied.
Wednesday dip and
that's
then a
what
rally
JP
up
Morgan does,
Thursday.
and Jamie Dimon's on top of it. And I didn't like the answer Jamie Dimon gave me when I said, why are you spending $9 billion more this year?
Financials are back up too, looks like, into Friday.
I'm like, well, trust but verify. But he has earned
As if
a
this week
degree
never
of trust,
happened.
because if there's an issue at JP Morgan, don't you have the feeling that Jamie Dimon will be on top of that in a nanosecond? So they're more intense.
I love it.
And being in the office, I mean, that's part of
It's
that
like
intensity.
this week never happened.
And
I
they
love
gain
it.
share in all their major lines of business. So this is a best-in-class global bank. It's right now the best bank that I've ever covered in my 35 years.
What?
Name another bank that's done better than JP Morgan.
Well, I can't name a bank. It's you're the analyst. It's Mike Mayo.
So what's going on this week?
We barely went
if
down.
You just, these declines.
This is actually really good.
Coincident with a lot of the president's
Down
announcements
super into
throughout
Wednesday,
their earnings
recovered
season.
all, and then we're at
Is
the
it
same
worth even
spot.
wasting any oxygen on why they're down 5% this week, or is there something meaningful in there?
Well, first you had the proposal for a credit card rate cap. All right, so I think that's fading as the week ends here a little bit. We'll see what President Trump has to say next week about that. So that hasn't gone away. You have an expectation that earnings would continually be revised higher. I actually lowered my numbers on JP Morgan because they are spending more, and so I'm being conservative. So just because they're the best bank I've ever covered, as of now, doesn't mean that'll be the case in 1, 3, or 5 years. So I'm never satisfied based on a past track record. But having said that, we are in like the earlier stages still of a multi-year earnings growth, multi-year deregulation, generational.
Even if Powell doesn't leave, even if the Fed board doesn't change, even if we don't get what was hoped on that front, and maybe we will.
When it comes to bank regulation, I think almost everybody agrees there's been too much bureaucracy, too much red tape, too much uncertainty about the rules around the capital banks have to hold. Everybody agrees on those parts, and that creates more confidence about when you're making your plans, and let banks think about being banks and serving their customers as opposed to...
Let banks be banks. No, that was the famous... Let Trump be... Anyway, I take your point.
As opposed to regulatory box checking, let banks think about serving their customers.
Let banks be banks, man. Let candle traders be candle traders, man.
Here with her trade on that and a few others ahead of their earnings is Victoria Green, founding partner of G Squared Private Wealth and a CNBC contributor. It's great to see you, Victoria. You pick up Netflix before the results?
Let it be. Let it be.
Here. For me, there's a lot of show me in this. This deal has a lot of fraud. Mostly, is it going to get regulatory approval? Netflix is definitely betting on that. They've got like a $5.8 billion breakup fee if they can't get approval.
Let it
but it's gonna be all
let
the
it
Warner
be.
Brothers deal. They have
You
great
can't
growth.
fix
This is their first push into
everything.
inorganic
Let
growth.
it
There's a lot of
be.
debt to
Let
take on.
it
So there's a reason that
be.
investors have punished the
Do
stock.
do
Long
do
term, could be
do
massively
do.
accretive.
Here we are. Do do do
For me, it's a hold
do
and see if they can execute and see if they can
do 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 do.
Still, I'm curious how they did with the
0.5 fib
fourth
IWM.
quarter last year. Let's move along to Intel, though. That's reporting on Thursday, I believe, or Wednesday afternoon. They're up about 3% this week. They've been flying over the past year, let's be honest. Do you stick with it?
Yeah, I do. I think
IWM at the 0.5 Fibonacci here.
Out of NVIDIA, you want to own other chip stocks. Intel, to me, the turnaround story is real. Now, obviously, they need to execute. There is going to be a hyper focus on execution, on margins, on their revenue growth. What their plan for 2026 is. The NVIDIA investment in the $5 billion, that's a great sign. But then there were rumors that, hey, maybe Intel's 18A failed the NVIDIA chip. So we look at it and say, yes, we want updates on 18A, maybe on the 14A, how the foundry business is going. We expect robust PC and server demand to help drive revenues. But this is a show me company now, okay? We're no longer super cheap. The market is there. Now they got to take it.
Yeah, that is Thursday, just to get clear on that. And then Friday comes along, and usually a quieter earnings day, but we are going to hear from SLB. And with everything going on in Venezuela, the president, of course, vowing to rebuild the country's oil industry, is this a name that you buy because crude prices have been on an upswing and maybe there's going to be some involvement there, or do you stay clear of this space till things settle down?
I like SLB or Schlumberger, as we old school people still call it. I think it's a buy here because I look at Venezuela. This is the premier oil services for international and offshore drilling, and that's where the growth is coming from. And they are already in discussions maybe of entering Venezuela. They have a tech stack partnership with Chevron. They kind of do their digital platforms for Chevron. They've got a really great foothold in there. And so for me, this is all about the international growth. They also have some significant deal wins in Saudi Arabia. So while growth and drilling activity in the Permian and the Balkans, you know, had Howard Ham coming out saying, hey, we're not going to have any rigs in North Dakota for the first time in 30 years. Wow. International drilling activity has been very strong. Schlumberger is the leader there, and I think you really want to toehold in this stock.
Wow. No movement. No movement whatsoever. Wow. That's fucking crazy. Where do we go? We went up and down for literally the last 4 hours. Sorry, the last 5 hours since about 11 a.m. 12, 1, 2, 3, 4. So 5 hours of consolidation, 5 hours of nothing, 5 hours of going up and down, and now we have a fuck ton of liquidity here for next week. It's a fuck ton of liquidity here.
Our next guest is the biggest bull on the street. Patrick Scholes is the lodging and leisure analyst at Truist. It's great to see you.
Thank you, Kelly.
Thought you'd be on a ski slope or something to join us.
I wish.
Doing your channel checks sounds like kind of fun if you're a skier. It's not like, I mean, there's snow in Japan. There's snow here in Vermont.
Bears are coming here on SPX big time.
So
God damn.
Look,
dump again.
Well,
Dump. Look at the MACD going bearish. MACD going bearish. IWM dumping.
Continue to be a
NVIDIA
tough
dumping.
season. The good news for Vail, though,
XPX is dumping.
More so than ever before. They've pre-sold their
They
Epic
released
Pass,
the pressure
basically
down south.
locked
Look
in,
at the MACD today going
fair
1,
amount of their
2,
revenues
3,
ahead of
4
the
times
season.
down at the last
Number
minute
two,
too.
if we compare and contrast the
3.
last time they had a
3
mediocre
p.m.
at best
pushing
season
into
about 10
3:30.
years ago, they've geographically diversified
250.
since then.
3
They got
confirmation
a lot in New
rejection at
England now.
3:15.
They have more up in, over in Europe, and as you mentioned, you know, the snow is good over there.
The shares are up 6%.
Look at the 1 minute gap here. SPX 1 minute gap.
Wow.
It's down 50% in 5. What's wrong? More people are snowing. They sell out. I ski. I see
bottom of the box testing.
hour-long lift lines, and the stock keeps going down.
Bottom of the box testing.
They've had some operational issues in the last couple of years. What's changed, though, in the last 9 months? They've brought back their superstar CEO, the guy who really introduced the Epic Pass, turned the industry around, and that's really the hope here, that you can bring in your former hero, make it better.
Rob Katz.
That's right, Rob.
Is that why you're optimistic on the stock, or?
That's one of the reasons. The other is it trades at
going lower.
9 times EBITDA. I
Barely.
think the underlying assets are at least 12 to 13.
SPX is going
but it's
lower.
Take a creative and aggressive guy like Rob from a private equity background to figure out a way to monetize.
The MACD volume is barely there, but it's still going. To be honest with you, there was more volume and more MACD and more volume at 10.
That's for him to get
more
paid
MACD and more volume at 10:35. More MACD and more volume at 11:55. More MACD and more volume at 2:15.
Is it rates in
there
my
is
buy
not that much
ratings?
volume right now at
It's-
3:30,
I
but
would say
they're
it's in the
showing right
middle,
now anyway.
Middle of my ranking.
All right, just compare the MACD. That is a perfect touchstone, 6,960. And then purple box lost. Now what is it showing as? Now it shows as 1/3, 2/3, 3/3 from the middle of the day to 210, 205. And then 205 is now showing 1/3, 2/3, 3/3 downwards. This is the 3/3 bearish cycle. It looked boring as fuck earlier because we were inside a humongous cycle. A humongous cycle. There has been one wave down today. There has been one wave up today. And another wave down today. So the wind direction, or the wind direction was like southerly mixed, if that makes sense. It's south, and then the roof is here. We never broke the roof, so the wind direction isn't north, it's actually south. It's south, chopping, playing in the pivot points. Pivot point 930, Pivot point 1040. Pivot point 940. Pivot point 1040, right? You see how it's aligning, playing in between the two pivot points. And market either breaks the HOD, it closes in between the two pivot points, so it closes, breaks the floor, it sets a new floor, and reverts into floor. Right now, it looks like we're closing somewhere in between. Somewhere in between. Very, very weird price action on the video. And now until the low of the 330 breaks, all bears and puts are in danger here. All calls are burnt anyway. But until 330 breaks,
President Trump is winding down his interviews with potential Federal Reserve chairmen.
is there something wrong with this title? Does anyone see anything wrong with this fucking title? What the fuck? We're about to get the CEO of BlackRock as the Fed chair. What? Who is this guy? Chief Investment Officer of Global Fixed Income. Jesus, bruh.
He spoke with BlackRock's Chief Investment Officer, Rick Reeder, and he did a second interview. Fox Business had the exclusive news about the meeting happening first, and now we have the results of the meetings. Fox Business's Edward Lawrence is live from the White House now with the latest. Edward, good morning to you.
Good morning, Maria. And in this Fox Business exclusive, Rick Reeder, he was in that meeting. He talked about the Federal Reserve profitability. He talked about the monetary policy, the possibility that it needs to be stable going forward. He also talked about the U.S. debt dynamics. Now, in the room for this meeting, which is the final meeting of the Federal Reserve candidates, was President Donald Trump, Vice President J.D. Vance, Susie Wiles, the Chief of Staff, as well as Dan Scavino, the Deputy Chief of Staff. Now, Reeder stands as the only candidate who does not have Federal Reserve as well as government experience going forward on that final list. Now, my sources are telling me that the people in the room viewed that as a big positive going forward for Reeder. Now, this is the last interview before the president makes his final decision. Through this process led by the Treasury Secretary, he started with 10 names from a wide range of backgrounds to this initial list that we will see here momentarily. 4 names left on that list. President Trump then took the time to get to know each candidate on that final list. He is expected to make this final decision, Maria, by the end of January. Back to you.
And of course, the president is headed to Davos, and the chairman
So
of
in 2 weeks'
BlackRock,
time,
which is Rick Reeder's firm,
news is going to hit the market.
now taking on
Everyone's
an
gonna freak
additional
the fuck
role
out.
at the World Economic Forum. He's going to be the chairman of the World Economic Forum. That's Larry Fink. So I'm sure the president will be spending time with Larry Fink as well in the week ahead, and will likely share info about those meetings as well. We'll be waiting for the big announcement. Edward, thank you. Edward Lawrence with breaking news exclusive on those two.
End of January, that's it.
Continental Resources founder and chairman emeritus Harold Hamm was at the White House meeting with the president, and he joins us now. Harold, fantastic to see you. I call you the pioneer of hydraulic fracturing and horizontal drilling, the shale revolution in this country. Terrific to see you. Talk about Venezuela, Harold. I've listened to some of the things that you've said. You've said that down in Venezuela, the quality, the rock quality from a resources standpoint, kind of meets the criteria, but it's really a geopolitical issue right now. Are you committed to putting money in the nation?
No, I haven't committed. It's something that, of course, companies like ours would look at, and I'm sure several companies are. The countries that we've been very successful, the United States, in working with companies that have production like Venezuela, they put in place treatises that allow companies to work there, for decades. And these have worked out. There's been several of them that over time this has happened. So hopefully Venezuela we can do the same thing. We, the country, Trump, and I trust the president to do those things, which would be a win-win for Venezuela. It obviously works better with U.S. technology there. At one point, production was, 3.5 million barrels a day. Right. Today, like you showed there, 800-some thousand. So it has dwindled off to nothing nearly. And so they need our help in that regard. But companies can't go down there and plow a bunch of money in if it's going to be nationalized again. Darren Wood said Exxon had been nationalized 2 times already. Right. Certainly couldn't do it again.
Right, and that you can't, if you're running a publicly traded company, pardon my English, but you cannot screw your shareholders that way. You can't run that risk. Go ahead, Brian.
No, so I want to follow on that. There are a lot of people who I think had hopes in the short term that Venezuelan oil could make a big difference in the United States or around the world. I've heard you say, look, think of this as a long-term play. There's a long-term solution here. What does long-term mean for you, Mr. Hamm?
Well, I think I talk about it in decades. With a country like Venezuela, it takes a long time. You look back at the last build-up that we just talked about, up to 3.5 million barrels a day. A lot of American oil companies were involved there. A lot of people that I know live there and like Venezuela as a country. So it can be done, but it takes an awfully long time. It just doesn't happen overnight. But as far as we'll need it in the future, for sure. It's a different type of oil. It takes some upgrading usually, diluent, which is like condensate, a lighter product to mix with this bitumen or like tar that's produced down there in the Orinoco Belt to even move it. So yeah, there's a lot of things taken into consideration here, but we will need it. We, the country, we, the world, will need it in the future, but you can't just turn it on overnight.
Harold, I love hearing you talk about oil exploration and production. or even natural gas. But bigger picture, particularly with the unrest in Iran. But oil, the price of oil, if you look at WTI, West Texas Intermediate, it's been stable, low. Right. And is that because of the president's policies of energy security? Is our national security? It's below $60 a barrel today. And granted, Iran is still pumping, I think it's like at least 3 million barrels a day, exporting 2 million, according to some, even in November. But is it because of what the president has given us and the energy industry?
Certainly, the president has done great things in the industry. We all recognize that. I think everybody that pays any attention at all realizes that opening access to public lands and doing all the things that he's done, working on permitting now to improve that and move
Robinhood
forward.
options are closing.
All kinds of
Weebwood options are closing.
Not just oil and gas,
345 is here.
Everything that's needed.
All
So
out of
the
the money
president's
calls,
done great
all out of the
things,
money puts. They are
and it
closing
has.
almost.
It's lowered the
everything from the
cost
morning.
of our
Everything from the
operations
morning
and
dipped
everyone else. It's gotten to the low side. It's a great bargain today at $59. Yeah, we need to do some things looking forward for America, like China is doing. They're putting in storage, have plans to put up to 2 billion barrels.
Right.
We ought to refill our SPR while things are real cheap. Doesn't that make sense? He does sensible things like that. So the president, I think, is for it. You know, we've got a bill coming up. I think they'll see that done as well.
That's right.
Harold Hamm, great to see you, sir. Hope to see you in
Good
person.
to see you, Dagan.
Next
Always
time.
enjoy being on your show.
Always enjoy talking to you. More time.
Thank you.
President Trump welcomed Stanley Cup champions, the Florida Panthers, to the White House. Watch.
The 2 cups was pretty good, but that walk with you might have trumped it all there. That was pretty amazing. No, I just want to say on behalf of the whole...
I forgot this is yesterday.
President Trump is rolling out his
are the story, though, this year, right? Think about this. Last year, small caps, I've got 2 charts here, the Russell 2000 versus the S&P 500 and the NASDAQ composite, right? Think about this. Last year, in August, we had a double bottom. They bounced off really nicely, and it looked like, okay, this is the move. I asked every guest, and nobody was really feeling it, right? Monster move, but then it gave a lot of it back, but held. Then you can see here in November, took off again.
6,940 reached.
Right
That's
here,
how slowly
wow,
they fucking
this
do
right
it.
here is
Holy
a major,
shit.
major breakout here. It looks absolutely phenomenal.
That
Not
is
just against the
crazy.
S&P 500, but
Oh
also
my God, they do
against
it
the
so
NASDAQ. Look at
goddamn
this
slow.
one. This is a monster
Wow,
move.
look.
It's absolutely on fire. Now, maybe
6,940 reached,
Want a scientific
actually,
reason
but
why
took
it may be
fucking
happening?
forever.
We have 5 years in a row of underperformance
I said
of the Russell against the S&P
6,940 on the
500.
way at
That's only
2:21
happened
p.m.
once
man.
before. It's never
That's
been
crazy.
6 years.
At 2:21
so
p.m.
maybe you can argue that, but there are other things at play
Did
here,
that
right?
market
Now, I tell you
close?
what, though, here's the interesting
Did
thing
that
about
market
yesterday's session. It was
close?
very compelling. You
Oh
would think,
my
okay,
fuck.
it felt lackluster. It was not lackluster. You have more
That
advances
is
than
some
decliners
bullshit. I
on
thought
the
they were going to do it
NASDAQ,
at
on the
223
S&P
right here,
500, 400,
230 though.
So you say, well, golly, how come it felt the
That
way it
is
did?
some
Well,
bullshit.
rotation, right? Yesterday wasn't an indictment
I
against
thought they
the
were going
S&P
to do it right here
500.
at
It was just sort of a
220, 230.
retreat from those high-flying
here.
mega cap names. And let's face it,
Bounced
all
the fuck out of it to the
all the
purple
eyeballs
box
on the
and made a
Mag
different
7, but
cycle,
this is
and
where
then
your
did it
real
later.
damage is happening. Software is getting absolutely annihilated. Now, last year, coming into last year,
Ever since this,
there
though.
was talk that AI would eat their lunch, right? AI is going to eat their lunch. They got hammered.
I feel like this is fucking AI. Like this, NVIDIA has like 50,000 semiconductors just working its ass off to fucking form an intraday cycle.
But much
probably.
of Wall Street is looking for lackluster returns from the Mag 7. Back on that topic, and well, hardly any PE expansion for the entire market. The AI trade we know has broadened out as we speak. And I got to tell you something. This is going to be wrong, right? Now, there are a lot of stocks, by the way, making monster moves associated with AI. You don't know who they are. They're smaller names. I bring them up on the show as often as I can. I also, though, think it's too early to write off the Mag 7 completely. In fact, on that note, the most powerful stocks in the market, we're talking in the history of the stock market, including NVIDIA, from time to time, they still need to be saved. And guess what? Just like the heroes of the Justice League, someone comes through.
NVIDIA dumping into close now. There's 12 minutes left. Just QQQ not moving right now. Barely any movement on QQQ. IWM is the one that went. SPX is the one that's pulling back. QQQ is not pulling back at all. The video went slightly. Palantir not going. Look at QQQ just holding today. Or holding after it did it. So weird. SPY is here, 11 a.m. level. Isn't that weird? Look at the cycle difference between SPY and QQQ right now. IWM was more weaker with SPY into the close. QQQ is just not moving at all. Not impacted that much. Which is weird, because they did trap on NVIDIA. Weird as shit. Oh my god. Look at that QQQ dump now. Look at that QQQ dump now. Look at what the fuck. You saw that candle just go fucking up and down like crazy? Oh my god. Oh my god. Look at the video right now. Look at the video right now. They were hiding this bitch. SPY is bouncing though. IWM is coming in with a bounce. And QQQ is. That's so fucking weird. SPY and IWM bounced on that spike candle 350. NVIDIA and QQQ dipped on that 350. IWM bounce, SPX bounce, NVIDIA down, QQQ down.
Let's bring in Robinhood's Chief Investment Officer, Stephanie Gill. All right, so where did this title come from?
Coach K had a little thing after he retired, and he said when he was going to high school, his mom said to him, "Which bus are you getting on?" And she said, he was like, "What do you mean, Mom?" And She said, "The people you hang out with, are going to really determine how successful you are in your life." And so I said,
"Damn, that's deep, huh? Which bus are you guys getting on, huh? The motherfucking candle traders bus, or would you like to be a smart money deductor bus?" Damn, that's a fucking deep one.
She said, "The people you hang out with,
the fucking people you hang out with,
determine how
that's gonna determine your fucking life, man."
Which calls are we
The
going to
scammer, the motherfucking Furuji scamming ass bitch candle traders that they hang out with is gonna determine your fucking shitty ass fucking candle trading life, is what they're saying, dude.
Put in a sentence
Damn,
that
that's
sort of harkens
crazy.
back to Ernest Hemingway.
That's fucking
The
crazy,
global
huh?
economy is the same, often changing
Hang
in a
out with the
multitude
fucking
of
dog shit
small
candle
ways that
trading
amount to
fucking
bigger
scam ass
shifts.
Furuji fucking
As the saying goes, slowly,
speculators, man.
then all
That's
at once.
crazy.
The Ernest Hemingway quote.
Yeah.
So what exactly does that mean
From the
for
Robinhood
investors
chief
in markets?
investment
I
officer,
just
I
think
love
it
it.
means that sometimes you'll
crazy.
see little things happen. Like I think the markets really you can be successful in it if you can identify patterns early. And I think especially because we're in this environment where some of the
That's
things that may
crazy.
not have been the place to invest over the last even
There's a
decade,
lot of bears this
maybe
weekend,
the
though.
place
They
to
could
start
pull
looking
this
for
back up
breakouts,
maybe
if
on
you will.
Monday, Tuesday,
and
burn
then
off
all of a
all the
sudden you'll get
puts
momentum,
and then do
you'll
shit.
start to be a
Because
Just
they
because
always
the
bubble
gap
up a
down doesn't
little
mean
bit
I
if
do
you're
it
paying
this
attention.
week,
You can
tomorrow.
catch that. We just had a technician on
Next
who
week on
sometimes people use
Tuesday,
technical analysis to kind of
Yeah, I
help
saw- I love
identify that kind of stuff.
Yeah.
Then last year the small caps hinted.
Yeah.
Finally, they've broken out. Let's talk about the
Look at the
macro
video,
backdrop
going
here,
lower into
and
close.
what you see for this year. You think GDP is going to be stronger?
Quite a bit stronger, actually. If you look back, like actually since 1986, the average GDP growth is 2.6%, and since 2000, 2.1%. I'm sort of saying it could be 3.5%. The reason why I say that is because CapEx has been strong the last few years, and there's a lot of incentives for that to continue. And pre-1986, that's what we had. We had a lot of strong CapEx.
Job growth limited. I mean, I take limited, considering that people think it's actually in a worse situation, more precarious than limited.
I mean that I think there'll be maybe some layoffs in certain areas of the market, like technology, where AI starts to grow and potentially replace what's needed right now. But there are other areas, I think, of the market, like industrials, where you could have job growth. And so I'm saying on a net basis, it may actually be limited this year.
Inflation lingers, but recession risk is small.
Yeah. Because we have growth, right? I think you can't have growth and have zero inflation. I think it's very hard to have that combination.
And by the way, I always tell people, sometimes we like when certain things inflate, like our paycheck, the value of our house. Like it's a four-letter word, but it's not always bad depending on how you.
It's not always bad, but I think it's going to be hard to keep down if you have strong inflation, and if we do have recession, then obviously I do think inflation goes with it.
All right, so let's talk about what matters. You put out a lot of work here about what matters for equity markets, and you're saying this is in general. This is sort of a steadfast rule.
Yeah.
Earnings growth expectations, sentiment, and direction of interest rates.
Yeah.
Sentiment, I just had David Bonson, we were talking about the retail investor sentiment is huge, it's soaring.
Yeah.
And the old school, rigid Wall Street folks hate to see retail investors happy. That's a sell signal for them. How do you judge sentiment?
I mean, I do watch the flows of what retail investors are investing in.
So you look more at the flows than the surveys.
I mean, I have a front row seat as to what trends are identifying, and they are savvy. They're the ones that are identifying sometimes the things that just start to bubble up, as we said, and then go from there. And I think it's because sometimes if you're living, I worked for a large institution for a long time, learned a lot
look
there,
at the
but
video right now.
You sometimes can live in a bubble, and if you are somebody who's living their daily life, you actually can know about some certain areas better than people who are studying it in research.
I think this this notion of the dumb investors is antiquated. Wall Street, they can pat themselves on the back, but to your point, the folks who are finding these small names, the quantums of the world, the AI players of the world, the small caps of the world, they're using your platform, and they're not using the ivory tower, folks. But let's talk about this year. Because I know you're looking for 7,500. That's your sort of your base case, and most of it gets back, I guess, to earnings.
It does. I mean, I think earnings expectations.
All right,
I
about
actually have lower expectations
$5,400 on the
than
video.
consensus is.
187.5.
And that's because I trimmed some of the earnings expectations for technology in my outlook, but raised them in other parts of the economy or sectors. But I do actually think valuation.
I have 3.6K left in it.
Looking
I'm
out to
going to hold it.
2027, it's at 19 times, and you can actually have you could have a higher multiple there.
Okay, we got less than a minute to go. And your trading approach this year, we're going to bring the screen up. And so trimming on rallies, adding on dips, loss management. This is easier said than done, right? Because there's an old school of thought that don't sell your winners.
Dip.
Let them run. Let them run.
You could do that. I think the market's just a little more violent sometimes about, this wasn't quite good enough. We're going to take it down 10%. Right. So I say when you're having a really good run, start to trim it a little bit for house money.
Great stuff. Love your outfit. Happy New Year. Thank you for all your sage advice. Keep it coming.
NVIDIA. NVIDIA. God did, man. NVIDIA. I'm only keeping 3.6K here. I'm just gonna leave it. I'm in profit a little bit, so I'm just fucking leaving all of it. Man. NVIDIA. Damn. That's crazy. Keeps fucking popping up. It's at the same level of yesterday's close. That's fucking crazy. 186.5. $1 fucking below my put level. Exactly. That's fucking wild. Damn. 2K on NVIDIA alone. Damn. 2K on NVIDIA alone. Market is closed, folks. Market is closed. GG's. Have a good day. NVIDIA wants to finish somewhere down here. 185.8. Fucking nuts. GG's, man. NVIDIA. Man, I got in NVIDIA puts yesterday here and I didn't fucking take, like, what the fuck? I added here too. Back to full fucking tit NVIDIA short. And then, bruh. Tesla is not the same level, by the way. Tesla's at a whole different level. Oh, that's a lie. Tesla's at the same level. Lol. That's called setup too. Hover above it all fucking day long and then dip into the gray box into close. Godly NVIDIA. Look at NVIDIA pushing crazy low into fucking close. Oh my god. 186.34. What a fucking day. Crazy. I'm swinging 10 contracts on 187.5 into next week now. Crazy. Let's go! Let's go! Alright. See you guys next week. Bye-bye. Let's go!